I came from the mud. There's dirt on my hands. Strong like a tree. There's roots where I stand. Oh, I've been running from the law.
It made me feel that I have a better future, and because I have all bunch of people, like a community to back up me. If I have anything to happen, right, there's someone for me to actually fall back. That's what I feel.
I'm very happy that I have had the opportunity to meet you guys.
Coming here, like we have really experienced things that we have never heard before, learned before, experienced before.
I feel very transformed in terms of my learning journey, not only about just investment portfolio, how to build that or how to grow money, but also more on the holistic view of health, wealth, as well as money.
It helps me really to understand what my goals are, my purpose are, and then give that clarity.
I find this trip is the best trip ever.
I think we found a connection, a group, a sort of a fellowship. It is very warm and nice to be part of.
我发现到很多点，虽然是生活里面很普通的一些点，可是它都启发我，让我重新去看待我这个生命可以怎么样的往前行。
Give me a kind of reborn kind of feeling that actually the old me have gone. So today I'm so-called the version 2.
No regrets. This is really really enriches my life. I really found myself here.
Invest smarter, faster, easier. Welcome back. Thank you for your patience for letting us restart the whole system. I hope the video right now is crystal clear or as clear as it can be. So today we are in the day 2 of our V Summit 2021, gearing up for exponential growth. Ladies and gentlemen, I believe yesterday we have full learning, but before we do a recap, just some administrative instruction, especially for those who are here for the first time, because I know some of you probably have missed out yesterday's session. So some good news for you, ladies and gentlemen. We are going to give you the videos, all right? Because yesterday, the resolution was not clear, right? Yesterday, the resolution, because of the broadband issue, it wasn't as clear as what we wanted it to be. So you are given an access of a 7 days access for everyone to rewatch the whole of VIS. So Joshua and Ken's video are already up in the V Summit 2021 bubble in the VM. Don't worry, you are going to see me soon, okay? They just switched the screen and for me to actually do something. Okay, you are going to see me up in a while, right? So apart from that, okay, ladies and gentlemen, we are also going to give you something else, right? So for those with the all access pass, yeah, something will be given to you. I'll leave the good news to Ken to share with you later on. But before we move over, just let me share some administrative instruction for you, okay? So some administrative instruction. First is this, all right? Remember about the Q&A and the chat. So everybody take note of this. The bar, okay, in the bar, you should be asking questions only in Q&A. Please do not ask questions in the chat. Engage. You can continue to, feedback to us. We are also only going to open up all panelists. Okay, we are only going to open up all panelists, okay, so that the broadband is not affected. Okay, however, you would see some of our moderators who will be communicating with you via the chat to update you the most updated information, and we will reply to all panelists and attendees so that everyone can see it. You will see it under V, maybe Mingli, or V Clara, V Phoebe, V Ihan. So they are from V College. Okay. Yeah. So the next part, just now I mentioned to you regarding the getting the most out of Summit 2021. First is about the chat. The other one is questions in the Q&A, and we will make sure we answer each and every of your question. Now, for those who are first time seeing me, my name is Pauline, and currently I'm the executive director of V College. I was also one of the graduates of V College and the MC for these 2 days as well. Now, just now I mentioned regarding the V Summit 2021 bubble. If you need to refresh your memory where to get Joshua's video or yesterday's session, we will be uploading them. So take your time in this week. We will put it up until the 31st of January. Let me repeat. All the videos will be up for you until the 31st of January. So take your time to watch it. If after today you are busy, you can always watch the videos in the evening after work one by one. 7 working days, 7 days, sorry, 7 days, you have the time to do so. All right. Now, just to repeat a bit how to get the most out of the V Summit session. For best viewing, as usual, if you can go to the settings, click share screen, click full screen and uncheck side by side so that it's bigger. Okay, because for sometimes certain speakers, when they put up the slides, all right, they actually download certain pictures. The font might be a little bit small, okay, when you see it from the screen. So it's best to actually view it on a full screen basis if you can. If you can also check on your resolution under the statistics, you can go over to settings, go over to statistics, and then the video part, and see that you have the best viewing is always at 1280 times 720p. Okay, sometimes it might drop for whatever reason. This is something that we have been resolving yesterday. It seems like it would drop sometimes or it would fluctuate. Okay, so we will resolve as much as we can over here together with a telco and together with a Zoom, all right? So that the resolution is actually up when it's transmitted over at your end, okay? But you know what? Regardless, whether the resolution is clear or not that clear, I don't think it should compromise our learning, because there are many ways we can still continue to learn. I think having a good speaker really to share with us this knowledge is really invaluable. And if you find that certain things are not as clear, watch the video in the bubble over the next few days. Okay, if you can also, what you can do is to actually close off your applications behind, just leave this thing handphone, your V app to be on, because later on we are going to show you this thing called the multi-baggers. Okay, as usual, if anything was to go wrong, we will give you the instruction to send you a new link. Okay, and all this will be up in 15 minutes via your email. All the communications will be sent to you. Okay, so ladies and gentlemen, something also for you to take note of. Some of you have asked for the lunch session. You have signed up for the VIOS Plus. Okay, congratulations. We are going to give you a special session, which Cam said he's sharing the 100 baggers, right? But somehow I didn't manage to get him to share it openly. Okay, which I've been doing my best to pick it up from him, but you know, he said we'll leave it for the lunch session because I need time to do it. Okay, so let's give him time. For those who have the VIOS Plus, yesterday you have signed up, go over to your email. You should be receiving the link. If you have not received the link after signing up for VIOS Plus, just let our moderators know. Go over to your Q&A to let them know, to say, I've signed up for VIOS Plus yesterday, but I've not received the link. Because sometimes it might be in your spam mail or your junk mail, okay, or for whatever reason, it didn't go through. Just let us know. We make sure you have a chance to watch it by 12:30, okay? For our VIOS Plus graduates and IW graduates, no email will be sent to you. You just go over to your bubble in the V app. you will be able to watch it while enjoying your lunch. So this is where you can still have your lunch session. It's like watching a movie, right? You know how good Ken and Melvin is. They are there to share with you bits of how to get your 100 baggers. Okay. So VIOS Plus, those who have registered, even for those who didn't register yesterday, some of you maybe you have registered but have not attended. Also check out your email. You won't be missed. Okay. Yeah. So everyone will get it. Now, if you still want to continue to sign up for the VIOS Plus, this is the QR code. Okay. So on the left is actually for those who are our VIB grads. Okay. For those who are our VIB grads. For those who are actually our VIB International and Special Edition grads, you want the bundle, you can click on the right-hand side of the QR code, okay? So what you can do is you can still do it right now. You won't miss out on the video. Installment plan with 0% interest-free installment plans will be also given. So you can put in a deposit. So what is good about the installment plan is I just calculated, like for example, in Singapore dollars, it is at about less than 100 per month, only $70. So if you think, you see, if you have like $70 a month, you come for the program, I can tell you with the strategies that Derek is going to share with you, definitely you can make at least $100 per month. I mean, that is the most conservative. Many of my VIOS Plus graduates say, only 100 plus, man. You know, that kind of feeling. I believe you all say so, right? Because the kind of returns that we get every month is like many of them in the hundreds and the thousands. Okay, so this is where if you have the right strategies, two things: lower down your risk and increase exponentially, especially in 2021. So for those who have actually joined us for some years, like the MIP grads, can you come and join us for the VIOS Plus? The answer is yes. MIP graduates on the left. Okay, so you just click on the left. VIBFE MIP graduates is on the left. Just screen it. What you can do is you can sign up for the program. But before we do that, yeah, after you have signed up for the program, you can actually click the link first. I want to do something for you, which is a recap. And this is important. Okay, before I bring the next speaker up, I do not want you, to think that everyone just come in and they will just talk. No, this is not the point. We need to do a recap of what we have learned. So everyone, what you can is prepare your writing materials. I'm going to consolidate the learnings of yesterday. I will go slow. Don't worry. This part I think is really important. You come for the summit is because you want to take away something, right? So make sure you really have taken away something. And I'm going to consolidate because every speaker have got their own learnings. Okay, some of you say, yes, I'm waiting. Okay. I see it from the chat. Actually, our chat is still over here. Okay. Yeah. So I'm going to do a mind map. So for those who know how to they do a mind map, okay, I'm just going to draw it out and you just follow me step by step, all right? So this is where the VIS, okay, 2021, as you can see here, VIS 2021, what do we get out of here? All right. So yesterday, what do we start off with? If you realize, we started with Ken and Clive. And the key thing is this time around, we talk about gearing up for exponential growth. When we talk about gearing up for exponential growth, we need to look at what we call the future. So the future, I believe Ken and Clive have given you the next 10 years. The next 10 years, the big trend, the emerging trends, okay, what is upcoming. Today, we'll go through more. But we started off to give you an idea what to look out for. So 3 areas, if you all still remember Clive's segment. If you can type it in the chat. Which are the 3 areas if you can remember? If you can, maybe test yourself. Because if you really remember, you can test and look out for these 3 areas. Okay, so I'm going to start off. Clive actually mentioned, yes, growing population. In different parts of the world, there is this thing called the growing population. All right, so this part, we will start off with this thing called the growing population. Okay, so when we talk about the growing population, of course, the next thing that comes on board is what? Healthcare, right? Yeah. So that's how you link it up to this thing called sorry, I need to change my color. I think this is a little bit blur, okay, in terms of blue color. So I will change the color so it's easier for you to refer. So you can see over here, we talk about this thing called the healthcare. Okay, can you see? Okay, let me see whether it comes out. It doesn't come out, then I'm going to change the color. Don't worry, can be changed one. That's the beautiful thing I love in terms of this. Okay, so let's take a look. Okay, in terms of the healthcare. All right, so you'll see over here, we'll talk about healthcare. Now, so this is where you heard about this Ali Health and JD Health, right? Some of you also heard of me talking about this, Ping An Healthcare and so on. So check out all this healthcare. But we are not just talking about healthcare. Some of you have put down, yes. Apart from that, okay, technology. Okay, so technology is something that we know. We talk about tech stocks, but technology is a big field, frankly speaking. When we talk about technology, it's about what? Digitalization. Okay, so specifically, you see what we call digitalization. A lot of companies, they are going into this thing called digitalization, even in investing, even in insurance. That's why Lemonade does so well. Even in banking, that's why we have C. Anyone know what is C? SEA. You know, Shopee. Yeah. So C has gotten what we call the digibanking. Grab and Singtel has gotten in Singapore the license for the digibanking. So things like that. So we're talking about digitalization, right? And the next thing we take a look in terms of is what we call the consumer behavior. Consumer behavior is always there, okay? Yeah. So when we talk about this thing called the consumer behavior, okay? Yes. Right. So you have to link. I know many of you know this thing called what e-commerce, but it has got to do with this thing called consumer behavior. And our consumer behavior have changed into this thing called e-commerce. Yeah. Now, shopping doesn't end. What they call consumer behavior. It doesn't end. We would still need to consume. So this is what we call consumer behavior. And from there, you see the future about the healthcare digitalization and e-commerce come into place. Okay. Now, with this in mind, later on, today, we are going to focus more in terms of, in this group, how do you get your multi-baggers in future? Okay, now, so keep it there first, because the summit is not over yet, all right? Then I'm going to move on to the next part, which in the afternoon, we talk about this thing in terms of, okay, the emotions, if you realize what Joshua is going through with you. Although he phrased it in some ways, but it's actually this word. We sum up based on this word called emotions, okay? Now, when we talk about emotions, the first thing that we talk about is what? A lot of you like to time the market, right? That's emotions. You want to buy at the right timing. Haven't you heard this? When people lose money, what do they say? I actually didn't time the market correctly. Is it about timing? Actually, it's not. Did you ever see Warren Buffett? Did you ever see Ken Clive? Did you ever see us saying, oh, I went at the wrong time? No. Anytime, actually, we are always investing. So it's not about the timing, it's about the time in the market. Okay, so everybody remember this. So this is the key thing. It's about the time in the market. All right, it's not about the timing. Okay, now after talking about the time in the market, what is the next part that we actually talk about? It's about, you know, when to say goodbye. I'm going to use this word called goodbye. They say, what do you mean by when to say goodbye? Because a lot of times when you say the share price now is too high already, should I sell or not? Should I sell all? So remember the trade desk? Right, that kind of example. So we need to know when to sell. So that's another thing about emotion. When the share price go too high up, what to do? Okay, so we talk about capital recycling. Yes, y'all remember. Capital recycling and so on. Okay, when to sell, right? Now, the other part, we talk about this thing. I'm going to use this word to sum up. Many of you will face this in your investment journey or probably in the past. The word is called mistake. I'm going to use this word to sum it up, okay? What do I mean by mistake? That means, slightly wrong already. I analyzed this, but, you know, the business has gone wrong. Now, did Warren Buffett make mistake? Or does Warren Buffett make mistakes? The answer is yes, okay? Warren Buffett also made mistakes. The latest one was what? The airlines. And he admitted the mistake. He said, I thought it's going to be this, okay, but it didn't turn out that way. So when you know it didn't turn out that way, what must you do? Ladies and gentlemen, right inside your chat, I need you to understand this. This is really, yes, stop or chop or sell. Some of you give a different answer. It's still the same, okay? So you don't need to chop, you chop. All right. I know it's like your heart will feel painful, but this is something you have to understand. Emotions. The other part, okay, the last part of what this Joshua is saying would be on this thing called conviction. Yes. When you have your conviction, you're asking. So now the share price has gone up. Should I size up my position and things like that? So this is where, yeah, the assassin and the hunter, remember? Correct. Okay. So I'm going to use this to sum it up because it will link to the next part, which, okay, you will see these two parts when this Melvin is talking about, it has got to do with these two words. Okay, confirmation bias, right? You remember the biasness? Yes. We talk about this thing called biasness. All right. You will have your own bias. So when you have your own bias, what do you do? Yeah. We have to go through this thing called data, correct or not? Data don't lie. That's why we use the V app to let us have the data. I mean, the sales have dropped, the sales have dropped. Please don't tell me the sales have dropped. They say, no lah, maybe lah, you know, that kind of thing. Okay. So you know data doesn't lie. Results don't lie. Okay, go with the data. So you can use the V app to always watch the data, right? And the other thing that we take a look is this thing. We said we have a community. What's the community for? Devil's advocate. Okay, so that's why when you have doubt, go in the V app and ask. You know, I've bought into this. You know, this is my analysis. However, da 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 da. You know, anyone has any inputs? Go to the community. The community is here to support you. Go to the social bubble, and this is what the V app is for. Okay, I tell you, collective intelligence, there's a lot of wisdom in there. So you analyze in the V bubble, which many of you have done so great, awesome. Continue to do it. You will learn so much from the collective wisdom. Okay, so this is where you also find that if I want to also learn more, Melvin mentioned one thing, mentor. To cut short your learning curve, go find mentors. Okay, your mentor can be anyone whom you're comfortable with. It can be us, it can be somebody else. Okay, so with the right mentor, you know you cut short on your learning curve. Okay, so this is how you can prevent your biasness. Okay, you can't do it yourself, it's impossible. Now, after that, we look into this part, which is really important. A lot of people don't understand when it comes to the next part, which is this Daniel's part. It's actually about one thing, A lot of people love what we call pricing. You thought he's talking about emotions? No, because the emotions come with that pricing. Pricing of the stocks only come two ways. Okay, what are the two ways? Of course, got three ways. The third way is sideway lah. I don't talk about sideway. There are only two ways of pricing. Everyone, type in how would the share price go after you have bought it. There are only two ways you will go. Correct. I tell you, there are no other ways. One, it's either up or down. So, I mean, it's not rocket science, right? After you bought or before you buy, the share price only go up or down. Okay, so this is the part. There are a few things that you need to take note. What if the share price go up? Your emotions will also fluctuate. So when your share price go up, you will say one thing, okay? Cannot buy already. How? Buy? Your question mark, right? Can buy or not when it goes up? Because you will see, I tell you, Facebook, a lot of people are saying, $20. I tell you, in our case studies, for those who have been in the V community for at least 5 years, we have been talking about Facebook since, I don't know when already. That was even before it's $100, I remember. Then we talk about Facebook at $150. Then we talk about Facebook, let's say $170. We talk about Facebook at $200. Then you must say, but Pauline, now it's $200. Hello, now it's $271. See? The share price for good companies always go up. Take a look at the V app. Take a look at the V line. It tells you the trend of it. Okay? So you can see in terms of the blue line, in the V line, it keeps going up higher than the share price. Why? Because these companies create value. Once they create value, the fundamentals is sound, they continue to grow. This is where you can see the share price will go up, right? Okay? And the next part of the share price go up, of course, you will say, sell? You see, this is the two questions, right? I just summarize it. Frankly speaking, when it comes to investing, you just need to know all this permutation. You know how to make a decision. Okay? So share price go up, so to buy or to sell. You see, there's always the decision to be made. So this is where you have to understand when the share price go up after you bought, what kind of decision you make. Of course, the next part I want to address will be down. Okay? Let's say the share price go down. Okay, what you can say that maybe it dropped already lah. Probably I bought it. I bought it. Many of you, Sembcorp Marine, when I or Keppel Corp. Oh my God. Okay, I know. Some of you got it. You asked me this question. Paulina, I bought, it dropped from $3, it dropped to $1. Wow, minimum already. Today, 16 cents. Don't ask me, huh? Really, don't ask me. You take a look at their business model. Then you come and tell me. All right. This is why I said, having the education is really important. And that's why we conduct this summit. You have bought it. I mean, it's a reality, it's a fact. I cannot change it for you that, okay, let's go back to 5 years ago or 3 months ago that you didn't buy. I can't. But you know what you need to do. Let's say, once you bought, the share price drop. Okay, so should you sell? This is where. But many of you will say, but I can wait for the share price to go up. I don't know. All right. So when it's down, you will say, would it go up? That's your question mark. Okay. That's $1 million question. I'm sorry. Okay. So the last part of the down, okay, I'm going to put it over here, is when the share price is cheap. Okay. It cannot go lower already. I don't know, man. Cannot go lower. You ask yourself this question. Right? So this is where when the share price is up, you ask yourself whether to continue to buy. Can you still buy if you have not bought? All right. So once you have bought, do you want to sell it? You also got to ask yourself. Okay. So in VIB, of course, we teach you the systematic step about the MOS, about the different scenarios. That's why you can know how to sell your shares. All right. And in terms of down, you will say, wow, I bought already. Will it go up or not? So you come over, the VIB international graduates and SE graduates will tell you how to manage your portfolio. When do you sell? How do you put it to a tick, to a cross, to a question mark, and what you do about it? These are the step-by-step method, okay? And of course, some of you are thinking, certain stocks drop to the rock bottom, cannot drop anymore. I will tell you, it can one. Okay, don't think a lousy company cannot drop anymore. All right, so you have to make that decision. So with that, when we talk about making a decision, we also need to know what companies to buy, correct? Not? And that brings me to today's session. So now that we know about the emotions that's in place, how do we make the decisions? What are the companies we can buy and so on? Today, there will be lots of case studies for you to walk away. All right. And the first case study, we are not going to share it because the best way to share case study is none other than having the person, the people who are working in the company to share it because they know their company the best. Right? Yeah. You would have heard of Ken sharing this company. Those who are in the VIB International, a Singapore listed company having a multi-bagger. Now, what is a bagger? You may ask me. One bagger would be 100% return. This company, yeah, many of you have guessed it already. Aaron, bingo. It is iFast. Okay, it is very difficult to find a company that can make a multi-bagger more than 100% within like a 1 year, And iFast managed to do it. And many of you who have come for our VIB International, who have taken action during the time when Ken shared the case study in May, in July, in September, you should be laughing your way to the bank right now. Correct or not? Correct? Can you say correct, huh? Okay. Yes, in the chat say correct. Yeah. So we are going to invite iFast to be here from the management perspective. Okay, having Dylan as well as Nick to share with us more about iFast being a fintech company. So we are going to have this thing called the management sharing. A warm welcome for Dylan and Nick.
Good morning, everyone. My name is Dylan, and I'm an investment consultant here at iFast Corporation. Now, before we begin, I'd like to thank you all for taking the time to join us on today's conference. It's a bright and Sunday morning, and what better way for you to start the day with a refreshing experience like this. Now, on to the first start of business. I'll be sharing a little bit more on iFast, and later on, my colleague Nicholas Chong will be sharing a little bit more on the app, which will be of great interest. Okay, so this is just the standard disclaimer slide. All right. And then just to show you onto the next slide over here, all right, that iFast Corporation is a wealth management fintech platform with assets under administration of about 14.45 billion as at 31st December 2020. All right, it was incorporated in the year 2000 in Singapore and listed on the SGX main board in December 2014. Okay, so iFast Corporation is also present in Hong Kong, Malaysia, China, as well as India. through the years, the group has built a well-established fintech ecosystem connecting its product providers and clients. The main business divisions of the group include the business to consumer, also known as the B2C division, the business to business, also known as B2B division, as well as the emerging fintech solutions or business to business to consumer model, B2B to C for that matter. The B2C platform, also known as FSM1, all right, actually caters to investors who prefer to do their own investments online. The new FSM1 multi-products transactional platform is currently available in Singapore, Hong Kong, and Malaysia. Okay, so on to the next slide to show you a little bit more here. Shown here is our AUA growth over the years. The blue region shows the AUA by the business to business B2B business, while the red region actually shows the AUA by our B2C business. So just to give you a little bit of idea on how the business has actually grown. So on to the next slide here, we actually just want to elaborate a little more on them. The B2B platforms actually cater to the specialized needs of more than 450 FA companies, financial institutions, banks, internet companies with over 9,800 wealth advisors. So the group offers access to over 11,000 investment products, including over 7,700 funds from over 270 fund houses, over 1,300 bonds, stocks, and ETFs. This will be in the Singapore, Hong Kong, and US stock exchanges, as well as other services, including online discretionary portfolio management services, research, as well as investment seminars, fintech solutions, and investment administration and transaction services to financial advisory firms. Okay, so this is actually just to also extend onto the line of multinational companies, as well as retail and high net worth individuals in Asia. So the B2B wealth advisory arm of the group, also known as iFAST Global Markets or IGM, consists of a team of in-house wealth advisors that are dedicated to the vision of providing transparent, ethical, and suitable advice to benefit investors by reducing commission bias, which will actually be unknown to some of the consumers. So Nick Cheong, whom we will be hearing more later on, is one such an advisor. Okay, so on to the next slide over here. You can actually see the AUA breakdown of our business over regions and products, where a good bulk of it is actually currently from Singapore in the unit trust space. But of course, with stocks and ETFs actually catching up very rapidly behind, especially much more to following last year's pandemic-driven volatility. Okay, so on to here, I mean, as keen investors, we all like to know what drives the revenue of our business, right? So in a nutshell, our business actually grows in line with the size of our AUA. With higher AUA, we'll also see higher revenue in the form of the various recurring and non-recurring fees, which you can also see tabulated over here. Okay, so some of this actually includes trailer fees, platform fees, rep fees, as well as transaction fees, all right? So to actually put things into perspective, this slide actually shows you how far we've actually come since inception in 2000, the years in which the business expanded overseas, and when we actually launched various products and apps as well. Okay, but perhaps in more recent years, you've begun to hear more about us in the news. We received a couple of awards in 2019, and also clinched the position of the fastest growing SGX member for the second consecutive year in 2020. All right, so shown here, you can see the kind of licenses that we currently hold. Many of you might also have heard or read news that we've actually yet to successfully apply for the digital banking license in Singapore, but let's hope together for this actually happening really soon. Okay. Now, onto this slide, I just want to share with you some of the interesting activities we've conducted last year. You see that even during the pandemic of COVID-19, that couldn't stop us from holding our annual B2B Awards Night. We actually held it at the Singapore Flyer, where about 15 groups of 5 people each, remember in phase 2, were actually seated in individual capsules, and we were actually connected across time and space via Zoom on individual laptops. So I'd say that that kind of event was a good testament to the kind of innovative mindsets that we really pride ourselves in having here at the firm. Okay, so over here, I think I just want to conclude to share that, that's all I have to say today. I hope you've gotten a better understanding of who we are as a firm. And if you'd like to know more, please, visit ifast.com or even ifastcorp.com, or just scan the QR code that you see over here. And before I hand my time over to Nick, I would just like to wish all of you a successful year of profitable investing. And above all else, stay safe and stay healthy. God bless you.
Hi, everyone. Thank you, Dylan, for the introduction. You have just heard about iFast, the latest news about iFast, the fintech company, the fintech investment company in Singapore. Maybe this is a good investment for you, but how are you going to invest this? How are you going to place your investment immediately and not lose this opportunity? You know, sometimes you have this situation where you heard of a good investment idea, you know of an investment idea, but you didn't act on it immediately. Bam, what happened is gone. So I'm going to show you from iFast Global Market the latest software that can help you to solve that problem. And this is about a 24/7 app where you can trade anywhere, anytime you want. And you can trade on stocks, unit trusts, ETF, bonds, and there's something called discretionary portfolio, where you can even use your CPF to buy unit trusts as well. So for the next few minutes, I will show you the capabilities of this app, how you can find good ETFs and stocks and trade anytime you want. And finally, I will go into a demonstration of using this app. And as a small token of appreciation, at the end of this presentation, we have a little surprise for you when you open an account with us. So let's get started. First, I would like to show you an overview of what this app can do. First, as you can see on the screen, right, when you log in, you will be able to see an overview of your account. Sometimes you might hold more than one account with iFast. So the system will show you what you see here, the listing of all different accounts you have. So you can set up your account here and then navigate through different accounts. And in particular, this app is called a DIY app. Why is a DIY app? Because iFast Global Market, like myself, I'm an investment advisor from iFast. So we have financial advisor assisted account and now a DIY account where you can decide as and when you want to trade. So there is a series of different accounts that you can see here. So there is a selection of stocks and ETF, as you can expect, right? As an overview, this is how you see in the system. But no worries, a bit small. We will go into the live demo of the app right after this. So the app can also show you you can also create some watch lists in the app. So in the app, you can create your special unit trust, ETF, stocks, right? All these are possible. And of course, what is important is that this app is not based somewhere, my God, maybe USA or somewhere else other than Singapore. We have a strong support team. We have in fact, it's 24/7 accessible on the app. And if you want to trade Singapore market, we have our dealers just a phone call away. And if you want to trade US market, our dealers are also available for the night market. So if you have any problem with the app, we are just a phone call away. Isn't that great? Right? We are not a virtual space, but we are in Singapore, like me, a real person in Singapore, that we can help you whenever you have a problem. So this is one strong point about our app. It's not just an app, but there are a group of people who are there to help you when you have an issue. Next, let me go into how, to me, that's one of the most interesting part of the app, which is how you select an ETF. Well, as you know, if you buy just one stock, right? It could be, if your portfolio is just made of just one stock, it can be a little bit risky. But what if you have a portfolio where has all the good companies? Then you might say, I might not have so much cash with me. Well, ETF is a solution. You choose one ETF that covers all the favorite companies that you want. In our app, we have a function called selection, ETF selector. Right. We all know that China is now the greatest place, offers a great opportunity in terms of investment opportunities, right? And there are so many China funds, China ETF out there. How do you know which one is the right one for you? Right. In our app, we have created this part just to solve this issue, right? What you see here is the selector. It has different forms of selector. What I was telling you about was the ETF selector, where you can choose from different regions, countries, as well as markets. So as I mentioned just now as an example, if you are choosing like China ETF, which one is the best top performing one? You might be curious or maybe afraid of making mistake, right? Well, we are here to help with the app. Here you can see here a listing of core equity, fixed income, regional equity, country specific equity, tactical play. So based on your selection on what you're looking for. So what I have shown here as an example on the extreme right is a list of core equity based ETF. So core equity means that this list here are all the top performing ETFs that can form your core portfolio, right? Isn't that great that you now have a list for you to choose from instead of choosing from hundreds and thousands of ETF out there? Next, once you have selected a few, right, what you can see here is you are able to select and compare with a click of a button. Now that is such a great, for me, it's just such a great benefit of having this app. Not only you can select it with a click of a button, you can let the system show you the difference in performance between the ETFs or funds that you selected. So on the screen here, you see the charts, right? And you can see the performance. And once you decided on the right ETF for you, you can just go ahead and trade. So after comparing the different ETFs, you just go and trade. And what you will see here too is that there's a bit small right now, but then when I go into the live demo, you'll see it, is that the prices for stocks and ETF is delayed by 15 minutes, and that is shown right at the bottom. So in fact, if you think of the same way, if you think of buying ETF, you might also think in terms of buying unit trust as well. So unit trust, like ETF, has a basket of stocks. So, and with unit trust, there are so many unit trusts as well, and it's sometimes very difficult, even for seasoned investment advisors, to tell you immediately like which one is the better one. We need time. We need to do some research, and research takes time. But now our app can help you to select that very, very quickly, because at the iFast research team, we have a list of curated unit trusts that is there because it's recommended from us, because we have already done some homework in terms of how well the performance and it can give you better returns, basically, right? So if you look at this screen here, it just shows you similar to the ETF selector. You can select based on the industry, the country specific, as well as currency as well. There is a little tick right there. It says IGM recommended funds only. So that's the secret sauce. So you don't have to spend so much time searching for the right funds, because the app will give you a list of them. And when you see on the next adjacent to it, the list like the BlackRock series of funds and Super, the same compare, then decide function. So over here, you see that you can look at the charts in terms of performance, and obviously the blue line is above the green line. So it tells you a little bit about how the performance of the fund in blue versus the fund in green, right? And once you've seen that, next thing to do is trade. All working adults in Singapore, you have your CPF. Now, if you think about it, CPF, perhaps you've been working for a while, everyone has an average of, say, if you haven't used it to buy an apartment or your flat or property, you probably have 200,000 your OA account and say 100,000 your SA account. OA earns you 2.5% per year, and SA earns you 4% per year, non-compounded. So what if you use your CPS as investment, right? It will grow compound because lately there is also a new guideline from CPF. From 1st of October onwards, there is no sales charge of using your CPF to buy unit trusts. So this list of unit trusts that you can buy from using your CPF has no sales charge. That means for you, it's totally cost-free. Isn't that wonderful? But the next question is, how do I select again? And likewise, you use the unit trust selector. And in the unit trust selector, there's this option for you to filter what are the funds that are only meant for CPF. So, bam. And there you go, right? You select the payment format, and then you can choose to use your CPF OA account to pay for this particular fund from Stroider, right? So after saying all that, I will now go into the live demo of the software. So let me begin now by showing you the software. So let me just show the live app. So once you see here, what you see here now is the overview. Now I want to show you exactly what I've been telling you about is the tools here. So let us now look for an ETF. And you see here, there are different types of lists. I will just select one of the ETF here, and I would choose China. And go search. So now the ETF is working hard for you to look for all the China funds. And as you can see, there are so many of them. And I'm going to pick 1, 2, and bam, generate a comparison, right? You can see from here the chart. Wow, there are very different performance. And I would like to now look at the fact sheet. What actually is behind this particular fund? So now we are at the fact sheet page, and then you can see that the performance and also the other factors. And if you are comfortable with that, you can just click trade. And there we go, right? So this is the order pad, and this is how you will see how you can place the order. And you can cash, right? And right, so, and this is my live order, my live account. So I will not try to press a trade for this, but you get the idea. So now let's go back now and simulate a unit trust. How you can use unit trust, how you can use a CPF to buy unit trust using our platform, right? I think that's something very interesting that you all want to find out. And it's, I go to funds, and I go to fund selector as well. And I choose any fund that, well, not just any fund, recommended fund, right? So from as well from China, because I think China is a good location. And let's search, right? And you can see here, it proposed, I forgot, I need to select only CPF approved funds. So I select CPF OA, and bam, let's go. I let the system select all, and based on all the CPF funds you can see that there is Asian fund. Let's take this one, right? And go. And you see the V-shaped recovery that everyone's talking about. And that's where this curve talks about. And well, I will now simulate a trade. Buy funds. That's always the most interesting part. And I confirm this is the fund I want. It's the Asian Growth Fund using my CPF. Now, how do I select cash and CPF? Here is just payment mode. There's a drop down. Here you go. If this fund is CPF approved fund, this will come out. You can select the CPF OA, right? And I put in the amount I want to invest in. And you can see the upfront fee here is 0%, right? And you can also select to choose, you can also select here as a regular savings plan as well. And from here, you hit done, and you can place order. And of course, this is the live system. I've already more than enough of, I have already bought a lot from the CPF already on this fund. So I will not do any trade from here. And I will now show you our last part here, which everyone is very interested in. How do you now buy into iFast? Maybe you have decided that after listening to our discussion that iFast is really a worthwhile investment. Well, it had rallied from 180 to 350 and $5. And perhaps now you decide it's a good time and a good way to invest in iFast. So how do I do that? Simply, I can do quick trade. And from quick trade, it offers you the order pad. And I kick in what is the, okay, now this is the part where I need my keyboard. Now that I've decided to buy iFast, right? iFast, the ticker is none other than AIY. Bam. What do you see? Oh, not any, but AYI. AIY. And you'll see a list. Right, that's the first one, iFast. And it's now trading at $5.13. And I want to buy with cash, day trade. Right. You can also have a good to cancel order, right? So I would like to now see how many units, action buy, limit. So now I've decided to buy 500 units of this, and bam, I will place the order by preview order. And because I'm not going to buy this trade right now, I have already owned quite a number of it. Disclaimer, I've already owned quite a number of the iFast share as well. So yeah, this is basically how it all works. And what I've just shown you are the functionalities of the iFast AGM, the iFast DIY app, and how you can use it to trade on different investment products. Okay, so you've seen the live app. So let's now download the app. So go to your, scan this from the Apple store or the Android store, right? So what is really important here is to note when you're prompted, do you have an advisor? Yes, and key in this code 00113 so that you can benefit from this free trade that we're offering you today. So once you downloaded it, right, please, if you have SingPass, right, the fastest way to open an account immediately is to use the SingPass in the account opening process. So this is where you key in here, and all your personal details will be transported, migrated from SingPass right into the app. And in the next step, they will ask you, do you have a preferred financial advisor? Yes, and here is key in 00113. And we will be in contact with you shortly, right? Or you can call us, join us in the WhatsApp group for digital onboarding and also know how, what other benefits you have on using the app. So the rest of the steps are pretty easy, right? Just follow through it. And some feedback is that, some feedback from user is, why don't I get my account set up immediately? Well, normally it's immediate if you use My SingPass from Singapore, right? If not, then it takes 2 or 3 working days. Important thing is also to note that you must key in your current employment status and details. So once that is set up, the account opening is immediate. The next important thing to note when you open your account is the iFast IGM app is a cash investing account. So you need to fund your account before you can start investing. You can transfer your fund using PayNow or fast transfer using your bank transfer. So in the link where you download the guideline how to set up the account, there's a page on to show you this exactly how you can transfer your fund for the account. So once you set up and you transfer your fund, this is where you see your funds turn up. What you just seen is how you can when you decided on buying any stock or ETF, right? You have this app in your hand. You can run it using your iPad, like what I'm doing now, or you can run it on your handphone, smartphone, anytime, anywhere. Thank you so much for your time. My name is Nick Chong from iFast, and I hope you have have a powerful app in your hand right now. Important thing to remember, stay invested, and I see you soon.
Thank you, Nick. Okay, very impressive. In fact, Nick is our graduate, VIB graduate. I remember when Nick actually attended our training itself, he was very amazed at how this new knowledge can actually empower him to actually invest better itself. But one thing even more amazed is just now during the presentation, I was shocked because when he said you can buy iFast between $3.50 to $5, I was like, what? When did iFast go $5? So, and Pauline went to next to me and just give me a jab and said, iFast right now, the share price is $5. Was like, what? So what happened here is I quickly went to actually VApp take a look. Okay. How many of you want me to analyze iFast right now? Anybody? If you want me to analyze iFast right now, type in yes. Come on. Okay, so I'll do on the spot because do you just realize that you have just went through a company presentation, okay, understand the business model, right? Okay, and I'm very sure, okay, for the public, you are not interacting with us, graduate, VIB graduate, VIB international graduate, VIB full edition graduate, okay. Is it true that we cover iFast, okay, in our training? Yes or no? If you have bought iFast, just type in, okay, yes, right? Okay, or raise our hand. Just raise our hand so they can see you. Just raise our hand. If you have bought iFast and make money, can you raise our hand? Press the button, raise our hand, so that the rest of the group can see you. Okay, so that the rest of the group can see you, right? So now, and I remember when we cover iFast, at it was trading at only about 70 cents, 70 to 80 cents. This is like barely 9 months ago. Yeah, 9 months ago. And let's take a look. And actually on the V app, I'll show you how powerful the V app is. So now we go into iFast, right? Okay, iFast. So let's take a look here. Okay, don't look at the price. So just for the new user, I will show you how powerful this is. First thing is you go into the company info. Okay, so like what just now Nick shared with you, right? We summarize everything, okay, about what the business does onto actually the platform, our platform, the V platform. So I one look, okay, you know, they told you it's a wealth management platform, okay. And next thing here is you'll be wondering, some of you ask the question, hey Ken, how come iFast and company like Lemonade and even 8IH, okay, unrated one, your analysis, I'll tell you why. Because banks, V app do not actually rate banks, insurance, and financial company for a simple reason, because their business model is slightly different. Okay, now why? Because financial, like imagine a bank, right? The bank, when a bank have more cash, okay, do you think it's a good thing? Actually, it's not. It's not a good thing. Why? What's the function of a bank? The bank is supposed to loan out money, right? So from loaning out money, they earn the interest, So therefore, if the bank have a lot of cash, it's not a good thing. So therefore, but a traditional business is different. A traditional business, a normal business, when they have more cash, is good. Understand? So therefore, at the moment, we have to not rate banks and insurance company. But let's take a look at iFast here. Okay, even if we check through, iFast have no major so-called risk area that we need to be concerned about. Okay, except for one part, it's called a receivable management. That one is not an issue at all. Not major issue. If you ask me, not major issue. Okay, so now, but overall, let's take a look and the star chart here. You click one button here, star chart, right? Okay, wow, impressive. You look at the growth rate. Now, the star chart, what do? We took about 1,300 data point. Okay, analyzed over the last all the available financial data that we can get hold of this company, crunch it, the artificial intelligence and the machine able to look at their growth, profitability, health, asset, and dividend. Okay, how healthy are they? So you basically the star chart, you want it to be as big as possible. It's like twinkle, twinkle, little star. You just remember twinkle, twinkle, little star. My children like to sing, right? So now as big as possible. Okay, like a diamond, right? Shine like a diamond. Hear the song? Oh, lao eh. Who sing the song? Never mind. Rihanna. Oh, never mind. Okay, so therefore, okay, next, if you look at the color, right? By the way, I'm using the beta version. So the coming version. So you can see I can track through the iFast usually is range between a gorilla, cheetah, and sometimes rhino. These three animal type. Okay, so now and if you type here, right, you look at cheetah, is green color. Now, what does the color mean? The color means green is healthy lah. Very simple lah. Okay. Yellow, okay. Red sick already. So now, if you happen to see the animal type is cow, is a red cow, don't buy in the company because you get mad cow disease one. By the way, that one is a joke. You find it funny, just like haha. Okay, it's Sunday, so lighten up, okay, okay, yeah. So therefore, cheetah represent companies which achieve high revenue and earning growth. They are fast growers, similar to gorilla, but higher, but with lower profitability. Now, take note, take note. In the VF currently, we have gorilla as one animal type. Okay, we have cheetah that can grow very fast. Gorilla stands for very dominant animal. So these are what we call the category leader. Okay, so now then we have the rhino. Rhino is still big. Later on afternoon, you'll hear a presenter, a speaker. He will share about rhino company. Okay, they like rhino because rhino is big, the skin very tough. Okay, they say that can withstand knock. Okay, yeah, and still can actually move fast. Now, also quite rare, rhino. Okay, so now next, another animal type is actually sloth. Okay, sloth is grow and move very slow. Okay, Singapore, a lot of companies is under sloth, especially those blue chip company. Some of you like to invest blue chip company. Be careful. So another type animal is called cow. So as the name suggests, cow produce what? Okay, actually cow produce milk lah. If you say cash, I don't know what cow you have lah. You have cash cow, is it? Okay. So now, yeah. So and another animal type is elephant. Elephant is an asset type company. So they like to actually gather asset very big. Okay. Now, and each animal itself have their own characteristic. I give example: gorilla, cheetah, rhino, and sloth. They are talking about the growth speed. How fast the company can grow. Some of them grow very fast, like cheetah, keep growing, okay, but not necessarily be profitable because they sacrifice their profitability for growth, for revenue. Or, okay, like sloth, growing very slow, okay. Another type is what we call the dividend play. Dividend play will be yield play, means that it is like cow, okay, and sometimes gorilla also give the dividend, okay. Now, the asset play will be like elephant. They have a lot of asset, okay. So now, therefore, just at one look, right, you can understand the characteristic of this kind of animal, this kind of company. Now, what's the advantage then for a user like you? Okay, simple. From understanding the characteristic of a company, right, then you can decide where does it fall into your portfolio design or management. I give an example. Let's say you are at a stage of your life, right? Okay, you want to have cash flow, so you tend to want to focus more on the cow because of the dividend itself, right? Now, but if you are very young, okay, or you want to grow your money really fast, then you should actually look at company that's cheetah, okay, which I mentor my Infinite Wealth mentee. We focus the cheetah, the elite cheetah. We call it cheetah king, okay, yeah. Why? Because they are not even fast grower, they are hyper growth, okay, hyper growth company. So hyper grower, okay, hyper growth, okay. So now let's come back to here. So therefore, let's take a look, okay. The key ratio lower. Now, the gross margin, one thing we want to see, right? The first thing you see is we have actually summarized everything very nicely for you. Okay, at the green line, it's called the gross margin itself. Now, gross margin, we want to see it as actually very stable. Okay, over time, they managed to maintain at about 28%, 28 to 30%. Now, is it a good gross margin? How do we compare, right? Now, of course, when you are mentored by us personally, different industry, different business model have a different gross margin benchmark. Okay, so you cannot compare, you must compare apple to apple, right? So I give example, right? Technology company usually, okay, technology company, a pure tech company, usually a gross margin can actually stand about 75 to 85%. Okay, that's technology company. So therefore, you know, okay, just from this gross margin, right, you understand what's their comparative advantage. But of course, iFast is in a platform distribution business. If you ask me, the gross margin 28%, okay, quite okay, reasonable in that sense. Okay, now next, we look at the gross profit, net profit margin. We scroll down. The net profit margin itself, okay, scroll down, just enlarge for you. We can see that it actually stabilized at about maybe close to 10%. Okay, is it good? I think it can be better. Okay, so because anything that I feel that have a gross net profit margin at 15%, will have a very strong comparative advantage. Now, we have to be upfront and honest about this. Because when you talk about wealth management platform, right, there are a lot out there. Even the bank provide it. Agree? Okay. So that means that iFast is not the only one. So there are a lot of actually alternative option for the customer or for the target market to choose from. So therefore, you can see it reflect in their gross margin, okay, and the net profit margin. Okay. But if you can find a platform, a business that can have a very high net profit margin and gross margin, meaning to say they have a very strong moat. Now, iFast have a moat there, but the moat to me is not, it's okay, reasonable. Okay, it's reasonable. Now, so return on equity is what we teach our so-called our graduate, okay, our mentee to look at how capable the management is to generate return for the shareholder. So double digit and it's improving, not too bad. Okay, that one is a good sign. Okay, management is capable in that sense. Okay, now let's move on. Next is balance sheet. So balance sheet here, one click, right? We can see, if you see, the short-term cash is a good sign. Okay, I just make sure that okay, you can see the cursor, right? My cursor here. Okay, my cursor. Can see now. Okay, should be able to see lah. Okay, so now, so the short-term cash itself actually improved from $65 million all the way to, okay, no, they still maintain about $50-60 million. Okay, not too bad lah. Okay, did not improve, did not increase a lot, but maintain. Okay, so now total debt is about $23 million. They do have borrowing, but I'm not too concerned because the cash is able to cover the debt. So okay, no problem. Take note of company have a lot of debt. Okay, take note of company a lot of debt. Cannot see. I blow up, you can see now. Okay, blow up, can see. Blow up bigger. Okay, so now, so therefore, let's scroll down. Okay, but what I really like about iFast is this. Is their cash from operation. Here, this line, cash from operation. Okay, cash from operation. Okay. Oh, wait. I know why already. Wait. Because my iPad is not actually link. Hold on. First, let me just link my iPad. Sorry. Stop. Begin. Oh, okay. Stop. Okay. Sorry. Hold on. Yeah, I discovered my iPad is not suddenly not linked. Okay. Cool. Should be linked already. Okay. So let's come back. Okay. So now should be able to see already. Hold on. Just double check. Okay. Can link my iPad. Thank you so much. Good. Now can see already. Good. Okay, let me blow up bigger. So I go back I go back one more step. So the cash, just like I mentioned, right? The cash, the latest cash they have. Look at my cursor, the dot. Okay, the cash latest one is actually about $50 million here. Okay, they have a debt, they have a borrowing of actually $23 million. Am I concerned? No, I'm not concerned. The reason because they got enough cash to cover the debt. Okay, no issue. But what I really like is iFast. Okay, is their cash flow generation. Here, this part. Look, let me blow it smaller first. So now this is the one. Okay, I lose the cursor. Take note, it's called cash from operation. Okay, from 7 million. Now, cash from operation means what? That means it's the actual cash they generate. It's like a body produce our own blood. Blood is important, because we need blood to carry nutrients and oxygen to different part of organs, right? So, and our body have a bone marrow to produce this, right? So it's like a business have ability to produce their own cash to actually to supply the operation of the business. So positive means more cash coming in than more cash going out. So it's a good sign. Okay. So now from 7 million here, they have grown over the years to actually the latest one is $33 million. Now, extremely good sign. Why are they able to do so? Because that's how Nick actually explained already. You know their business model, right? They are in the wealth management business. So all the asset they manage for you, right? There's a recurring fee. There's a fee attached to it. There's a percentage, maybe it's 0.something%, right? The money you put inside there, they also actually have interest. They can actually do a money market out there. So they can earn all this fee, right? And it's recurring. And they onboard more customer into the iFast platform, then they have more and more recurring fee. Okay, it's just like you simple you think about it, right? V app, you subscribe, right? the more VApp user we have, every year you renew, that means we also have more and more cash from operation, right? This kind of hint very, if you're not clear, I don't know what to say really. So I'm using, you understand the business model, okay? So now, so therefore, but yet they only use very low spending to maintain the business called capex. It's about 1 million a year, right? The free cash flow totally is about $32 million. Free cash, So what can they do with this free cash? They can actually choose to give out dividends, and they give out how much dividend? Okay, on an average. On an average, they give out about 50 to 70% of their net profit as dividend. So when your revenue improves, your net profit improves, your free cash flow improves, okay, and you maintain your dividend payout percentage, right? This is the part where a company can give out sustainable dividend. So here you can see over the years, they give out dividend from 0.4 cents, okay, increase all the way to 3.2 cents. So therefore, we see, okay, just let me, we see iFast, look here, those that we shared during last March, here, 80 cents, okay, here, okay, until today, wow, already what, 500% return already, okay, and what's the valuation back then? You see, the interesting part using about VApp, right? You see this, I go to the relative approach. I go based on 5 years because they listed 5 years, okay. So let's look here, let's blow up. I use you can see very clearly, right? Okay, you can see very clearly, when's the best time to buy iFast? The best time to buy iFast is actually during, okay, the COVID period. When the price is 80 cents, right? It's actually the one of the history record lowest valuation. So therefore, that's why we dare to actually cover this company to tell you, hey, back then, hey, look at this company. This company is actually growing, okay, have a recurring revenue, good cash flow, okay, but yet valuation is very low, right? And it proved just within 9 months, 500%. Okay, you will find that this is awesome. Can you type me awesome? So that's why the power of actually VApp, okay, is it can continue to improve to actually help you to laser focus in to investment opportunity. Invest smarter, faster, easier. And this 5% within 9 months, right? What is it called? It's called multi-bagger. So that's why I want to actually highlight again, if you have the right mentorship, right knowledge, right tool, and the right community, it's very hard not for you to make outsized return one. Really very hard. Yeah, really very hard. But so you say, but I miss out iFast how? Okay, never mind. Let's take a look at a second example. Is that okay? How many want to see a second example? You want to see a second example? Say yes. Second example. Second example. Okay. Related to iFast one, Yes, Okay. You guys loving it? Loving it, Good. Can you imagine? Okay. My Infinite Wealth mentee get this on the bi-weekly basis, That's why our mentee, I tell you, my Infinite Wealth mentee really have unfair advantage one. They get this kind of analysis on a bi-weekly basis. Okay? Bi-weekly. To navigate the danger in the market and actually to spot opportunity and when to take action. Now, but let's go for a second example. I'll show you. Second example. Okay. Look at this company. Very interesting one. Look at this company. Not asking you to buy, but look at it. Okay. Hong Kong, there's a company. Okay. This one. A graduate tell me that, highlight to me, say, hey, Ken, there's a company called Futu. Yes. So what do? Futu, Chinese called Futu. Same thing. If you read carefully, right, it's very similar like iFast. They operate mainly for actually Hong Kong, China, and United States. US and China are two biggest market. Now, let's take a look. The star chart, sorry. Okay, fast grower. Okay. Now, let's take a key ratio. I'll show you something. Very, very amazing. Look. You look at the gross margin. Do you see now there's a difference between iFast and them? Their gross margin here is about 83%. About 3-4 times higher than actually, I think about 3 times higher than iFast, correct not? Okay, yeah. So, and the net profit margin, everything is also, okay, way more than iFast. Now, look here, the revenue, you look at the revenue growth, it's quite amazing. When you're able to tap into the China and US market, right? Now, for the last 3, 4, or 5 years, right, from $83 million, the so-called revenue here, you have actually grown. Sorry, I don't use the word grown. It's called quantum leap. You know quantum leap? It's not even running, no. This one is like, I don't know, sprinting or what, okay? 83 million, 291 million, 750 million. You see double, no? Keep doubling. 970, 900, close to 1 billion, and now it's 2.2 billion. Can you type in WOW, no? WOW, thank you. Boy up for you, bigger. Yeah. But what I'm really concerned, but you asked me, right, Ken? So will you invest in this company then? Since this is so good, like compared to iFast, right? Hang on first. Let me show you my thinking process. There's a second thing that I'll look at. The next thing is I'll look at the balance sheet. Recently, they have borrowed $30 billion. Look here, I show you. This is the debt. They have a cash currently is $1 billion. They have total asset about $75 billion. So they borrowed about close to 40 over to 50% of the total asset. Okay, $30 billion from usual $1 billion jump to $30 billion. No, that is a lot of borrowing. Okay, increased by many fold. So therefore, if you ask me, yes, it's a very fast grower, but they grow on the back of a what? They grow on the back of leverage. Type in right now, called leverage. They grow on the back of leverage. Now, this kind of company can invest one. Okay, their business will continue to grow on. One condition, the stock market keep going up. Yeah, because what business are they in? Okay, they are in actually the wealth management platform. And why do we need to borrow so much money? Okay, against their balance sheet is to provide the margin financing for the client. That means let's say you buy share, right? Okay, you trade share, you haven't settled yet, but never mind, I settle for you first. Therefore, I charge you a percentage, a margin, right? But I need to actually have cash on my balance sheet, what? Okay, to settle for you first. So that's why they do what we call arbitrage. Understand? That's why they blow up their debt. This is the way I see it, how I understand it. I might be wrong. Okay, I'm still finding more information. But if you ask me, this business, if I want to invest for very fast grower, I don't put a lot of money, I put a bit, because you know why? Because if I put a lot, at night I cannot sleep. Just in case the market crash, right? The client cannot pay up. Okay, they got bad debt. Then they got so much borrowing. Then how? Cry not. So this is all what I'll teach all my Infinite Wealth mentee to look out for. Right? But the last part, look at actually their cash flow generation is this. Okay. What really attract the market is because they really generate a lot of cash. Look, their cash itself, they actually jump quite significantly with the cash flow itself. Okay. So now, do I still have time to go through one more case study with them? Y'all want y'all want let them know lah. Y'all want huh? Yes yes really you really So okay okay, good. So the my team say okay, because no time they'll cut me off one. Okay yes, okay, can. Third one, give you a third choice good so far good, right? Imagine, okay, if you are Infinite Wealth mentee, wow, you get this on bi-weekly, okay. The third company is this company. This is a company also very similar like iFast. Okay, this company let's take a look. You read. It operate mainly in Australia itself. Also provide fund management, okay, and a platform, the information platform for financial planning, for financial planner. Okay, all this. So now let's take a look first. Okay, let's go to the risk rating. Okay, so now any major concern? I don't see any major concern. Okay, especially the critical one, don't have. So relatively okay. Now, then next, let's take a look at they are gorilla. They are not cheetah. Look, this one different. See not? So I show you two cheetah. I show you one gorilla, right? In the same business. Okay, not bad, right? Clap, 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 clap. Clap. Thank you. Okay. So now, what's the previous business? I see. Please. Okay, go in. So now let's take a look. Okay, at their key ratio, their number. Look. Look at the gross margin. Gross margin at 45%. More than iFast, but of course lower than Futu. Correct not? Net profit margin double digit. Okay. ROE is healthy. Did they grow their revenue? Okay. Not as fast as actually Futu lah, but very comparable to actually in their own market, smaller market. So their growth is not as fast. Okay. So that's why I say you must see the balance different, right? So now let's take a look at that balance sheet. Balance sheet itself, they have about 13 to close to $40 million cash. They have about $7 million debt. but most of it, I think can cover one, no issue. The debt is no issue one, okay, can cover one. Now, next is this, we look at the cash flow. Cash flow, they managed to generate about 5 million over the years here, all the way to about 11 or 12 million. They did increase, right? Also have very high free cash flow. And because of that, they can give up consistent dividend about 68%, close to 70% of their net profit as dividend. So therefore, the dividend over the years has increased from 5 cents all the way now to actually about 23 cents. So if we look, right, okay, we click here, this company, we click, okay, we look at the MOS, margin of safety, okay, based on actually a 5-year track record. Okay, blow it up a bit. And here I use a lock price, to follow it. Okay, as compared to the previous two company, right? This company valuation, okay, yes, it's still overvalued, but not as high as the two company. So at least now we got comparison. So just now I show you iFast, Futu, and this company called FID. Okay, so I hope you have benefited. But let's take a look what's the return of this company over the years. Just 5 years alone. Oh, not bad, $2, and today is about $6, about 300% also iFast 5%. So okay, I will pass it to the next speaker. Okay, see you.
Thank you, Ken. Our next speaker will be sharing with you the next case study. I understand many of you are asking us how to buy Futu, how to buy Fiducian, how to buy into iFast. All these good companies. Later on, we will share with you regarding the brokerages, okay? So our next speaker, Mr. Eric Ong, is going to share with you the next case study, and he is going to share with you how to exponentially grow your wealth with this case study of automation workflow. Eric, please.
Hi, everyone. Thank you, Pauline, for the kind introduction. I would also like to take this opportunity to send my gratitude towards the V Submit team. Don't you agree that they have done an amazing job just to make sure everything's smooth and silky? And also, I've learned a lot from the other speakers like Ken, Clive, Joshua, Daniel. They're sharing a lot of nuggets. All right. So this is the events that I look forward the most, and I have to applaud each and every one of you for staying this through day. All right. Before I start my topic for today, I'd like to do some simple introduction about myself. My name is Eric. I'm a value investor, speaker, and trainer at V College. Before I start as a trainer in V College, I'm a broker as well. With my experience in my brokerage industry, I have opportunity to share my view in Channel 8 morning news portion, whereby I share market updates and commentaries. And last 2 years itself, I finally, after 11 years, I passed my CFA level 3 and achieved my CFA title last year, right? So let's go into the topic of the day. What is the company that I like to share with you today? Some of you may have using their product or services unknowingly, all right? And some of you maybe couldn't live without it. So what problem do they solve? Let's watch this video and you'll understand what they do.
ServiceNow makes the world of work better for people, transforming old manual ways of working into modern digital workflows, so employees and customers get what they need when they need it. Fast, simple, easy, creating great experiences and unlocking productivity for employees and the enterprise. ServiceNow simplifies the complexity of work on a single enterprise cloud platform, the Now Platform, the intelligent and intuitive cloud platform for work. Native platform intelligence, so you can predict, prioritize, and proactively manage the work that matters most. Intuitive experiences, so you can work in ways that work best for you. A digital workflow engine, so work happens smoothly across siloed systems and departments. And a product portfolio that delivers the IT, employee, and customer workflows that matter through enterprise solutions that help drive every part of your digital transformation, creating the great experiences you want and unlocking the productivity you need, making work work better. ServiceNow works for you.
Oh, yes, everyone. This company is now ServiceNow. Everyone just type in now, N-O-W. All right, everyone just type in N-O-W. Okay, yep. So this company has incorporated since 2003 and they listed in US market in June 2012. Right now, they are 100 billion market cap with 12,500 employees. Okay, so let's look at their business model. What do they do? Okay, so they believe in this quote whereby behind every great experience is a great workflow. So what do they mean by them? So what they do is they digitalize and enable your business workflow across business, department, system, and processes. By that, they can create or enable greater experience for employees, which is the internal client, and also customer, which is the external client. So what basically they are doing is make the world of work better for people. For me, it's quite hard to understand. So how I understand this is simply make life easier. Don't you agree? If you agree, just type in a yes. Make life easier. So how they make life easier? All right. So before we go into how they make life easier, let's look at who have they made their who's the life they have made easier. All right. So look at this list right here. Do you see that their customer base is right now 6,200 global enterprise customers? 6,200. And 80% of Fortune 500 companies are their customer. Hey, is this percentage high? 80% of Fortune 500. If it's very high, just type in the high. Wow, 80% of Fortune 500 are their customer, right? And you can see that 10 out of 10 IT companies are their customer, and they are working in IT sectors, all right? Okay, so this is a very, very impressive percentage right here. Now, let's look at what do they do. So they focus on this thing and they start from this area, which is they digitalize and enable this IT workflow. So what is the workflow that they have enabled, which is ITSM, IT Service Management, IT Operation Management, and IT Asset Management. Okay, so this is the part whereby they started off with. With the starting point, they branch out to HR, right? So for example, why this is a natural branch out? For example, let's say you are looking to buy a laptop or renew a laptop, or you look for a new laptop whereby the old one couldn't serve you anymore. So you need to go to HR. After you go to HR, they need to buy from IT. After they buy from IT, they need for you to input your details, input your login whatsoever. Hey, don't you think these two processes should be linked together? Yeah, that's why they created employee workflow. And after which, hey, after serving your internal client, do you think that this same process can duplicate to serve external client? Do you think, hey, this can be done? Right? If you think this can be done, just type in yes. This is their natural process whereby, hey, after internal, they go external. All right. And with App Engine, whereby you can create more workflow, which is your automate more workflow. And in the end, right now, they are focusing on this Now platform by integrating whatever they have together with third party. I'll go more into this in the later slides. Okay. So for myself, if you let me to look at this simple chart, I don't know what they do, or all is just word. I cannot imagine. I cannot know what are they doing. All right. So that's why I take one step further to find out, hey, how do their platform look like? Okay. So this is how their platform look like. All right. Anyone like me, I would like to more visualize image one. Just type in a me. Okay. I'm the kind of person. So this is what the IT team are doing or looking at every day. They're looking at their tickets, looking at who they are serving, and looking at their critical level. All right. So on the other end, who they are serving their internal client, which is the people outside IT team. All right. So how they look for IT personnel? Normally, in your company, how do you look for your IT personnel? Which means you have issue. How do you look for them? You email, right? You call them, right? Sometimes you email them, ding dong, you don't know what is the status, right? Okay. So this IT service management is here to serve you. All right. Anyone, if you look for IT personnel, it's like you call them or email them, you feel very troublesome one, just type in the me. Okay. So right now, with this platform, you can just go to this site. You just go for a self-help guide first. You just look for whether is there any self-help guide you can serve yourself. If cannot, you start to input your tickets. Like for example, you need to buy stuff, you just put your order tickets. If you have issue, you just send in your inquiry. All right. So with that, in a single system, chat system, you can get your problem solved. Let's say the problem is not solved, all right? What you can do, let's say your laptop, you really cannot solve it, don't know why. Like myself, sometimes I really IT noob one, I cannot solve my problem. Then I can arrange a time with the IT team, all right? I can arrange a time, booking, whereby I don't need to rush to the IT office and then, wow, there's 10 people queuing. I'm wasting my time going to it. Why not I arrange a time first, okay? So with that, the IT personnel can solve your problem more effectively and they can track their work as well. Isn't it amazing? So for those who are in IT team, you know that this is a savior. Okay. Other than that, there's IT ops. So IT ops are other than these physical products, they need to manage Wi-Fi, cloud service, whatever. There's a lot of things they need to manage, and then they need to manage the budget as well. Okay. So let me share with you a conversation with my colleague. His name is called Rizal. He's a very amazing guy. In his previous company, he shared with me, wow, I didn't know this company listed. And then this company, this product in our company is a lifesaver for their team. And then, why you say so? In his previous company, there's 3,000 manpower. Everyone just tell me 3,000 manpower. And then they only have 10 IT personnel to serve these 300 people. Means every IT personnel have to support 300 people. Hey, this ratio is it's a lot. Okay, without this ITSM, ITM, ITOM alone, wow, they are grabbing their hair. They don't know when their customer or their internal client come in. They don't know what is their status. They need to rely on email. Isn't it a headache? If you think so, just type in a yes. If you don't think so, you definitely not work in IT department before. Okay. So other than the two workflows that I've shared with you, there's a lot more workflow they can solve. All right. Like for example, inventory tracking, recruiting requests, all of these things they can be done in ServiceNow. And one of these very, very crucial workflow that they are able to do take a very, very important role last year. I don't know whether your company have this thing called BCP plan, Business Continuity Plan. If you had that, just type in BCP, all right? When COVID struck, we have to work from home. Everyone, our workflow, our devices, everything, IT department have to take care, right? Without this ServiceNow, our transition would be very difficult, especially for the Fortune 500 companies. They have thousands of people, right? How they can serve them? ServiceNow. Okay, so throughout the time we use desktop right now we use laptop right now, get iPad and iPhone. Do you see that there's a transition of our tools? If you see that, just type in a 1. Okay, so with this transition, obviously they need to build their software on the app as well, on the iPad and iPhone. Okay, so they have built on their native mobile interface last few years, and then right now, what this means is IT personnel, you cannot say you couldn't work already. And in fact, you have to work 24/7. All right. Okay. So this is how they can build all the stuff, transition, and move along with the technology advancement. Okay. So this is the video that I will show to you how this Now platform can help the business further. All right, everyone, just watch this video.
Integrating ServiceNow with anything. What if this was fast and easy with clicks, not code? Integration Hub removes complexity and makes integration and automation easy, natively on the Now platform. Connect faster and deeper with ServiceNow than alternative solutions using run-ready connectors called Integration Hub spokes. Easily create end-to-end digital workflows that break down departmental silos so that work flows smoothly across the enterprise and wherever your teams collaborate. Connect IT, employee, customer, and creator workflows to anything with no code. All of the API heavy lifting is done for you, so more people can build digital workflows to automate any process. ServiceNow publishes new spokes monthly in the store, and IT can create custom spokes that are reusable by anyone. From integrating with collaboration tools to DevOps to productivity to identity and access management to systems of record and cloud automation, Integration Hub makes integration and automation easy. Learn more at servicenow.com.
Everyone, this is the holy grail of integrating all different software in a single platform. All right. So I don't know whether or not your company have you like Salesforce, Adobe, SAP. Imagine all these different platforms. They are in silos. How you integrate all the data together? Right now can solve the issue, which is NOW on NOW. All right. So with that itself, don't you think the client will stick to them even more? If you think so, to just type in a yes. Hey, wow, once I have this, wow, I don't want to go anywhere already. Okay, all my team member can work together in a single platform. Very, very amazing. Okay, so one of the key thing about this type of companies they are very aggressive in acquiring customer, which is a land strategy. What is land strategy means they put in a lot of effort, resources to capture or to grab more customers. So you look at the growth of their customer. Every year, their customer grow by at least 20%. They almost doubled or even doubled their customer number from 2014 to 2018, from 2,300 to 5,400. This number is a very, very huge advancement, 20% every year. So after they capture their customer, what would they do? They expand the account. So this is a land and expand strategy. They capture their customer, expand an account. Everyone just type in land and expand. Just type in land and expand, right? So this is a strategy that a lot of SaaS company has been adopting. Why? They capture the customer. When the customer they capture by maybe one product, IT workflow. After they are used to IT workflow, they say, hey, why not use employee workflow as well? Why not use customer workflow as well? This is the time whereby they grow their customer account, right? So how have they been growing? So they have been growing like almost 20 plus to 30% every single year, from 610 customer, which their size, customer account size is from 1 million and above, to 1,000 customer, almost doubled within 2 years itself. And their target is to double this again to 2,000, all right? To 2,000 customer account to 1 million. Hey, do you think this is a very, very high target? And it's not to say high target, it's a very, very promising target. If you think so too, just type in a yes. Means if they could grow 2,000, double again, wow. Imagine their revenue size, okay? So would they able to do so? Let's look at this chart itself. Don't worry about the words below, okay? Look at the chart itself. The chart itself shows us right now, there's 40% of work are structured. Means it can be automized. If it can be automized, you plug into the workflow, then the machine do the work for us. But right now, there's 60% of work are still unstructured. And this 60% of work 60% of them is like admin work one. Okay? By solving that admin work, it can save us $600 billion. Everyone just type in WOW. If all your workflow can be structured and automated, isn't our life is easier? So ServiceNow is here to serve this problem. Okay? And every time when we look at all these software company, we would like to understand, what is their total addressable market? How much is the size they can grow? So right now in 2018, in the 3 different segments that they are looking at, there's a total addressable market of 110 billion. And this number will grow to 165 billion in 2023, right? Anyone, if you look at this, do you think this growth is quite impressive, like 8%, faster than the market growth? If you think so, just type in yes. Okay, like 8%. But the thing is this, ServiceNow, their revenue is just 5 billion. Do you think that they have a lot of opportunity to grow? If you think so too, just type in grow. All right, grow. They have opportunity to grow right here. So right now, let's look at their revenue by geographical, right? So their revenue by geographical at current, the green color is North America. I would say US. The is it tortoise? I don't know. The one in the middle, 25%. 25% is European. 9% is APAC. And you can see that actually they are just focusing in tier 1 market, US, UK, Australia, and Japan. So they have yet to tap into tier 2 market, right? So there's long runway to go. Everyone just type in runway. There's long runway to grow. Instead expanding into other countries, right? A lot of tech company, they need to innovate, right? Everyone just type in this word called innovate. Innovate. If the company stop innovate, it's the time that companies say bye-bye. All right. So how they get their inspiration to innovate?
So they get this inspiration from this book called Zone to Win by Geoffrey Moore. So when you look at this, I say, wow, really, this is what's happening previously and moving forward. When we start having this kind of digitization or technologies, a lot of time, like computers, a lot of time we just save records, we static record, customer name, their birth date, their address, static record. And with more and more mobile so-called interface coming out with engagement internet, all right? So we can capture a lot of engagement record. So with this all dynamic record and a static record, we can go into this system of intelligence whereby we can analyze the data, analyze how each group of customer respond, right? And moving forward, 2020 moving forward, what we are looking at is the AI technology, whereby other than analyzing the data, can we predict their response? Everyone, if you are thinking this thing is unachievable, still far ahead, everyone, this is happening already. Everyone just type in AI. Everyone just type in AI. The predictive ability has been growing by all the computing power that we are having right now. Yeah, this is the area that every company is looking into, and ServiceNow is in it. Okay, so they are not just talk. Is they need to put in resources, right? So you look at their resources putting in the amount of people they have hired. So you can see that there's 2.5 times engineers that have grown in their R&D sectors. There's 6 times of user experience designer. This is very crucial. If a software without UX, the UX, user experience, do you want to use it? If you don't want, just type in no. User experience exceptionally important. Okay. And third is the product manager. Every single product, they need manager to manage their growth so that all this so-called advancement is aligned one. Yeah. So what they are targeting at is at least 2 release every single year. Have they been achieving that? Yes. Look at this graph below. You can see that Q3 19, Q1 20, Q3 20, they have achieving that every single half annually. And they will be doing another one in Q-back in Q1 March 2021. I am very excited to see their next launch. Okay. So other than growing internally, they also grow by acquisition. All right. So they have been buying other companies, but these are the few companies they have so-called acquired. And to be frank, their acquisition strategy are quite conservative one. The amount they use to acquire company is very, very slow. But this one last year, 2020, they have been very, very active in acquiring companies that have AI capabilities. So they have acquired 4 companies: Loom System, Passage AI, Sugar, and Element AI. So you can see that they are not just talk. It's really execution one. Everyone just type in this word called execution. Execution. Not fluffy talk, it's execution. All right, let's look at their competitive strength. All right, so this competitive strength is gathered by the company called Gartner. Okay, so Gartner have put them into a leading position in ITSM Magic Quadrant. Means they are the best. All right, so they have 4 times market share compared to their closest competitor. They have strong partner ecosystem whereby their partners like Deloitte, Accenture, all these consulting firms are promoting their software to their end client. And the key thing is right here. They are developing their own in-house AI expertise. All right, a lot of their peers they are just using other AI's expertise. They are not developing themselves. The ServiceNow are doing themselves, right? But the competition is there for these sectors. The competition there's before ServiceNow capture the market share. Actually, this market is very, very fragmented until ServiceNow appear. All right, ServiceNow right now capturing more than 50% market share in ITSM area. Okay, and there are competitors like BMC, IBM, Atlassian, Ivanti. So these are all their competitors. Okay, so every company have their own risk. Everyone just type in this word called risk. Every company has their own risk. So what are their risks? The risk is after they land their customer, means they have captured or grabbed their market. The customer doesn't expand more, means they wasted their acquisition cost. All right. And the worst thing is after they acquire the customer doesn't renew. Everyone just type this word, oh no. Oh no. This is a no for all the sales company because they spend $10 to acquire a customer and then the customer only pay $2. They are still losing money, right? Okay, so this is a no for SaaS company, and it may be due to their inflexible pricing model because they have a lot of modules. The pricing model may not as flexible for compared to the new peers in the market. Okay, so let's look at their business management. This business management, I would like to drive you to this single person. And this single person called Bill McDermott. Everyone just type in this word called just type in Bill, B-I-L-L. All right, Bill McDermott. All right. So if you are interested in this person, I will recommend you to read this book, Winner's Dream. All right. So he have written this book from his past experience, how he grew up the ladder. All right. How he become the top-notch manager in the so-called well-known manager in the world, throughout the world. Okay. So before he joined ServiceNow, which is he just joined like in 2019, his track record is not as long in ServiceNow, but his track record is long in SAP. And what makes him so special is this: SAP is a European company. All the while, the SAP company, they never hire any so-called CEO outside Europe country. And Bill McDermott is the first non-European CEO in the company. Do you think that is impressive? Means although there's a cultural difference, he still managed to so-called become the CEO of the company. If you think this is impressive, just type in yes. It's not easy to go into cross-cultural company and still be the CEO of the company. Yeah. All right. So this is Bill McDermott. Okay. And let's understand his thinking when he shared this company outwards. So he said, the future belongs to the companies that can inspire employees. Employees are keywords, and drive fierce customer loyalty. Means he looked into their customer loyalty. And also, simply closing a sales isn't our growth. Okay, wow, what is it? We want to create a partnership. Means he value the partner as well. All right. So do you think this is a very crucial so-called thinking as a CEO, as a top-notch CEO? If you think so too, just type in a yes. Right. Very crucial. Means he want to mix their employee, their customer, and also their partner work together and get win-win situation. Very, very important. And this resulted in high approval rating in the Glassdoor. So you can see 99%. 99% approval. Everyone just type in, wow, 99% approval. This is one of the highest approval rating that I can find throughout the US company. Very, very high. Okay. And you cannot just hire this management or hire these top-notch people without paying them, right? Okay. How much are ServiceNow shareholder paying them? Okay. I blocked this for you. So you can see that his base salary is 1 million. His base salary is 1 million. And the target of 18.5 million means 17.5 million of his salary is performance-based. Performance-based. What does it mean? Means if he doesn't perform, if he doesn't work hard, he cannot get that. Do you think that he will work hard or work extremely hard to get the performance bonus? If you think so, just step in yes. Okay. In other words, if he work hard, he make money for the company, shareholder also make money. Means shareholder also gain. All right. If you like that alignment, just type in a yes. This is the shareholder and management alignment. Very, very crucial. Now, let's look at their business number. Okay. After understanding the business model, after understanding who is a steward of a business, let's look at the number. I'll share with you a few very critical SaaS metrics. The first one, renewal rates. All right. So you can see that how much is their renewal rate? I know it's a bit small right here. The renewal rate, the lowest one is at 97%. Everyone just type in 90. Okay. Just type in 90. Okay. Yeah. So it's 97% above, close to 100%. Very, very, very high. So what does it mean? There's only a 1 or 2 customer live among 100 customers. This is crazy, crazy number. And let's look at the lower line. Dollar-based net expansion rate of 130%. What does it mean? So this means that this customer that spent $1 last year, this year he spent $1.30. Means they buy more or less. Everyone, if it's more, just type in the more. Means customers are buying more products. Come on, they are spending more. Means we are making more as a ServiceNow shareholders. Okay. So other than looking at the company revenue, what we like to also observe is this thing called remaining performance obligation. What does this mean? Means you have paid something, but you haven't received the so-called the service yet. So it's like unearned revenue kind of thing. So you can see that these numbers has been growing. This is the thing that we need to observe as a shareholder. Everyone, just type in RPO. This is number have to grow every single year. Means the company not just getting client, also expanding their customer account. So how we can understand further is by this customer cohort growth. You see every single cohort, the growth is like at least 60%. 60 to 120%. Means their customer are spending, regardless in which year they're coming in, they are growing. Everyone just type in OMG. Oh my God, this is the oh my God figure. Oh my God. Well, all right. After looking at this, let's look at a few key metrics and figures that we can find in the VApp. Everyone, just let's look into VApp. Okay, all right. So let's search now. Okay, once you search now, you land into this page. Everyone, let's look at the V analysis portion. The V risk rating. So now they are having 2-star, which is quite moderate. Okay, not so bad. It's a 2-star rating in terms of their risk. Let's look at their star chart. All right. So right now they are a gorilla. A gorilla means they are growing very fast. They are making profitability. Right. So before that, they are a cheetah. All right. They are not so profitable, but right now they have turned into profitable business. All right. Hey, how profitable they are? Let's look at the company info, which is the key ratios. All right. So the gross profit margin of the company is as high or near 80%. Everyone just type in 80. A company, a SaaS company or software company can reach 80%. This is a very, very good number. And their net profit is positive right now. They are positive, making money, in short, making money. Let's look at their cash flow ratio. Do you see that their cash flow, the chart itself is going up one? If you see that, just type in this word call up. Means they have collecting a lot more cash flow into the company. Means your pocket will become thicker and thicker. This is a very, very promising numbers. Next, okay, let's look at their balance sheet ratio then. Okay, so yes, their debt to equity is increasing, but they have quite a good cash and current ratios, I would say. Okay, lastly, let's look at the valuation, MOS, right? So if you look at their relative valuation, you log pricing, okay? So you can see that the intrinsic value, which is the fair value, is roughly 350, all right, 350, and with a price of 540. And with the one standard deviation higher, which is the higher end, it should be around 420, okay? So this company is at a so-called overvalued situation. But let me summarize. This company is a very, very good company whereby they have what? They have high switching costs. Means the customer will say stay with them one. If you don't understand that, ask any IT personnel that using ServiceNow. All right, they have a high switching cost. Everyone just type in high switching cost. The customer will stay with them, and they have proved to us that they have high renewal rate, they have high dollar-based net expense rate, right? And they are growing massively to other countries. They are growing their portfolio. The market is growing. This is the runway growth, right? So with that, although the company is overvalued, could we put this company into our watch list? If you think so too, just type in a yes, right? And if you know how to use other tool to take advantage, whereby right now it's overvalued, you can take advantage whereby get some cash flow beforehand, like what Pauline, Ken, Derek have mentioned. This might be a company that you can do something about it, all right? Okay, so this is the conclusion of ServiceNow. How many of you like this company? If you like this company, just type in a 1. Just type in a 1. All right. So this is the company, one of the top 5 companies that is in my watch list. Okay. All right. How many of you learned something so far? If you learned something so far, just type in a yeah. Just type in yeah. All right. Okay. Thanks everyone for typing yeah. Okay. Do you like to learn more stuff? If you like to learn more stuff, just type in a 1. Just type in a 1. Learn more stuff. All right. Okay. So we have receiving a lot of questions. Okay. We are receiving a lot of questions in our V community, our V community. All right. A lot of you have said, hey, can you help me on a first step-by-step, the step-by-step guide on how to get into investment? Okay, how to start your investment. Okay, so receiving any of you have this query, just type in to me. Hey, can you help me how to first start like your investment account how to find out how to build portfolio kind of thing through the broker itself. Okay, which to look for. Okay, and then the next question is, after you ask about brokerage account, you say, hey, is there any so-called preferential rate? Is there any special stuff like you can recommend me to open? Okay, so next is about, hey, right now I have used used my cash already. Can I activate my CPF? How do I activate my CPF and invest using my CPF account? All right. How many of this kind of question? If you're this kind of question, just type in the two. All right. We have been receiving this in our VIET community, and then we have to address it one by one. So we discuss with our team. Can we organize something to address this thing, like helping you your first step to start your investment, or how to like claim bonus, like opening a brokerage account, or with CPF, how to use your CPF invest efficiently. All right, I see a lot of tool coming up. All right, okay. So we have decided that why not we organize a session for us to share with you, like how to open TD lah, Saxo, or even iFast account, how we segregate or how we strategize it. Okay. So we have arranged these two sessions on 30th Jan 2 to 5 p.m. and 6th Feb 2 to 5 p.m. Everyone, if you like to attend that, just type in a me. Type in a me. Okay. And if there isn't people typing me, I will not show you how to claim this class, how to join this class. All right. Okay. I see a lot of me coming up. Great. All right. So everyone, just take up your phone, open up your QR scanner, or open up your camera and scan this QR code. Everyone, just scan this QR. So you can see there's a QR code on my slide or it's QR code on the screen itself. Just scan any one of this, scan on this, and register either one of the session, 30th Jan or 6th Feb. All right, everyone just do it now. Hey, this one is free one, so no need to worry. No need to worry. We will do it we are doing this for free. We are doing this for free. So to help you to get your first step, to help you to open your brokerage account, to help you to start your CPF investment. All right. So this is a QR code. If you couldn't scan a QR code, there will be a link by the room facilitator. They will posting up the link. So you just click on the link and register this. All right. A simple 4 different question. Just put in your details and then register for the session. All right. Okay. So these are the additional sessions that we'd like to share with you for free to kickstart your 2021. All right. So this is the end of my presentation. My name is Eric. I'll see you in our V coaching moving forward. Thank you very much. Bye-bye.
Okay, thank you, Eric. Yes, we've got question to ask. Is this a recorded version? No, this is live. But is Eric's session recorded? The answer is yes. Okay. So why is Eric's session has to be recorded? Because of our law. How has it got to do with the law? Because Singapore government has actually restricted the number of people in one area. So our studio can only cater to that many people, and certain sessions must be live. Like for example, in terms of our case studies, our panel discussion, our Q&A. That's why Eric's session has to be recorded, because if he comes in, we will break the law and exceed the quota. Okay, so that is why certain sessions has to be recorded. Of course, some of our overseas one, okay, we do have a recorded version, and some of the sessions are actually live. More importantly, is because we do not know sometimes how the Wi-Fi and the network would work. So every speaker, we do have a recording on standby. When will we activate? Sometimes it's live recorded. I also will know. Okay, or as much as we can, we will do live for the speakers unless certain things actually pop up. Okay, then we have to activate. So this is the things that we will make sure the V Summit will go on. Okay, right. So this is where you can also be assured that, after today, we're not going to say bye-bye to you, because there are many people. In fact, some of you may be our graduates, but I know one thing: you might have your akong, your ama, your father, your mother, your children with you right now watching us as well. And they want to know how to kickstart the investing together with you, right? So what you can do is just sign up for the V Startup. We are going to teach them how to use the Thinkorswim, how to use the Saxo International, and how to use the iFast to, if you want, just now, some of you actually asked a lot of questions during Nick's presentation on, hey, very fast, I cannot remember how you click here, click there. Don't worry. We are going to share with you in this 3 hours training session. But I would like to manage your expectation and let you know who should be signing up. If you are already our graduates who know how to use Think or Swim very well, sorry, this is not for you, okay? Yeah, because when you come over here, you'll find that it's very boring. Why are you teaching me how to set up account? Why are you teaching me how to click buy, how to click sell, how to click sell put? You already know. Then this is not for you. Okay, so this is where for people who are really new and when you set up the Think or Swim but you don't know how to use it, this is something which we would like to make sure that you know how to use the Think or Swim account, how to use the Sexo International, because just now Ken actually presented 3 case studies. And these 3 case studies, like for example, the company that's listed in ASX, can you use Think or Swim? You can't. You have to use Sexo. Okay, so there are limitation in certain kind of brokerages, and that is where we will share with you. For example, if you want to buy shares using in US market and you want it for free, you can use the Think or Swim. But let's say you want to buy the Foundation and it's listed in the Australia Stock Exchange. You can use Think or Swim, even though it's free, it's not listed there. You have to use Sexo. And some of you would be thinking, Pauline, I've got maybe limited cash, but my CPF papa. That means your CPF has a lot of money. I want to use it. Just now Nick mentioned about investing the 65%, because 35% you can use it to buy stocks in Singapore, and 65% you can use it to, let's say, invest in unit trust. So that's where we will also touch about the iFast, how you can click, what you can do, how you set up the account, and so on. Okay, because it would be a waste that you will listen to all these case studies. At the end of the day, you can't do this to what's called take action. And in order to take action, you must have the brokerage account. Okay. So, ladies and gentlemen, take your time. You can fill in for yourself. You can fill in for your friends. Or let's say you would think that you have been investing, but you want your spouse or your partner to also learn how to do it. Feel free to sign up for them. So now it's 11:40. We will go for a 10 minutes break. Okay. We will go for a 10 minutes break. We are slightly overrun, but it's all right because you want more case studies, right? When you come back, we will have more speakers to share with you more how to get your multi-bagger, because the next speaker is going to be an overseas speaker, Mr. Christopher Mayer. See you at 11:50.
Hi, I'm Dinah Tan, and my investment ROI has been about 64% to date. Yes. I signed up for Infinite Wealth in October 2019. That was when, after attending WeWealth. Yes, I actually covered my course fee, all my program fee, all covered, yes. And I'm very happy with that. The favorite part of the whole journey is actually learning. I really enjoy learning, and I'm actually grateful to Ken and Mel to start the bi-weekly Zoom session, even though the 5-day program was actually postponed to don't know when, given the COVID situation. Because I've learned a lot through the bi-weekly. And when the 5 days program was postponed, I was actually thinking that, is this going to delay my learning? And thankfully, it did not with the bi-weekly, and I then joined the 5-day program in November. It was a very memorable 5 days for me, meeting new friends, like-minded friends, and applying what I learned. Yeah, so what I've changed so far, I would say that changing in terms of changing my habits, starting the day right. And I feel that starting my day well has actually given me more clarity, more focus, and I would say that it's also more productive how the day goes. Yeah.
Wow, you always actually touch me, seeing the Infinite Wealth mentee itself, the life transform. Transform not only in the area of actually wealth creation, transform in the area of actually health, personal relationship, okay, getting more clarity in life with their purpose. So now, thank you, Diane. Thank you for your message itself. And also, I look forward to more people that are able to step on do this journey, that to unleash the full potential in you without you ever knowing that you're capable to do that, right? So now the next segment itself is very meaningful, because this will change your belief system and mindset. Now, why is that so? Because I I remember someone told me say Warren Buffett can only generate 20%, or 19% or 20% return a year. So who are you to generate more than that? Are you Warren Buffett? Now you see, this kind of statement, okay, it's not say it's it's not say it's wrong, but I won't say it's right. Now for a very simple reason, because people who make this kind of statement, right, usually they don't understand the full scope of actually investing. Why do I say so? Now, usually I'll tell my mentees, they say that now the reason you can generate more than 20% a year is because precisely you're not Warren Buffett. Okay, why? So a lot of them will say, what do you mean? Okay, simply put, because Warren Buffett have a very big problem. You know what's Warren Buffett challenge? Okay, you may not make a guess, not. So make a guess lah. Put in the chat, see whether you can guess it not. What is Warren Buffett's biggest problem? Correct. Too much cash flow. You know Warren Buffett every year got how much cash flow coming in? I will tell you, easily $25 billion US. $25 billion net cash coming in. And Berkshire Hathaway's company is actually holding about close to 150 to 180 billion dollar cash. And you know what his headache? His headache is need to actually think of what things to deploy and invest in to actually make a meaningful return on that large pile of cash. I give example, okay? Warren Buffett cannot buy small things, Warren Buffett cannot buy those like fast grower or hyper growth company which they are still small. You know why not? Because even Warren Buffett, let's say he buy, example, let's say a company is $1 billion cap size, right? Even a company grow to actually, let's say, $10 billion, okay? 10 times, tenfold, okay? Now, does he make a dent in his overall net asset value of the company because so big? No, it doesn't even move the needle, understand or not? It can't. That's why his problem is he got too much cash. But to be honest with me, okay, how many of you here have more than actually $180 billion cash? No, more than $1 billion cash one. You just type in yes lah. You just type in yes here lah. I want to see who type in yes here. You got or not? Okay, if you don't have, right, then you can actually generate more than one rupiah. Walao piang wei. Okay, never mind. It's okay. This one is my karma because last time in school, okay, this is how I answer my teacher. So now my karma coming back, so I can accept. Okay, so now the key thing here is because okay, we can buy company that Warren Buffett cannot buy. Therefore, and those companies we can buy one, right, they can grow very fast when they're very small. They grow to actually a bigger company, and Warren Buffett cannot take part in, but we can take part in. Therefore, our return can actually grow more than 20% a year. How many find this awesome? In fact, Warren Buffett himself said this before. He said, if you give me less than $10 million a year, my capital right now, right? Okay, I'm confident to generate at least 50% return year on year. That was Warren Buffett, okay? Many years ago, he stated on this because he know, okay, as the fund size grow bigger, there's something called the structural disadvantage. Okay, that means itself is very difficult to generate even higher return already. Okay, cool. So therefore, the mindset, the next segment we're going to go to, okay, before I bring in the next speaker itself, is about 100 baggers. Now, 100 baggers means what? 100 times return. So let me tell you, that means it's like you put in $1, you return $100. Okay, I know some of you, if you have been conditioned by actually some other people say that nah, not possible, all this stuff, right? I tell you, you cannot accept it one, right? I can tell you. Okay, my infinite mentee don't have this issue one. Me and Melvin, right? We've done such a process, right? That we open up their mind. Okay, they are not restricted by all this old dogma and old belief system. We believe we should have the 100 times. We believe we must have the 100 times because okay, we can choose good company and we can grow our money. How many find this awesome? Okay, that's why having a good mentor, having a right environment will change and structure your life differently one. You know why not? Because you will become what you believe in and tell yourself. If you tell yourself, okay, you cannot generate more than actually 20 to 30% a year, I can tell you. Therefore, your mind only look at things that you cannot generate more than 20 to 30% a year. That's all. But if you believe, okay, and you have a right network and the knowledge to tell you, I must generate at least 50% a year. I tell you, you start to actually see things that can generate more than 50% a year. How many find this cool? Cool, right? So therefore, one thing I tell you right now, someone asked me, say, Ken, okay, I find a V-app really cool, but I'm a new user. I don't know how to actually start. So now yesterday I show you for the existing user how to extend your V-app, right? Now I'm going to just show you, okay, to be fair to the new user, how to subscribe to V-app. So this is actually a demo account. Okay, I already put in my username and password. You need to create an account first. So when I log in here, go in, very simple one. So same thing, you go to the menu bar. Okay, here you see the V logo at the side. Okay, look behind. Wait, I just scroll down. Okay, V logo at the side here. Okay, I just press in here. Go to subscription. Okay, so now then I scroll down. Hold on. Now, if you ask me, I will tell you, I will choose this V Pro package. Okay, now at $499 a year US. Okay, for 7 market. Okay, so now this one is exclude GST yet. Exclude GST. So now if I click here, so it will tell you select any 7 exchanges. Okay, 10-year information. Okay, access to intrinsic value, rating, star chart analysis. Okay, only at $1.37 per day. Okay, I click subscribe. Okay, so as example, this you're a new user. So what you need to do here is, as new user, you check 7 exchanges, length of subscription, same thing. You put in V submit. Okay, 2021. You click apply. You must click do this step first. Put in the promo code first in order to receive the full report. Okay, you click apply. After you click apply already, right? Then you will have a pop-up say promo code has successfully been applied. Please complete the field and proceed with checkout. So you click OK. So here you put in your address. By the way, okay, some of you very concerned say, Ken, is this your home address? Not? Be careful, no. You know, you don't want to expose your home address. No, this one is your office address. We welcome you to come to office. Understand? As long as you don't break the government law. Okay, so now then, therefore, okay, input your credit card details. Put in. Okay, I agree to the term and condition. Click here. Then you click subscribe. So once you click subscribe itself, okay, they will generate auto OTP to your phone. Then you input the auto OTP can ready. Okay, as simple as that. Okay, cool. So now, yes, come back to me. Now, so now, now I also want to give you more ang pao. Okay, before I bring up next speaker itself. How many want ang pao? You want ang pao? Actually, just keep raise our hand. No need to type. Raise our hand. You want ang pao? Raise our hand. I want to see whether you can raise. No need to type. No need to type. Don't type. Don't type. Just raise our hand. Just raise our hand. Okay. Now listen. Okay. The team decided over the 2 days, you guys have been fantastic. Okay, in terms of actually, despite the sometimes a low resolution, unstable of bandwidth, okay, things like this, some technical glitch, and you still are very gracious, so gracious to learn with a good spirit, energy, right? Now, all the VApp subscriber who attend the Value Investing Summit 2021, listen up, okay, we have decided to extend your usage for 1 more month for free. Please clap. I say again, as long as you are VApp subscriber, okay, paid subscriber, and you attend this V Summit 2021, automatically you don't need to do anything. We'll extend 1 month, okay, 1 month free usage for you. Okay, at the back end we'll do all the work. Okay, so you will receive this extension. Okay, by the end of January, you will see it will reflect into your system, your subscription. Okay, if you love it, okay, give you a raise our hand. You will love it, raise our hand. Yeah, all access pass, including all access pass, is it? Or only all access pass? Only all access pass. Okay, thank you. So, yeah, but you must be a VApp subscriber lah. Okay, you must open a VApp account lah, a subscribe lah. Okay, now, then next. Okay, cool. So, the fall report is only for the new sign up. Okay, the new sign up and actually extension. Okay, can apart from also the V coins you can use Okay, now, so how many of you are ready for next speaker to open up your mind to learn about 100 baggers? Because from here onward, let's talk about 100 baggers. Okay, so without further ado, can you welcome our next speaker, Chris?
All right, hello, and thank you for that introduction, and welcome to V Summit. Glad to be here and share with you an interesting topic that I think could be life-changing for your finances. It's about a book I wrote here called 100 Baggers. This is the Malaysian edition, and 100 Baggers, a stock that returns 100 times your money. So every dollar comes back as $100. We'd all like to find those. That's $10,000 turns into $1 million. And I was fascinated by this topic, and I want to share with you some of what's in the book and share a few key ways for you to possibly find your own 100 baggers. So let me start with how I became interested in this subject. So there's an investor in the U.S. and his name is Chuck Akre, and he's not as well known by non-professional investors, but professional investors know who he is. He has an outstanding track record here in the U.S., and he has had 200 baggers in his career. So he knows what he's talking about. And he gave a speech, was called, I talk about it in the book here, but if you haven't read his speech, I definitely recommend it to you. It's called An Investor's Odyssey, The Search for Outstanding Investments. And you can find it online. But in this speech, he mentions an investor named Thomas Phelps and a book that Phelps wrote in 1972 called 100 to 1 in the Stock Market. So Phelps, what he had done is he looked at all the stocks that had returned 100 to 1 from 1932 to when the book came out in 1972. And he shares some of the kind of the essential elements that these stocks had in common. So after I read the speech, I went and got Phelps's book, and I read that, and I was fascinated by Phelps's book. And I thought, well, for one thing, Phelps is a good writer, so the book is very quotable. It's a little dated in places, but by and large, it's an interesting study on these big multi-bagging stocks. And I used to quote this book, and then I would tell other people about it. And finally, a friend of mine suggested and said, you should update this book. You should, update the study. So I thought that was a great idea. So what I did is I went ahead and got data on all the stocks that had turned $1 into over at least $100. And I went back as far as 1962, which is as far back as I could go, to 2014. So sort of an update of Phelps' study. And I found there were 365 stocks listed in the US that had gone up at least 100-fold. And I had taken out some of the tiniest microcap stocks. So because I didn't want to capture the little mining stocks to go from 12 cents to $12, I wanted to see if there was a way that I could come up with some sort of template that might help investors find 100 baggers. And so that was the universe, 365. What was interesting is that it's the same number that Phelps had in his study. He also had 365. So the first lesson to tell you about these is that they are not quite as rare as you think. There are, every year, there are dozens of stocks that are 100, that are going to be 100 baggers or in the midst of their 100 bagger run that you could buy and multiply your money by at least 100 times. So don't be discouraged and think somehow that this is a crazy quest. Akre himself has 2. You only need to find 1 really to have some life-changing money. So I updated this study, which is inspired by Phelps's book. And I want to tell you a couple of broad things about the study itself. And then maybe we'll get into some of the key findings. So this population of stocks, a couple interesting things to point out. One is that people often assume that some industry will dominate. They think it will be dominated by tech stocks, for example. And that wasn't the case. If you look at the 100 baggers, and in the back of this book, there are pages in the appendix that has all the 100 baggers here listed from the date and the total return and how many years it took them to turn into a 100 bagger. Now, many of them went up more than 100 times, but when was the threshold they first crossed it? So what's interesting is you look through this list, you find companies like Kellogg, which was a cereal maker, Occidental Petroleum Energy Company. Looking here at Genuine Parts as an auto distributor. First Horizon is a bank. I mean, there's a lot of humdrum businesses in here, just ordinary, common businesses, railroads. So it's not Campbell Soup is on here, Deere, which is an agricultural equipment manufacturer. So it's not like it's dominated by Microsofts and Intel and these tech stocks. That's an interesting finding. It's really a number of industries that almost any industry can turn into a 100-bagger. So that's an interesting finding in itself. So we can cross off the list that you don't have to look at any specific industry necessary to get a 100-bagger. That a lot of different industries can do it. So there must be some other factors at work, which we will find out. Another interesting thing is, of course, it takes a while. And I like to tell people that a 100-bagger is basically a math problem. If you think about it, to multiply your money 100-fold, you need to compound at a certain rate for a certain length of time. That's it. It's two key variables. What's the return and how long? And to give you an idea of the math, say if you did a 20% return every year, after 25 years, you would have your 100-bagger. So it's kind of a sliding scale, of course. If you do less, it's going to take a little longer. If you do more, you can shorten it up a little. And there were quite a few 100-baggers that were able to do it in less than a decade. And I talk about those in a special section in the book. So you have these companies that are able to compound for a very long period of time. So that's something else. So we look at it. It doesn't matter, industry doesn't matter, and really it takes a lot of time. And those are two key things that I want to share initially with the study. And one other idea is that it helps to be small, right? So if you buy, say, Apple or Amazon today, it would seem very unlikely that you're going to make 100 times your money on those stocks. They're already valued over $1 trillion. And so if you look at most of these 100-baggers, they started small. Now, when I say small, I don't mean tiny. This is another misconception, is a lot of people think that for 100-baggers, you have to look at, tiny microcap stocks, penny stocks that are trading, very small valuations like that. And that's not really the case. In fact, the average starting time, these businesses had over $300 million in sales. So they were pretty substantial businesses. But most of them started small. So those are kind of the key elements. If you want to look for 100-baggers already, those are some of the things that came out of the study. So we need to have a long holding period for these things, at least the ones I'm looking at. And remember, in the book, I'm trying to come up with a way that any investor can possibly find a 100-bagger. I'm not talking about speculating on a little mining stock that turns some pasture they have into a gold mine, or I'm not talking about a little medical company that doesn't have a product yet and then it hits. I'm not talking about those. I'm talking about businesses already that are successful and that maybe give us a window into what's possible. So let me talk about then some of those get to the key areas, because that's the meat of it. And really in the book, I go through, there are 10 essential lessons or kind of disciplines, or what you want to look for. And I'll give you three of the most essential. So if there's anything you can remember from this presentation, I want you to remember these three things. Okay, so we'll go over each of them. The first one is you want to have growth. I know it's maybe sounds obvious, but all these 100-baggers, their businesses grew substantially. So you start looking initially for sales growth. And again, 100-baggers, finding 100-baggers is a math problem, right? And I kind of look at 20% as the minimum hurdle, or to get close, you want to get right around 20%. So if you can find something that growing sales at least 20% a year, that's a good start. And in fact, there's a chart in the book where I show you kind of the bell curve for how the 100-baggers fell. And most of them were in that 20 to 25 year slot, which means compounding at 20 or 25% a year for 20 or 25 years. That's where a lot of them fell. And then it kind of, it's like a bell curve after that. So the first thing is look for lots and lots of growth. And one way to do that is to, think about Some of it is you invert the question. So what's not growing is one thing, right? You can knock off certain things. Maybe you don't want to own a company where their business is constrained or where their market is not growing. So, think of like people who wanted to try to continue to invest in, I don't know, say newspaper stocks over the last decade, right? We know that market is not growing anymore. It's not, in fact, it's shrinking. So you want to find markets that are growing and that seem to have wide open possibilities. Ideally, some of these 100 baggers were stocks that are businesses that started only as domestic businesses and then went abroad. So businesses like, I remember Coca-Cola, Pepsi really kickstarted when they went overseas, went outside the US, McDonald's went overseas. So I'm sure you may have businesses that are starting out as local and are just starting to go abroad. Those can be very interesting possibilities. But the first key is really to find that growth. It's obvious perhaps, but keep it in mind. It's one of the most important things, I think. Now, the second one I want to get to is less appreciated, but absolutely critical. And that is you want to find a business that generates a high return on its capital. Now, there are a lot of ways you can do this, but let me first just say conceptually what I'm talking about. So this high return on capital is just, if you have a business that you put $100 into it to get it started and it returns $20 in cash to you, that's a 20% return on capital, broadly considered. Just very simple example just to get you thinking about it. That's really what you want because, again, 100 baggers is a math problem, and we want to be able to compound at a high rate for a very long period of time. For me, I'm looking at that 20% number is kind of ideal. If you go below that, your compounding starts to really slow. And if you go too high, it can get a little risky. So for me personally, I like that sort of 20, 25% range. And so high return capital businesses. Now, there are a number of ratios. You can Google these and get definitions and find the one that suits you. Probably, you could look at return on assets, return on equity, return on invested capital, and return on capital employed. Those are kind of four, and they all have different strengths and weaknesses. Okay, so I like to look at return on capital employed and return on invested capital. Those are a little more nuanced. They take into account other factors, but I'd say just for starting, you could look at return on equity. The thing to be careful with about return on equity is it doesn't take into account the balance sheet. Or rather, I should say that a company that has a lot of debt can put out a high ROE, but that's where you use ROA as well, return on assets. So if you can get something that's return on assets in double digits and return on equity over 20%, I think you're probably in good condition there. So you could run screens to start. But remember, this is just a number, and I don't want to overemphasize too much the numbers. In fact, when I did the study initially, I thought that I might be able to have like a simple template and say, okay, well, you get this number and that number and this number and that number, and you could run screens, you could come up with some good candidates, but it doesn't really work that way because there are a lot of ways up the mountain when you think about all the different business models that are out there. And you can just see it in the book, looking at the back, all the different business models that succeeded. It's not necessarily about hitting certain numbers or having a certain business model. The main thing is you have to have that high return on capital. There are lots of ways to get it. So that's why I say that's essential. And kind of tied to that is the third reason, which is you want to find companies that have the ability to reinvest. So what I mean by that is, if you look at our example of a business that you put $100 in, produces 20% in cash flow, ideally, you don't want to get that $20 back. You would prefer that it takes that $20 and then reinvest it all next year. So now you got $100, takes the 20, reinvest the whole thing next year, 120, and gets 20% again off that. right? That's where the magic really starts to happen. When a business can take all of its profits, ideally, take all of its profits, reinvest in the business, generate that high return on capital, and then do it again and again and again. That's where you really get super compounding. Now, in real life, we have to make some compromises, right? Because there are very few businesses that can reinvest all of their profits, right? They have to at least pay taxes. So that's some of a leak. Companies sometimes will pay dividends. That's more cash out the door that they can't invest. And this is an important point. A lot of investors have this bias where they want businesses that pay dividends. And, in Thomas Phelps' book, he says dividends are an expensive luxury. And a lot of people sometimes are a little surprised by that, or a little taken aback by that when I tell them that ideally you want companies that aren't paying you dividends. And the reason is, again, it gets back to this idea of compounding. If a company pays you a dividend, it has less cash to invest, right? And if you were investing in companies that have a high return on capital, like again, a business that earns 20% return on capital, let's say, you would prefer they take their profits and reinvest it and earn 20% again. That's the ideal. So you don't necessarily want companies that pay a dividend. There are always exceptions, right? Again, everything I'm saying, there are exceptions. There are 100 baggers that they paid a small dividend, or they paid a dividend and their business was so great, they earned such a high return on capital that they were still able to compound at a good rate. So I don't want to say, I'm not making a blanket statement here and saying, well, a company pays a dividend, you don't want to own it. What I'm saying is you want to focus on that return on capital. You want to focus on that ability to reinvest, and the more that can be reinvested, the better. And there are factors that are going to drag on that. Paying taxes, paying dividends are leaks, but it doesn't mean that we don't invest in companies that have to pay taxes or pay dividends. It's a factor we have to think about. So high return on capital. The other factor that comes into play here when you're looking at ability to reinvest is you want to understand how much of what profits they make are required to keep the business running versus can be invested for growth. So there's a little difference there. And that will mean that you'll favor businesses that are not so capital intensive. So a business that's really capital intensive, let's say like real estate or oil or some certain manufacturing, so where they take, let's say, again, going back to our example, you take a business that you put $100 in, create profit in 20. Well, if they have to take 10 of the 20 and just reinvest it just to keep the business running, that's less attractive versus a business that can operate, let's say, without reinvesting at all, but can reinvest all of that 20 for growth. Let's say like a software company where you already have the software. This is why software is such a beautiful business, right? You've already have the software. To sell additional software requires very minimal investments, right? You've already created it. So that's the perfect, trifecta. You want high growth, high return on capital, and the ability to reinvest. Those are the three great keys. And if you can find businesses that can do those things, you're going to be fishing in the right ponds. Now, I want to end with just a few. I get some questions that come up, and I feel I want to address a few of these before I close out. Right now, there's a lot more in the book, of course. I mean, I'm only giving you the highest level summary. So I encourage you to go back in this. I go through a number of case studies and walk you through what I'm talking about. And there's just a lot more detail and discussion about this. I tell a lot of stories about people who have gotten 100 baggers and how they've done it. And there are other ways that will help you. So for example, people often ask me, well, how do you know when to sell? And I talk a little bit about that in the book. Ideally, if we do this right, we would never sell. Of course, we're going to sell at some point because there's no point in investing just to pile up a bunch of money and then never spend and enjoy it, right? But you want to, if you do this right and you have a business that has high returns on capital, and as long as they continue to reinvest, you want to hold that business as long as you can. And I think that is really the hardest part in all this, is the ability to hold on. I would bet that probably most investors have had a 100 bagger at some point, but they didn't get the 100 bagger because they sold it. They owned some stock for a brief amount of time. Maybe they got a profit and they let it go. And that company was either in the middle of a 100-bagger run or became a 100-bagger in the future. And, you missed it because you were too busy selling. So in the book, one of my favorite ideas to help people to prevent selling, it's called the coffee can. So let me talk about that idea for just a minute. So the coffee can comes from an investor named Robert Kirby. Robert Kirby was a money manager in the 1980s, and he wrote an article in the Journal of Portfolio Management in 1984 called the Coffee Can Portfolio. If you Google it, you can find the original paper. I would encourage you to read it. It's a good read still, even now. And he tells an interesting story there. He says that he's managing this client's money, and she turns over the account to him, and he's making recommendations what to buy and what to sell, and he manages the account over a period of time. Let's say it's over a decade, and then his client, this woman's husband, dies, and she gives him the husband's account to manage as well. So he looks at the husband's account and he finds something very interesting. He finds that the husband has been piggybacking on all his stock picks, and he's been buying everything that he bought for his wife's account. But there's one difference, and that is the husband never sold. And so he had several positions that had become enormous percentages of the portfolio, including one stock that was worth more than the wife's entire account was worth. So this was a big revelation for Kirby, because here he is, managing this account, doing all the things investors do, right? We look off quarterly earnings. We try to stay on top of the news. We follow the company very closely. We trim a little when it goes high. We actively manage the account. And he found that he would have been better off if he just bought those stocks and had left them alone. So that inspired him to come up with what he called the coffee can portfolio. And he named it the coffee can because in the Old West in America, what settlers sometimes did is they would take their valuable possessions and they would stuff them in a coffee can, and then they would kind of bury it or hide it. And Kirby suggested this is what we should do with some of our stocks. So you take a portfolio, say you take 10 stocks that you've researched and that you think could potentially be 100 baggers. You put them in your coffee can portfolio, that 10 stock portfolio, and you leave it alone. You don't sell. Of those 10 positions, yeah, you're going to have a couple that lose. You might have one that goes to zero. But the idea of a coffee can portfolio is that somewhere among those, you're going to have a surprise and you're going to have something that grows exponentially. Okay. And that big winner will make it all the while worth it. And there have been a number of other real life coffee can portfolios. One of them was run by a friend of mine who did it and had that exact same result. He had one stock that just became a big piece of the whole pie, and he had 3 or 4 that underperformed and didn't do well. But the beauty of the coffee can is that it protects you against yourself, because the biggest enemy that you have in finding 100 bagger is your own impatience. And, you have, anytime there's a crisis, we just had this pandemic where markets went through a severe downturn. There's an urge to get out. When there's recessions, when market gets high, people are worried, there's this urge to do something, right? People want to do something. And if you're an investor and you love this stuff like I do, you're always reading about new companies and new ideas, and you're always going to be tempted to take one of those new ideas and replace it with one of your ideas. You may be holding on to a stock, hasn't gone anywhere for 2 or 3 years. You decide to get rid of it. These are the things these are behavioral quirks that all prevent us from nabbing those 100 baggers. So the coffee can, I like to think of it as a crutch, and it's a way to help you, get through those difficult periods. And you know what? You don't have to do it with all your money. You could take part of an account and try the coffee can, and then have another account that you go ahead and you actively manage it, and you scratch that itch to trade and do something in that account, but you leave the coffee can portfolio alone. So I would suggest that you try that. And if maybe one thing you can do after you listen to my presentation and after this conference is over, is you think carefully about some of your favorite stocks. Think about the 3 keys that I've told you. Think about, you want growth, you want high return on capital, and the ability to reinvest. Think about those 3 things and create a small portfolio of stocks that you think meet those hurdles. Now, there's some other things that, are in the book that I can't talk about in such a short amount of time. There's some interesting things about competition that you should consider, some things about management that I would like you to think about. But just for now, those 3 things: come up with a portfolio and think about putting together a coffee can and letting it grow. Even if it's a small amount, I would really like for you all to test it, try it out yourself. And I know it's a long experiment. 10 years is not as a long time, it seems. But I think you'll be very pleased with the results. So I'm going to wrap it up right here. I hope that I gave you some interesting ideas to consider and to think about. And I hope you read the book. And you can find me online. I'm on Twitter at Chris W. Mayer, Mayer. You can find me there. And you could look up, I run a fund. It's called Woodlock House Family Capital. You can find me online. I write a blog there. So I'd be interested to hear if you have your own stories about 100 baggers. I'd love to hear them. I always love to hear those stories. And so I wish you the best in hunting for 100 baggers. And thanks again for your attention and best of luck.
Okay, thank you, Christopher Mayer. Yes, I have learned a lot. Actually, I just learned one thing the rest of the stuff, not that I didn't know, but I learned one thing called coffee can portfolio. Yes, I do have a coffee can portfolio as well. Now I know there's a name for it, this coffee can portfolio. So it's like sometimes you would buy into so-called the cheetahs, the cheetahs, which that are really high growth that meet the 3 areas of the growth at a 20%, and the ROIC at a 20 to 25%. If you want to know how to find the ROC, the return on capital and return of investors' capital, ROIC, later on after lunch, we will show you via the VAP, okay? Yeah. And then we also need to know that about the ability to reinvest. So these are the 3 key points which you can actually do it. Yeah. Share my coffee can portfolio. My coffee can portfolio, one of it that really shoots up, you should know Tesla. Okay. So, but the thing is, I didn't buy a lot of Tesla. That time it's like 100. Okay, so that is where when I actually bought it like not last year, 2019. That time it was actually crashing, from $400 over, it dropped to $200 over. When after I bought it at $275, it dropped to $195. Nobody was actually thinking. I was like, okay, I'll give it some time. The other one is actually 10 cent. Okay, so I have quite a number of all these like stocks in my portfolio. A few of you heard of my 10 cent story, actually also a few years ago. So when I started to buy it, it was at like 400 Hong Kong dollars, down to 300, down to 200 plus. See, these are the things sometimes when we actually buy it, although we know that you must understand their growth rate, you must understand their ROC, and some of those. Don't just ask me about those stocks, but they have actually grown quite well. And if you ask me whether I will still continue, yes. Okay, so inside this coffee can strategy, that's why I didn't really, but the 10 cents somehow I have quite a high conviction in it, so I keep accumulating. Actually, it was supposed to be initially my coffee can, but it actually went up as in like I keep building my portfolio. So for those who want to get the books about the 100 baggers, of course it hasn't got my 100 bagger yet, my 10 cent. So I have to wait for 10 years. So 10 years down the road, you'll ask me again, Ken. Right. So if you want to know about Christopher Mayer's book, it will be like Singapore, you have the Singapore QR code. Malaysia, you have the Malaysia QR code. International, if you're out of Singapore, Malaysia, you can go into the QR code as well. But if you don't want to buy the books, there's a place which you also can get the books, but borrow lah. Okay. It's called the National Library. Okay, so a lot of people like to ask me where to get the books. Yeah, NLB. Why can't you all borrow books? Okay, so go to NLB, you go and search for it. I realize it is quite on loan. Bishan Library is on loan, Bukit Panjang is on loan, Central Library is on loan. So what you all do is nowadays with online, just reserve it, can. Okay, if you think that Chinese New Year you got nothing to do, you can go and read this book. Free borrowing, yeah. All right. So now that we have heard about this is you can take a look at my iPad. I've added on the this mind map. Sorry, mind map is supposed to be a bit luan one. If you all want a beautiful version of it, later on I can draw it on a piece of paper and post it up in the V Summit 2021 bubble. Just give me some time. So this part you can see is in the mind map would be on. I've added on this part. You see over here. Okay, so the mind map is something which we keep adding on. That's how I normally would learn. So you can see this part is what I call the active part, right? So the active, this is now we term as the active. Okay, so iFast just now we sent to you. iFast actually presented two things. One is the active, which is their stock in itself is a multi-bagger. But iFast allow you to become a passive investor. You see the difference? Okay, so there is no right or wrong whether you want to be active or you want to be passive. It all depends on your life stages, right? Our screen is a bit blurred. Don't worry, I will actually post it up once I've completed the mind map, I will post it up in the V bubble. Okay, I know the resolution just now during Christmas has actually dropped. We don't know why. Initially was quite okay. So I will actually post this and the mind map once it's completed into the V Summit. So you can see, hopefully you understand what it means. If I've been following, you will know my key points. So now we have talked about the 100 bagger, where the 3 points is on growth, ROC, as well as the, okay, I'm going to take this out, reinvest. So sometimes some of you love this thing called passive income. But you know, for high growth company, generally they don't give passive income because with the capital that they have generated, they would have to reinvest back into the company. That's the thing, like for example, in terms of, I will put it up a bit so that you can see, because this is a part that's more important. So it's like in terms of like Tesla, in terms of Alibaba, in terms of Facebook, they are still growing very well. So you can see every time they have all this money that they generated, it's meant for their growth. And can they still be growing? The answer is, I would say it's a definite yes. Okay, that's why you can see Tencent every time when they have all this cash that they generated. In fact, they are a very good cash generation company. Why? I mean, WeChat got a lot of cash inside. So the float is there. So you can see in terms of all this money, what do? They reinvest and acquire companies. Later on, stay for the afternoon session. It's really interesting because we have invited someone to have a dialogue session with Ken, and he's asking him about the tech investment. So this is the part afternoon, you all better stay back, come back after lunch, okay? Don't arrange for anything. But before we go into the high growth more, we are going to go about in terms of passive. So what do I mean by the passive part of things is, some of you will be saying, what if I'm in the stage of life which I can't be that active? What do I mean by that? Now, of course, Pauline is not that young also. I've been through the part I can be very active investor, you know, when I'm single, probably. Then after that, I get married, have children, and then the focus will be on children. And with work, it becomes passive because, wow, not much time. And now it's my critical period when my kids are growing up. So become a passive investor. Then after that, when kids grow up, you can become active again. There's no right or wrong. That's why we are going to introduce you different methods in this summit in investing, okay? So we are going to bring up our next speaker. In the event that somehow your life stage is going into passive investing, you need someone to support you. You need to save your time. You can still stay invested, and you might want to consider this thing called robo-advisor, right? So we have invited the CIO of Auto Wealth, Mr. Ao Taizhi. He's going to share with you how to actually get your great returns even when you are time strapped. He's the CEO of Auto Wealth, Mr. Ao Taizhi, please.
Hi everyone, I hope you are having a good time at the V Summit. My name is Taizhi. Today I'll be going through with you these topics. First, I'll start off with what is your aspirations, how do you get there, how you can invest smarter, and lastly, I'll share how you can get started today using the Auto Wealth service. For those of you who may not have seen me before in my webinars, my name is Taizi. I am the CIO of AutoWealth. I spent about 15 years in this industry managing investments, firstly for the government at the Sovereign Wealth Fund GIC, then for a hedge fund, and lastly for a macro-driven family office. Today, I am also the Vice Chairman of the SAFRA Investment Committee, and I do a lot of work at NUS. Let me start off with what is a typical aspiration of an average Singaporean. Today, many of us who live in HDB, we aspire to stay in a landed property. So that is your aspiration. This is somewhat different from your essential goals in life. For example, everybody needs a housing. So this housing could be your HDB, which means your first down payment for a HDB, and it could be your children's education. So essential goals in life are things that you will certainly need, whereas aspirations are the good to have ones. Today, I'll be tapping on what is your aspirations and how we can help you to get to your aspiration using AutoWealth as a service. Now, firstly, you could invest on your own and get there, especially if you are a seasoned participant of the V Summit or of VI's workshops. But you will need three things. Firstly, you need to have adequate knowledge, where to open a brokerage account, how to select your stocks, and when to time your entry and exits. So these are necessary for you to do well in your investments. The second thing you need is a lot of time, 3 to 4 hours per week, reading up news, reports, and you will see a lot of market noises. You need to discern market noise from what is actual fundamentals. There's a lot of learning and relearning. Lastly, you need a lot of cost. One-off buying your investments, then regular top-ups along the way when you receive your paycheck, when you receive your bonus. And of course, you need some part of your precious time. This could be your Sunday. Instead of going to the swimming pool with your kids, you need to set aside some time to read all this news and follow up on your investments. So this is the most typical way how you can DIY and do it yourself, but 3 things needed. This is the AutoWealth portfolio. Firstly, you'll be interested to know what is our investment strategy if we manage investments for you as a service. The investment will be diversified across multiple asset classes, stocks, and government bonds. Stocks will do well when the economy and corporate earnings are doing well. Government bonds, on the other hand, is to hedge against market volatility. Whenever there are any market corrections, government bonds are what saves your portfolio. Thereafter, in each of these asset class, we will further diversify it out to the different regions: US, Europe, Asia Pacific, and emerging markets. Any particular regions that you can think about is all here. And it will further be diversified in each of the region across all the major industries. So in a nutshell, you throw a stone at any listed company, more likely than not, our portfolio would hold it. And this global diversification allows uncorrelated diversification, which means to say when certain industries are not doing well, your portfolio is not significantly impacted because there will be other industries in your portfolio that continues to do well. And it also means that if you guess it wrongly, that Alibaba is a stock to hold and you have a regulatory scrutiny, then other technology stocks in your portfolio would save your day. So that's the beautiful thing when you do sufficient diversification. We will also do portfolio rebalancing automatically for you. For the uninitiated, what exactly is portfolio rebalancing? portfolio rebalancing refers to whenever there are market volatility that makes your portfolio go out of whack. For example, in the COVID sell-off, stock would have declined in value and government bonds would have went up in value. In such cases, we would be taking profit on the government bonds and shifting these funds to buy stocks while they are now precisely cheap in the market discount. The example that you see on your screen is the 2018 market correction when the US-China trade war first took place. In this case, you would have noticed that stocks across the board decline, regardless of which region you are in. Some regions decline less, some regions decline more. But more or less, since this is a global event, all stocks are hit. Your 60% allocation in stocks may have now declined to 55% allocation due to the shrunk in value. And whereas your government bonds would have went up in value and become 45% allocation instead of the original target allocation of 40%. In this case, we would be taking profit on some of the government bonds and then shifting those funds to buy stocks whilst they are cheap, such that when the market recovery eventually takes place, you have more stocks position that can help you to earn extra returns. So you can see at the bottom table that stocks have recovered, and because of this portfolio rebalancing, you manage to buy more stocks and bought them while they are precisely cheap, so that when the recovery takes place, you earn a much higher return than you ought to be. I will now bring you through the AutoWealth platform in a very quick demo. This is what you will see on the AutoWealth platform when you click Get Started. Once you have gone through this series of short questions and you click Next Step, the platform will take in your responses and profile you. We will show you what is the recommended portfolio based on your risk profile, which is shown below. At this point of time, you will be able to see the asset allocation as well as the projected returns and risk. You will also be able to change the risk profile. If, for example, you feel that risk 2 portfolio is getting you not the returns that you want, you can increase your risk and you will see that immediately the projected returns would have changed as well as the portfolio. So you can do some adjustments until you find a portfolio that you find suitable. After that, when you click Next, the platform will then match what is your commitment level versus what is your goal expectation. And we will tell you today whether you are likely to reach your goal or not. If you want to reach your goal, you can do two things. You can either adjust how much you want to put in today. Instead of $10,000, I can click that amount and change it. Or if you only have $10,000, for example, you can say that every month when I receive my salary, I want to set aside a few $100s. This way, the platform will immediately tell you whether you are going to reach your goal or not using this portfolio. The last step is to really start an account online, the first option. All you need to do is to give us your particulars in this online form. Once you are started and an account has been set up, this is what you will see when you log in. You will see a portfolio snapshot, as well as on the top right-hand corner, summary statistics. How much have you deposited in total? What is the current portfolio value? What is your profit and loss in dollar terms? And bottom, how much returns in percentage terms? On the bottom left, you will see what is your goal tracking. If you have indicated multiple goals, we would tell you for each of these goals, are you on track or off track? When you click on details, it shows you all the details if you ever want to see them. For example, you'll be able to see what is your current portfolio allocation, how many percent to US stocks, how many percent to Europe stocks, so on and so forth. And you will also see on the right-hand side, a curated summary of all the market developments that is important to you and your investments. After which, you will be able to see what is the performance attribution across the portfolio, which portfolio asset is making you money and which is not making you money, and how much are the dividends that have been collected till date. If you ever want to see, you can even click on transaction records, where you will be able to see all the transactions that's being done for your portfolio arranged in a chronological date order and across the columns, the different portfolio assets. Similarly, you will also be able to see dividend records arranged in chronological order and across the different portfolio assets. That's it for my demo. I will now bring you back to our presentation. For such a hassle-free service, what is the kind of returns that we have done in the past? On the screen, it shows you the returns for 2020 from January 1st to 31st December. On the left-hand side in blue, you will see what are the comparable unit trusts available for sale in Singapore. When I say comparable, they must be globally diversified and have a high allocation to stocks and some allocation to bonds, so that they are comparable to the Auto Wealth investment strategy. There are 13 unit trusts like that available for sale in Singapore. Across the board, the average and the median is between 6 to 7%. And you can see the Auto Wealth portfolios in white. Our risk-free portfolio, which is 60% in stocks, 40% in government bonds, they generated 12% over the last 1 year. Our risk-for portfolio, 80% in stocks and 20% in government bonds, generated almost 14% over the last 1 year. On the last column, you will see our new product offering, Auto Wealth Plus. One of the portfolios, Future 2050, it managed to return an annualized return of 25.72% over the last 1 year. An important disclaimer, investment always involves risks. Any reference that we make towards this past performance, they are not necessarily indicative of the future and likely performance of your investments. Next up, I would like to show you how well we have done for risk management. This is important. During the COVID sell-off, as an illustration, the global stocks as represented by the MSCI All Country World Index declined from peak to bottom 33.8%. Over the same period, the risk-free portfolio declined only 18%. This means to say our users can rest easy knowing that risks are actively managed for them. And in that same light, from 19th of February to 30 June close, at the end of second quarter, you will be able to see that global stocks, while they have recovered, they are still down by about 9.5%, whereas the risk-free portfolio is down 3.2% over the same period. This means two things. Firstly, the Auto Wealth portfolios not only proven to deliver attractive returns, it has also proven itself to be defensive against market declines. I have come to the end of this webinar session. The last thing I want to share with you is our exclusive deal for V-Summit participants. If you onboard yourself through our website, www.autowealth.sg, using the referral code VSummit on or before 15 February, when you fund your account, we will deposit an extra sign-up bonus of $28. For any enquiries, please email to clientservices@autowealth.sg. With that, I thank you for your time. I hope you have a pleasant Sunday.
Thank you, Taizhi. Okay, so For whatever some reasons, the resolution has kind of like dropped to 180p for some of you. Okay, whereas there are some who are still at 720p. So in case you realize that your resolution has gone blur, especially during Taiju's session, what you can do is the video will be made accessible. So I'm just going to brief you how to get the videos and rewatch again if you want to. Okay, the good thing about video is yes, you can forward it, right? So you can get access to the video at vSummit Bubble. For the standard pass holder, the video will be made access to you for the next 7 days until the 31st of January. For all access pass holder, anyway, you have unlimited access to the video. So feel free, take your time. You can watch even during Chinese New Year, during that long break, yeah? And refresh all your knowledge. And on top of that, you have a 1 month free subscription based on your plan, right? So I'm sorry that the resolution is something in terms of the broadband that we can't really control as much as we want to. Okay, but for some of you, it becomes the resolution has dropped. For some, it did not. So it all depends and how it works. It has got to do with a lot in telco, in broadband, and too much things at play. Yeah. So next part is this. Many of you also ask regarding the VLOS Plus in terms of the 100 baggers, you won't miss it, okay? So for those who want to rewatch and get the slides are definitely there. You can download the PDF version in the bubble. The videos will be there. Give us some time to upload each and every of the speakers. Some of the speaker slides are already there, okay? So take your time to watch over at least the next 7 days. The next thing is the lunch session. We are going to go for lunch at about 1 o'clock. So the lunch, the 100 bagger slot, we will actually delay it. It will start at 1 o'clock. Okay, so after now, anytime between 1 to 2:30, you can access the video. Okay, from 1 to 2:30. So we have extended the time frame also by another half an hour. Don't worry, definitely we will go accordingly. That's the reason why, because it's a multi-speaker event. Okay, that's the reason why sometimes you realize we can't give you the exact timing of the agenda, right? Because of the things here and there. And sometimes you want to know more, we will share with you more, because I think your learning is more important than anything else. Yeah. So definitely you won't miss out anything. VLOS Plus grads, go over to your VLOS Plus bubble. IW grads, go to IW bubble, and VLOS Plus registered participants, just check your email if you have not gotten the bubble yet. Okay, so for those who still want to continue to subscribe, okay, good news for you, because of overwhelming response. Yes, okay, our sign up was overwhelming for March. We have additional session right now in February. Okay, so you sign up right now. We have a class on in February. Okay, we are arranging for the dates together with Derek. Give us some time, we will let you know ASAP. So even though you have signed up for the March session, we will ask you again to RSVP whether you want the February one or the March one, because we do not want you to delay. Some of you are very eager, especially after in January, there are a lot of opportunities coming up, okay? So you don't want to delay until March to come for the class. You want to do it in February, not an issue at all. We are arranging a session either before or after Chinese New Year, okay? So you will definitely have a chance to do that. Just go over, you can put in a deposit, and then within like 15 minutes, the email will be sent to you for you to access this special session until 2:30 p.m. Okay, but our V Summit will come back at 2 o'clock. Okay, so what you can do is you have an hour. Okay, anytime this hour, you can watch the 100 bagger, that particular recording. Okay, it's actually put up already. Yeah. So ladies and gentlemen, what we are going to do is we're going to go for lunch. Lunch will be until 2 p.m. After 2 p.m., we will have lucky draw. We will be having also case studies, and we are going to share with you also how to get the ROC figure, which Christopher Mayer have gone through, because he give you the concept. We give you the application. So be back at 2 o'clock sharp. I'll see you soon.
Hi, I'm Steven. My ROI is for 42% for US market and about 52% for non-US market. I signed up Infinite Wealth in March 2020 this year, just a few days before the COVID circuit breaker period. I have made back all my course fee about 2 months ago. Yeah, so what has changed is that I have a better understanding in terms of value investing and the power of compound return, which I was fearful and phobia in the past. So I want to thank Ken, the mentor, for his guidance and teaching. Okay, my favorite part would be the continue to see my portfolio grow over time, and met a lot of friends that with a similar mindset in this journey. And of course, the best would be I've paid my family holidays just 2 weeks ago with my passive income collected. So I'm grateful and thankful, VIC.
Welcome back. We are at almost the last few segments of this V Summit 2021. We have gone through regarding the multi-baggers this morning, looking at Singapore case study of iFast. And from last year of less than $1, now within a year, it has gone up more than like a 5-bagger of a $5.13. Now, we have also seen other types of multi-bagger. Some of you have heard in terms of Ken talking about the 100-bagger. And all of you definitely have heard of Christopher Mayer in terms of the 100-baggers, that you do not need to look at just tech stocks. Although we know that in future, technology, digitalization, e-commerce is going to play a big part in terms of our investment decision making. So the next part that we also know is we have different types of investors. Some of you more active in terms of catching multi-baggers. Some of you more passive. Maybe you are looking for dividend play. Maybe you are looking for activating your your CPF for your unit trust investment, or even in robo-advisor. The next part, this segment in the afternoon, we are going to go more into the emerging markets. We are going more into the macroeconomics. We have been talking about the bottom-up approach. Bottom-up as in we look at the companies and then seeing which are those within our circle of competence in order to make money. Now, the next part, we are going to talk about more in terms of future trends. This is the focus on the last part of V Summit 2021. Before I bring up the next two speakers, we will have one case study by our very, very own trainer as well as investment researcher, okay, Alex Ng. He actually came for our class. He's one of our VIB graduates way back in 2012. I still remember he's one of the first few that came in when we start to run the VIB in Malaysia. That time was known as MIP. He and his friend Chen Hong, whom many of you have seen before as well, came when they were only in their university days. Yes, they started investing at the age of 19, 20 years old. So with that, they start to learn about investing, and also over the years have grown with us, have grown together with V College. Today, both him and Chen Hong are managing portfolio that's near to millions of dollars. In fact, Chen Hong, I think, is multi-million already. Okay, so if you want to find more of undervalued opportunity, let's welcome Mr. Alex Ng. He's from Malaysia. So right now, because of the COVID, he has to be in Malaysia. So let's watch his sharing.
Today, very blessed, very proud to have this opportunity to be here to share with you this case study in VIS 2021. Now, of course, a quick disclaimer first. I want to be very, very upfront with every single one of you here because I have vested interest in this particular company. So whatever I share, I might be biased. So this is not a recommendation for you to buy or sell. Please do your own due diligence, right? If you're okay with that, comment below, say, okay, come on. I just want to be extremely clear and transparent with every one of you here. Okay, so with that, let's move on to my sharing today. Now, first thing first is this. Let's look into their business financials, right? Now, according to VF, okay, based on V-risk rating, I must warn all of you first. This is considered a relatively high-risk kind of investment, okay? At the same time, if you look at the V-star chart, it is actually a gorilla, right? So if you have been using VF, right, you know that gorilla is the strongest type of animal in VF. Now, for those who haven't had the experience using VF, now you know, right? Gorilla is the strongest type of animal where it is strong and stable, at the same time can grow pretty fast. At the same time, it's a green gorilla, which means their health level is strong, the profitability level is strong, and of course, the growth level is strong. Of course, this company don't pay dividend, okay? And of course, next thing is this. Let's look into more details of their financials performance. Now, in terms of revenue, you can see that the revenue actually grow very, very fast. And of course, net income also grow very fast, okay? And next is this. You look at the gross profit margin. Now, you'll be see that gross profit margin, right, hits a consistently high of 85%. Now, my personal benchmark, 40% and above, I consider is a very good business already. Now, when a company hit 85% gross profit margin, that is great business. That's like, wow, definitely there's certain moat that this business have. And in terms of net profit margin, okay, it actually improved for the past 3 years as well. ROE also improved for the past 3 years as well, okay? Now, next thing is this. Let's look into the business health. You'll see that the current ratio and cash ratio is pretty high, pretty healthy. They are cash rich with very, very minimal and low debt. Can you see that? Now, next thing is this. Let's look into their cash flow. Both of their cash flow for operation and free cash flow is very strong and healthy. So let's just give you a big overview of the financial performance. In terms of profitability, pretty good, right? In terms of financial health, pretty good. And in terms of balance sheet is pretty good. Now, so what is this company, okay? And this company is Midtech System, okay? Midtech System. Now, some of you, maybe you heard them before, but I bet most of you here, this is the first time that are hearing this. Now, Midtech System is actually listed in NASDAQ. Okay, it's a US-based company. Currently, it's actually considered as a small cap with a 724 million market capitalization. So now, what they do? Okay, they actually provide mobile image capture solution. Okay, 2 business segments: mobile tracking software and digital identity verification solution. Now, let's go through one by one. Mobile tracking software is basically, imagine we have a check, okay, received from, let's say, a stimulus check from the government, okay, or let's say from your employers or whatever, give you a check, right, from your, let's say, customer, right? Instead of going to the bank, queue up to deposit a check, right now, just using a camera-equipped device, be it your iPhone, Android phone, or maybe iPad, tablet, right? Download this particular app, you can just scan the particular check, and you're able to deposit the check in your bank account. And it is trusted by nearly 100% of top US banks. Wow. So it actually have a very, very big market share. You see that? Now, of course, other than that, they also have this mobile verification part. Okay, so imagine, let's say you want to fill up certain form. Your mobile phone just need to scan it, okay, and it will actually help you to pick out your names, your personal information to fill up the particular form and able to do certain verification, okay, based on your, let's say, ID, IC, driver license, okay, to actually match whether you are the correct person. Okay, so this is a big idea of what is the business all about. Now, next thing is this. Let's go into their business overview, the revenue segment, okay, business revenue segment. Now, of course, the main bulk of the revenue is generated from mobile checking, where 67% of it is actually from mobile checking, where people deposit check, and of course, Midtech System actually takes certain cut from it. And then 33% of it is actually from mobile verification. So mobile verification is more of like a SaaS kind of a business, okay? Now, next is this. Let's look in the performance growth, okay, for each segment. And this one is something that really wows me. Now, if you look at mobile tracking, right, for the past 3 years, okay, the mobile tracking actually skyrocket, right, actually grow 28% CAGR consistently, 28%, 38%, 28%. Now, in terms of the mobile verification, it actually grows even faster. Can you see that? 37% for the past 3 years consistently. That is very, very amazing growth. Can you see that, right? Now, of course, it is actually currently serving more than 7,500 financial services organization and leading marketplace and financial technology, or what we call fintech. And again, let me remind you, it is trusted by almost 100% of the financial banking in the US. So they are very, very reliable and very, very reputable. Can you see that? Now, of course, what is the growth opportunities, right? Why did I personally invest in this company, right? Now, first thing is this, I believe you and I, we all know that right now, cybersecurity is a big thing, right? Trust is a big thing, fraudulence is a very, very big thing, and identity verification is currently taking the center stage. I mean, more and more importance, okay, that we need to actually emphasize on identity verification. Now, actually, every industry requires some sort of identity verification. Now, identity verification is not just people verifying people, right? On top of just people, organization is also considered as an identity. Government, public sector is also considered as identity. Now, things, right? Things, okay, or okay, maybe because of my green screen, now things, okay, an iPhone, connected device is also considered as identity, and virtual entities also considered as identity. Can you see that? So all these things, right, require certain verification to prevent fraudulence, to actually make sure the security is safe. Can you see that? Now, then of course, based on the research, right, the total addressable market for global identity verification is growing fast at a 15.6 CAGR, growing very, very fast, and will be actually hitting 15.8 billion total addressable market share. This is very, very huge. And considering MITEC today is less than 1 billion market cap. So this is actually a huge market for them to actually tap into. Now, next thing, of course, right, they also recently released or introduced this new service called a remote notarization. Now, remote notarization is actually currently approved in 28 different US states. Okay, just imagine, right? A user, right? They can just simply submit a picture of their driver license or some government issued ID along with some simple Q&A, or maybe not simple Q&A, some security check Q&A, right? To determine the authenticity of the users and identity. Now with that, the sensitivity of the documents are only shared, signed, and notarized with the verified parties. Now, other than this remote notarization, they also started working with this business partner called Agilis. Now, Agilis is actually a company that provides hospitality software to hotels. So with this mobile verification, right, it actually incorporated with Agilis our Guest Express mobile product, okay, and actually launched in Venetian Casino Resort, which means what? For someone who want to check in into Venetian Casino resorts, right, they do not need to actually go to the counter desk to do manual check-in, don't need. Everything can do online on their own phone. Of course, I must say, the moment when they introduce this service, COVID-19 happened. So it actually affect this part of the business quite a bit, right? But of course, after COVID-19, this part of this business is projected to actually increase and definitely improve when more and more hotel businesses willing to actually work with either Agilis or MITEC system, okay? Now, of course, this business, let's look into the mode of the business. Now, in my personal point of view, they have two very strong modes. Now, first mode is this, efficient scale. MITEC actually dominates 98% market share of United States remote check deposit industry. Again, I said 100% of the financial banks actually trusted MITEC software, right, to actually do the remote checking. Can you see that? And only 2% is actually from this USAA, where they mainly serve the military. Okay, MITEC system actually serve the normal people, right? USAA actually serve the MITEC. The military, sorry, not MITEC. Okay. Now, other than that, right? Other than that, they have this thing called a switching cost. Now, in terms of the mobile checking and mobile verification implementation of the system, right? The timelines actually take about 6 months, right? About 6 months. So it actually requires a lot of work, right? It actually requires a lot of data transfer, that kind of thing. Now, after a company or an organization decided to actually adopt MITEC system, for them to switch, to another provider, it actually requires a significant amount of time, effort, and of course, money. Now, at the same time, okay, they might actually experience some loss of data, that kind of risk, which is a very, very high risk, considering today data is everything. Can you see that? I mean, all different data actually helps the business to actually improve. Without certain data, the business might be badly impacted. So I would say that MITEC system has two very strong modes, okay, switching costs and efficient scale, okay, switching costs and efficient scale. Of course, even with this company's mode and with this company potential growth, they also have their fair share of risk as well. Okay, so now let's talk about the risk. Now, the first risk is probably some of you might be thinking already when I'm saying they are doing remote check, remote deposit of checks, right? So some of you probably thinking, Alex, I don't quite remember when is the last time I used physical check. Okay, maybe some of you actually have been thinking. If you have this thinking, comment below, say yes or not, right? Yeah, I also understand, right? In terms of the usage of physical checks is actually declining. In fact, research shown is actually declining 3 to 4% every single year. So this is actually a major risk for MITEC system. However, please do note that only 18% of the checks are currently being deposited by a mobile method. So 98% of the checks still goes to the bank, do the manual way. I mean, you need to queue up. So it's very, very complicated, not very convenient. Can you see that? Now, because of coronavirus, okay, people are locked down, okay, cannot actually go out, right? And of course, because of US government actually giving a lot of stimulus check, right? This one will actually help to increase the adoption of mobile checking software. Honestly speaking, if this MITEC system comes to Singapore or Malaysia or come to our country, would you prefer to use this remote checking system, assuming it is regulated and licensed, right? Would you prefer to use this remote checking system than go to the bank, queue up to actually deposit your check? Which one? Right? I believe it's a remote checking. Would you agree with me? I mean, much more convenience, much more easy and fast, right? And on top of that, right, other than just operating in US, currently they are looking into expansion of mobile deposit into Europe, which provides additional growth level for the mobile deposit side. All right. Now, of course, another risk that they are facing is this mobile verification side. Okay. Now, in terms of this IDaaS market, now what is IDaaS market? Is identity as a service. This is a booming market, right? And it's a very, very I wouldn't say it's saturated market, but this industry got a lot of different players, right? It's a lot of players. For example, Okta, Adaptive, Ping Identity, and One Login. There are a lot of competitors is fighting in this particular industry. Of course, one good thing is this industry is growing. So instead of fighting with one another, they actually right now is fighting to grab more and more market share. Okay. Once this market is actually saturated, then moving forward, maybe 5-10 years down the road, they will start to actually fight one another. So this is now of a fighting for market share kind of situation right now. Okay. So despite so many competition, MITEC CEO actually estimated that the company has a 20 to 25% market share in mobile verification business. Now you must understand that in terms of identity asset, IDaaS, okay, identity as a service, there's a lot of different kind of a service related to IDaaS, okay, but MITEC is actually providing mobile verification, and it actually owns about 20 to 25% market share, okay. And on top of that, okay, despite the mobile checking deposit business, it's actually a declining trend, okay, because lesser and lesser people are using physical check, okay. We must all know that it is actually a cash cow business. Why? Because 100%, okay, or almost 100% of the bank and financial institutions in US are using MITEC system. Can you see that? Right? Why bank actually chooses MITEC system is because the cost of using MITEC system is actually much lower than the cost of maintaining the physical ATM, right? So that's why they choose to use MITEC system. Now, it is a cash cow business. Despite it's actually declining in terms of usage of the check, okay, it is actually the cash cow business where it actually generates a lot of cash. Now, with that amount of cash, it actually can help MITEC system, right, to actually build up the mobile verification part. And this is a very, very important part because why? In today's business, a lot of IDaaS business, they are relatively new, and a lot of them, they are a cash burn business. But MITEC is not a cash burn business. MITEC actually generates a lot of free cash flow, okay, for their acquisition, for their R&D, for them to actually grow and capture more and more market share to actually compete with the competitors. Can you see that? So this is This is a strong part about MITEC. Okay. Now, of course, after looking at risk, lastly, we want to look into the valuation, right? Valuation. Now, of course, I won't go through the financials anymore because in the beginning, I go through the financials. Profitability is strong, financial health is strong, cash flow is very, very strong. Now, how do I do the valuation for MITEC? Now, because as I shared, MITEC got a very, very strong cash flow, free cash flow generation business, right? They actually generate a lot of free cash flow. I'll be using DCF, discounted cash flow, to value MITEC. Now, if you look at their historical cash flow and free cash flow growth, you realize that their growth is about 30% on average. Okay, for the past 3 years, 30%. For the past 5 years, 30%, right? Same goes to free cash flow. 3 years CAGR, 30%. 5 years CAGR is about 30%, which is pretty strong. Now, for me, I want to be slightly conservative, right? So what happens is, using this discounted cash flow. Now, this is actually, I cropped it from VApp. It's actually advanced, okay, advanced IV tool, okay, that you can use moving forward, okay. Now, using the growth rate of 15%, because I just want to be slightly more conservative. Despite historically for the past 3 to 5 years, they have been growing 30%. I actually cut it by half, okay? Assume a much slower growth rate of 15% growth rate for the next 5 years. And of course, another 10% for the following 10 years, okay? With the current free cash flow of about 55 cents per share and a discount rate of 1.9%. Now, this discount rate is actually the 10-year US government bond rate, okay? The current value that I have is about 19 to 20 US dollar. Now, as for the price, okay, share price as of I'm doing this video right now, currently is about 17 US dollar. So it's about 15% under value. Okay, so that's the reason why I actually invested into this particular company. Of course, this is not a recommendation for you to buy or sell. Please do your due diligence, right? Please do your homework to see whether MITEC is something suitable for you, right? With that, thank you everyone, right? I hope that you learned something and gained some valuable insight in my case study, and I will see you very, very soon in the future. Okay, so see you and goodbye.
Thank you, Alex. More case studies are coming up, and all these case studies have gotten to do with what's upcoming in the trends. And trends are important. It's not just about the trends in share prices, but more in terms of future business trends. That's why we have the next segment that's coming up on the future landscape and climate of business transitions. We know when we invest in stocks, we are not just buying a piece of paper or a share price. Many of you are concerned about share prices, whether it's going up or down. Yesterday, we have quite a number of speakers that's talking about like share prices. Even Joshua and Daniel, actually, they were focusing about that in terms of share prices up, down. How do we make decisions? However, if you know, one of the key things that Dr. Daniel yesterday have talked about is in terms of the fundamentals. When you look into the flow chart, it's all about looking at the business model, the mode, as well as in terms of what are the future. What is the future? What are the future trends coming up, right? So this is where we have our next speaker to talk about it in terms of the future climate, and it gives you an idea where to focus on. Our next speaker from Australia, Mr. Steve Torso. He is going to share with you the future landscape and climate of business transitions. Steve Torso is also the co-founder and managing director of Wholesale Investor and Crisp. Mr. Steve Torso, please.
Thank you for the kind introduction. And, obviously I'd just like to say thank you to Ken and his team for the opportunity to participate in the VI Summit. And, for me, it's a great opportunity to talk about an area that I'm very passionate about, which is the area of innovation and disruption. And for most investors, this last 10 years has been such a defining decade in the terms of what we've seen, the role and the impact that technology has made in so many different areas of our lives when it comes to the way that, it said the simple terms of the way that we live, work, and play. So to give you an idea, as I go through my presentation, some of the areas that I'm going to be talking about is that, firstly, obviously, provide a bit of an introduction to myself. Secondly, I want to start going through some of the generational trends that we're seeing, and also the impact that it's making across sort of key areas in the marketplace. And I said, from the perspective that we always approach things, we always look at things from a macro perspective. And from a time frame, the way we're looking at is how can this impact be translated across a 5 to 10 year period? The third topic on the agenda will be the acceleration of innovation and disruption, and understanding the different adoption rates, in those areas. And then the last part is, what are the opportunities for investors going forward? So the outcomes that I really want people to walk away with is, firstly, I just want you to be really familiar with what are the generational trends and impacts that we're actually seeing, and how is that going to make a difference in the companies in which you're looking to invest into, but also how is that going to make a difference from a performance perspective. Secondly, we'll be looking at some lessons that I've learned from the venture space that really are quite applicable when it comes to the listed companies, and whether it be, and globally as well, it's not even down to regions. And that's been an interesting exercise for me. Thirdly, we're going to be looking at, from a perspective of providing perspective around technology and the different disruption trends, and some key ones that we've really observed. And I suppose the space that we come from is we're really lucky to see opportunities long before the market gets to see them at a listed company perspective. So, and I'll go through a bit about my background as well. And then the last part is, I just want, the two things is the business models coming forward. And then also, I just want you to have some sort of familiarity with the sectors that are really driving and leading the change when it comes to this. So I hope you enjoy, and obviously I look forward to the Q&A session at the end of this. So firstly, a little bit about me. My name is Steve Torso. I'm the founder and managing director of Wholesale Investor. Wholesale Investor is Australasia's leading platform for emerging and innovative companies. And we've been working with companies now across the private, pre-IPO and small cap listed space now for 12 years. And what we've really worked with companies is basically mostly in the capital raising area. So what we're very fortunate that we get to see investor appetite, as I said, long before it sort of reaches the traditional listed market space. And that difference is quite important, because when you start to see these trends nice and early, it provides an opportunity for investors to capitalize on. And then also we launched CRISP, which is our platform. And our platform is the design is how do we create an end-to-end solution for companies that are looking to raise capital. And that's also provided some interesting insights for us. And we've been fortunate enough as a company to attract worldwide shareholders to our database, including Investec, which is a London Stock Exchange listed bank, listed investment bank, BMYG and ING, IMP Capital, which are two VC firms, one out of Australia and the other one out of Canada. And to give some context as the Wholesale Investor said, we are the leading investment platform in the region. And our ecosystem is now, it consists of over 29,300 high net worth professional and international investors, along with industry participants and family offices. What's important about that is they provide me with a perspective that I get the opportunity to provide you with. So what I'm in my role with Wholesale Investor, I'm very fortunate in dealing with a lot of different, whether it be professional fund managers, institutional fund managers, family offices, and also high net worths. And the importance of that for me is, as I said, when you start to understand the way they invest, when you start to understand how they're looking at markets, when you understand how they're looking at trends, it really starts to help shape your thinking. And over the last 12 months since COVID, I've spent a lot more time running venture and capital interviews. And this was my opportunity to actually sit down and directly ask the investors the questions like, what are they looking for over the next 5 to 10 years? How do they see their area playing out? What do they see as being the key winners? And my hope today in this session is I can translate that to you as best I can in a high-level framework. Like, I'm not a stock picker guy, just to be clear. but in a high-level framework that helps sort of shape the thinking on what you want to be looking at in some of the businesses, from a strategic perspective and also from a fundamental perspective as well. So first part, to understand us, just our role in the ecosystem, we connect companies with high net worth investors. We utilize platforms and technology to do that, as long as we work with partners. And in that, we create opportunities. So effectively, to give you some perspective, in the last couple of years, we've raised over 180 million for our clients. And that's all private capital going mostly into unlisted venture businesses. And the sector experience from our side is we've worked with companies from every sector. So as I mentioned, what's really nice about my role is I get to see the private capital trends transfer over into the listed capital trends. So, the sectors which we're seeing growth and momentum in, we often see, a bit of a period beforehand. And the opportunities we work with, as I said, ranges from private, pre-IPO, to small cap listed, to funds, to property, and also obviously blockchain and digital currencies as well, which is obviously, been very prominent over the last few years, especially in ASEAN. Now, to kick off my session, I think it's really interesting for people to think about some key things. And look, there was a presentation that really had an impact in my life, and it was Bill Gross's. This is the exact presentation. Each of you can Google it and you can watch the video yourself. But this presentation really got me thinking about our space. And it's something that I've really observed over the years. And when I first came into the space, we all got taught about when you're looking at investment opportunities, you're looking at the team who's sort of executing behind it. But what Bill Gross did was he basically took it upon himself. He'd invest into a few hundred companies, and he thought to himself, what is the difference that actually makes the difference? What is the difference that when they invest into companies, it gives them that 10x, 100x, 1,000x potential for a return? And because they had such a large portfolio of companies, it was a great opportunity for them to break it down into several key areas. So what they did was they thought, okay, what are the reasons for startup success? And when we're seeing listed companies, this applies just as much, especially when companies are working in the small caps, especially if investors are looking at the small cap space as well. So the areas that he looked at was, the first one is he looked at the idea. They wanted to know how novel it was, how differentiable it was. Was there anything unique about it? Was there any potential moat between that idea as well? And the moat being, what barriers can they build, whether it be around the IP, the distribution network, the marketplace, or whatever that may be. The next thing they looked at was the team and the execution, right? How effective are they? What is their been there, done that experience? How adaptable are they? If we've learned anything from COVID, a team's ability to adapt has been massively important for the success of companies, not just surviving, but thriving during such an unusual period. The next one they're looking at is the business model. And obviously they're dealing with startups. So they're understanding, is there a clear path to revenue? And I know, obviously being ASEAN focused, when you look at Australia, there's a lot of companies that sit on the ASX that are actually yet to actually generate revenue, especially if you're investing into the life science area. There can actually be quite long delays between, the time a company lists and the time they're able to either produce revenue or get an outcome for their shareholders. The other thing they were looking at was the funding, okay? And that was interesting. And then the last part they were looking at was the timing. How early or late was the execution? How relevant was the idea at the time? And what difference did that make in the whole perspective? And when I first started to watch this presentation, I thought, you know what, that's a really interesting way of looking at it, right? Because in my experience, before that, everyone had talked about the team, right? When we were speaking with investors, we'd know they'd go have a look at the team straight away. We knew that was important. But when Bill actually come back with what he found was the difference that makes a difference, it was actually quite interesting. So the first one, at 14%, at the lowest level, which was quite interesting, was the funding. Now you think, well, how does an early stage company survive if they don't have capital? And I thought that's actually, so that was at 14%. The next one was business model. So that sat at 24%, okay? The third one was the idea. Right. Now, what was really interesting, you gave a great example of YouTube. Now, obviously, YouTube went on to be an incredible success for the founders. They had some early VC backing. What was interesting is he had a company that was similar 1 year beforehand. So he had a similar idea to the guys at YouTube. And then the next one that they looked at was, okay, 32% was the team and then the execution. And the last one, the difference that makes a difference, and he used the perfect example of YouTube, was timing. Timing is everything, right, for this. You know, for investors that are looking to maximize their returns on going into opportunities, timing becomes everything. And I've known this as a founder. As a founder, I know when my sector is in the spotlight, and I also know when it's not in the spotlight. But what I thought was interesting is to have a look at in this presentation is, what are those trends that are going to make, what is timing looking at? What are those trends that are taking place now and also will take place over the next 5 to 10 years that investors have a significant opportunity to capitalize on? So the first thing I want to, I said today we're going to be focusing on the generational trends, and also we're going to be focusing on the technological trends. Right now, there's obviously lots of different areas to cover. I'm going to be looking at a few of my favorite areas for your reference. So let's look at the different generations. And I thought this was really interesting. This was actually from McKinsey & Company. And this has been something that's been very obvious to me, over the last sort of 12 to 24 months, when I've really started to see some of the areas that have been booming. And I'll cover those as I go through my presentation. But if you look at, obviously, the baby boomer and the sort of Gen X generation, it's very, very different makeup to what Gen Y and millennials are looking for. If you break down what Gen Y is said, you can see that globalization, economic stability, the emergence of internet. Like, this is from a generational perspective, said they grew up on the internet, they grew up online, they grew up in a world where, said when they, if you're thinking about from 1980, literally from the time they were sort of, let's call it sort of 17, 18, said mobile phones were from. Gen Z has just grown up in a digital native area, right? They've grown up social network driven. For Gen Ys, they can separate real friends between online friends. For Gen Z, that's different. That all sort of comes together, right? And if you look at what they want to consume, it's driven around experience, it's driven around festivals, travel, and it's driven around flagships, right? So it's key moments. And I find that really interesting. And then if you look at the way sort of Gen Z operates, it's also very different. But what's important about these trends that I think that makes a big difference is the actual spending power. So in the US, in the last couple of years, for the first time, Gen Ys have now outstarted this. Their consumption power has now gone beyond the baby boomer generation, right? And then if you combine Gen Y and Gen Z, the amount of money, the consumption habits that go from these two different groups has really started to transfer dynamics in a lot of different key sectors. And what's interesting is you're starting to see companies that were sort of stalwarts, sort of 10, 20 years ago that are actually just disappearing. And then new companies are rising and then taking over. And what's interesting is if you think about the way innovation works, is that and the easiest one to look at is newspapers as a perfect example. When the classifieds moved online, you watch the wealth that was created in newspapers transfer to the online platforms. But what's really interesting, the value is not actually equal. It didn't transfer to equal level. It actually went above and beyond. And the reason obviously being is that technology is an enabler. And I'll go through this when I talk about sort of business models and what's really driving the different areas in those models, is that it then creates more opportunities on the fringes. So for investors looking at what's taking place in this next 10 years, really what we have to be looking at is, where are Gen Y and where are Gen Z spending their money? What is important to them? What are they focused on, right? And and also the most important part, where you think to yourself, well, hang on a second, baby boomers and Gen X have actually been able to accumulate a lot of wealth, especially baby boomers. There's been incredible price rise in the value of sort of, whether it be home assets, the stock market, and so forth. Well, the reality is, when Deloitte did a study on this, they realized that there's nearly $24 trillion of wealth, and this is in the US alone, that will be transferred, right, over to millennials and over to Gen Z, right, over the next sort of 15 years, right? And that was sort of 5 years ago. So if you think about that, in the next 10 years, that wealth transfer is going to continue taking place. And what's important about that is that then drives those consumption habits. Okay, so next one is that, and I love this comment, because if you think about it, this is exactly what this is what most investors are starting to see now. The trend has been definitely driven out of Europe, and it's definitely coming through the US. We're seeing it now in Australia, and I know in speaking to Asian VCs, this is also what they're looking at. Companies should watch out for millennials when it comes to how environmental, social, and governance issues influence where they invest their money. And that's really important, because if you think about, so we grew up in the area of whether it be oil, whether it be, big oil companies to be giant, big mining companies, etc. Right? And if you think about the way millennials are consuming, I said it's very, very different. And what's also important is that those simple trends translate over to the way in which they consume. So for Generation Y, for Gen Y and Gen Z, access is important, not so much ownership, right? And these are not just related to areas such as cars or music or luxury. Said, effectively what it's done, it's created an entire new ecosystem of the sharing economy and also the gig economy. The other thing is Gen Y and Z are also a lot more entrepreneurial. So there's a much higher take-up rate in Gen Y and Z, also doing, sort of whether it be side gigs, whether they sort of drive Uber part-time or they're doing side opportunities, because they have that access to, right? They're looking for other opportunities. And for me, we've seen that. So you get to see, and also that comes into the business models where that access, not ownership, is that they're happy to buy things on subscription rather than owning them outright. And then you think to yourself, well, how does that relate to cars? How can that influence the purchase of cars going forward? How does that influence the purchase of houses going forward, right? And how does that, if that, in influencing that purchase of house, how does that then start to change the dynamics of different marketplaces? And then how does that change banking? How does that change financial services? And this is all the nice questions that I think is really exciting and interesting to have a look at, because these trends are unfolding in front of us. In fact, Singapore is really, the effort that Singapore is going to be a fintech leader is phenomenal, across a range of areas. So I love this comment, in that 25 years from now, car sharing will be the norm and car ownership and anonymity. And then you start thinking, I'll go through a slide on this, you think, okay, well, what sits on the side of that? What are those opportunities for investors? Wellness is a massive trend. It highlights that for millennials, wellness is a daily active pursuit. You see this. This is obviously, if you think about the way, whether it be Instagram, whether it be Facebook, whether it be TikTok, the area of wellness has become such a powerful area, and the world of influence has become important. And for millennials, tracking their health, tracking their data has become bright. I know for myself, I do it. I know most of my friends do it. So because it's important. And more than that, for their, so that brand part is important, because they want to associate with brands that are influencing that are in that area. And you see that in many different trends. And so the stat that's used up here is the percentage of 12th graders who create. It's just a simple stat, but it just gives you the idea of how much this is actually transforming. And said you see this in different diets, different habits, and they catch on incredibly quickly. And for most consumers, so for most, whether it be retailers or for online platforms, they have to adopt to this incredibly quickly. Okay, next one is environmental, sustainable, and good. One of the biggest trends that we're starting to see come through right now is ESG. Right, and that said, in Europe, it's obviously quite significant. Said it's really coming through in Australia. In fact, there's a lot of ETFs that are really being built in this area. You're also seeing it in the US, and also, as I mentioned now, more and more Asian VCs are also starting to have this discussion around ESG. And one of the easiest areas to look at is electric vehicles. Now, to look at this as a stat, and this is also from Deloitte Insights, the global EV forecast is for a compound annual growth rate of 29% over the next 10 years. And they expect that EV sales will grow from 2.5 million to up to 11.2 million in 2025, and then reaching 31.1 million by 2030. What's interesting about this is there's now governments around the world that are actually legislating that by 2030 or 2035, that certain states or certain countries will not be able to sell internal combustion engine cars from that point forward. The potential in EVs is massive, and you're seeing this reflected in some of the leaders in. Obviously, Tesla's the one that's captured the market attention, but you said China, you obviously got NIO, and there's several others that are sort of building electric vehicles. But really, as an area, you could just see that the opportunity for investors going forward is not just the cars themselves, but every part of the actual process, whether it be the logistics aspects, whether it be the batteries, whether it be the battery cells, whether it be just the entire infrastructure related to it. I said, when sectors have become favorable, effectively what it does is it lifts the entire area. There's a great saying that a rising tide lifts all boats. But the EV area, and you can see that adoption is likely to actually be far more aggressive than what most people are expecting. I said, whilst these are the stats that Deloitte are putting out, you're likely to see that adoption, I said, given that it's been mandated and been put into legislation by countries, right, and by states, it is likely to be a lot quicker as more and more states and more countries also look to mandate that, right? So as I said, that's the total forecast from 23.5 million, right, and to transfer, 11.2 in 2025, and then to 31 million by 2030. Now, the other one that we're really seeing that's coming on quite strong is plant-based protein. And once again, this is driven by the consumption habits of Gen Y and Gen Z. Right now, this is a $4.6 billion industry. In 2030, they expect that to be an $85 billion industry, right? And said that area of, environmental, sustainable, and good just rings so true in this as an area. And now what you're seeing is food scientists is becoming such a key area, right? And they're coming up with more and more creative ways to actually have plant-based products rather than traditional meat proteins. Because obviously, as in sort of Western countries, the consumption of protein is far more significant than in third world countries. And as countries move to more protein-based diets, they're trying to introduce more plant-based. So it's got to be one of the biggest key areas going forward over the next sort of 5 to 10 years. One of the biggest, the actual biggest trend that we have seen in Australia, and this one, I suppose it caught everyone by surprise because at the time, a few years ago, there was no VC investing into this area. This is one of the ones that we've really seen it driven by the capital markets. It's the buy now, pay later space. And what's interesting about this is, and you see some of these headlines that come up, is that buy now, pay later basically heralds the credit card bloodbath. Credit cards are what all we knew. It's what we grew up on. And you think to yourself, but what problem is it actually solving? But at this point, it actually doesn't matter, right? Because effectively, Afterpay, which is the leader in Australia, has a higher value than Telstra. The largest telco company in the country, Afterpay now has a higher value than. And if you look at what buy now, pay later does, just to give you context, a lot of Gen Y and Gen Z use it. And effectively what they're doing is if they're going to their local retailer and let's say they want to purchase something for $200, instead of that $200 being paid up front, what it does is it gets paid through something like Afterpay and they can pay it off over 4 payments. So they don't have to apply for a credit card. They don't have to do anything. And the owner of the product, the merchant that sells it, they wear that cost, right? They wear that cost of the fee that gets charged by the buy now, pay later platform. In Australia, we've seen companies that literally just stick their name pay onto it and are dominating in this area. In fact, there's US companies that are now listing in Australia because this has become such a big area. Incredible amounts of wealth have been generated off the buy now, pay later space. And to give you some perspective, Afterpay is now worth $37.1 billion. They listed on the ASX in 2015, 2016. Right, to give you some context what that looks like, basically from Bank of America, they expect the buy now, pay later area to grow by 10 to 15 times by 2025 to eventually processing $650 billion in transactions. Tencent actually invested into Afterpay. Right now, I don't know if this is caught on in Asia yet, but you're starting to see it now more in the UK. Afterpay has expanded aggressively into the US, but this is what Afterpay share price has done. It literally went to as low in March this year, in the end of March when COVID started to hit, it went to as low as $7. On the weekend, it finished at $133.15. Absolutely incredible. And obviously all the questions about it defying gravity and, when will that bubble pop and so forth. But the reality is they've managed to do it in such a way that it's not only us, but there's about 6 or 7 other different companies in this area that have also got incredible growth rates going through it. So this is a perfect example of how consumption trends from generational are actually driving the stock market quite significantly, right? So I'll give you my mentor's lesson. There's basically two different companies, and my mentor had a great lesson for me. And basically what it was he was looking at these two, he had the opportunity to invest into 2 different businesses. And I'm not going to mention which one actually invested into, but gave me an analogy that when he looked at the 2 different businesses, and I said, this will help you understand the thinking from an investor perspective. He said he looked at putting money into one of the businesses, and that company had, I think it was something like 70 or 80 staff at that time, right? And out of that staff, they only had 3 or 4, they had 3 or 4 engineers, and they had 80 team members altogether. And then the other company, right, they had 25 engineers, and they only had 4 business development people. And what's interesting, he asked them, which one do you think I invested into? And it was the latter. Now, what's interesting about that is that what I learned from that as a story was that when looking at opportunities, the beautiful thing about platforms that are technology driven is the scalability potential, because technology is infinitely more powerful to scale than humans, right? Now, obviously, the Industrial Revolution was driven by human output, right? Where now technology output has taken over as far as the way in which investment should be thought about and how they're thinking about investing their money. Because the beautiful thing about technology is that there's opportunities not only to scale, but also to significantly bring down costs. In fact, as the business scales more, you've got the opportunity to reduce, to basically increase margins with that scalability. But more than that, what they're building effectively is platforms. And then on top of those platforms, there's opportunities for additional products. And if you look at Amazon, that's exactly what they've been able to do with their business model. And what's important about that, when you talk about that scalability and you talk about technology, you talk about how it's driven. Now, I learned this from ARK Invest, and if any investor, sort of watching this, I highly recommend the ARK Invest content. I've personally learned a lot from it, and it's also helped me shape a lot of my thinking. I love how they look at Wright's Law. Basically, Wright's Law looks at, effectively started from Theodore Wright, and he observed that when aeroplanes were doubling their production, what happened was that their labor requirement reduced by 10 to 15%. Now, what's interesting is we've actually seen Wright's Law translate over to a lot of new sort of innovative technologies. And if you look at the adoption curve, this also forms part of that. So as production increases, right, the actual cost of production decreases, right? And when you're looking at these adoption curves, and if you're thinking about things like the electric vehicles, if you're thinking about plant-based protein, if you're thinking about buy now, pay later, right? This is typically the cycle that it actually goes through, right? Where you've got your innovators, you've got your early adopters, you've got your early majority, and you've got your late majority. But where the opportunity for investors is to discover these trends early in this stage, because there's so much significant upside, but this part scales incredibly quickly. That part from the early adopters to the early majority scales incredibly fast. And if you're looking at Wright's Law, then also what it's also these companies are doing is when they get their model right in this component, the profitability following on from that is quite substantial, and the margins are as well. Said renewable energy is a perfect example of this, because now prices have plunged to the point where it's actually cheaper now for wind and solar power than it is for fossil fuel generated electricity, right? Which also creates another opportunity in the storage area. Sequencing genomes. This is the most fascinating one for me over the last few years that I've really started to delve into and got excited about. Because obviously everyone's focused on software from how we can leverage it online. And what I love about genomics is it's really, I suppose, looking at the software and the software of the coding of the human body and how you can fix issues related to that. So if you look at this, effectively, in 2000, the cost to sequence a genome was $1 billion. It's now down, right? By 2020, it's down to, sorry, I got the wrong date on it. It's down to $1,500. The substantial drop is absolutely phenomenal. It's actually gone below Moore's law, and this will get even lower. But what does that mean, right? Because it effectively creates opportunities in that area, and I'll sort of talk about that a little bit more. But all this relates to the generational trend, but also the adoption of technology itself. Because when you're thinking about it, you think, okay, well, how does this actually play out, right? And said that's when you go back to these adoption curves. Because whilst we can observe the trends now, you can start to understand why it becomes such a significant opportunity. Even online versus retail, it's funny when you think about, I can't remember, I heard it was a stat, it's something like still only 25% of purchases are online, right? It's amazing to think that even after all this time, the dominance of players like Amazon and like all the different online retailers, and still that's the only percentage. Now, what I like to look at is the problem we didn't know we had. I love this as a slide because it effectively helps understand, right, that Blockbuster was absolutely destroyed by Netflix, but in 2009, they had 9,000 stores around the world, right? And they were absolutely decimated over the next couple of years. And you think, how does that happen so fast? Obviously, with taxis, it was Uber and Grab have been able to get substantial chunks of those different sectors. The reason is markets move towards efficiency. They move towards solutions which save time, save money, and improve that efficiency. Technology plays a significant role in enabling that and also creating the adoption of it. But more than that, the upside for investors, if you look at what Grab was just a few years ago compared to where it is now, right? And that's where you start to see that transfer of value and that transfer of wealth really take place. AI and deep learning over the next couple of years, you can see by 2023, they expect that to go up to nearly $100 billion investment in AI. And for me, this is obviously another exciting trend that a lot of VCs are looking at. Most technology companies now are looking at implementing machine learning or AI into their businesses because, and deep learning has become an exciting area because it's like, how can intelligence be inspired by the human brain? And then what other different ways can that be? What other ways can that be empowered? Genomics, there's obviously lots of interesting areas like sequencing, gene editing, gene therapy. Like the idea of being able to take, a baby born with some sort of deficiency and being able to edit that gene, to actually, improve that or to fix it, is years away. It's closer than what people first imagined. There's trials going on with this at the moment, and it's just astonishing. We've got a company at the moment called Atom Project that's actually printing 3D bones. Astonishing. Renewable energy infrastructure. This is $1 trillion opportunity going forward as far as, obviously, renewable energy is powerful. There's two issues they need to solve. They need to solve the storage of energy and they need to solve the directional capacity of energy as well. One of the biggest challenges is energy typically can only go one way. So, when we've got a client that we're working with where they've been able to solve that, where they can actually send direct energy forward, right, as well as back. So if, for example, if energy is at maximum, if storage capacity is at maximum, it can actually send it back to the original source. And that's another area. So energy, directional, and also the storage of energy. But really, the power for disruption in this area is, once again, $1 trillion market. Crypto, I put this in because I know how big crypto is in Asia, and obviously I've got a lot of friends that are in the space. We all know how much it has grown in such a short period of time. And you can't, like, if you think about what this could be over the next sort of 12 to 24 months as it goes back into its bull market, crypto is absolutely changing the way people are looking at sort of different parts of financial services, whether it be decentralized finance, whether it be cross-border transactions, whether it be, digitizing currencies. All this has taken place, because of initially the launch of Bitcoin, right? But these technological trends are not going away. In fact, if you look at the actual history of money, at every single stage is getting closer and closer to light. It started out as something physical and is now moving to something that can be transferred at the speed of light. 3D printing, as I said, incredible area. There's a company that we work with, I've put it in the logo, called Atom Project. I highly recommend to check it out. I said, when I first saw them, I thought, I can't believe these guys have figured out the model for printing, for 3D printing of limbs, right? And said, really impressive what they've been able to do. And they've got some impressive sort of Defense Force related people behind sort of working with them. So the final part I want to mention is that, the rising tide lifts all boats. When you're looking at these opportunities, it's very easy to look at the companies leading the charge, like Bitcoin, like Airbnb, like Uber, etc., like Amazon. What people are forgetting is there's massive opportunities that are created all around that. So, for example, financing. We're seeing that now in crypto with financing, right? Hardware comes an opportunity. So with finance, for example, there's a company that's doing incredibly well in Australia where what they're doing is they're financing Uber drivers to basically get vehicles because they know how much volume of traffic, how much revenue each car can produce. It makes it sustainable for them to be able to do that. So finance models are created around these new business models. Hardware, there's hardware opportunities, there's software opportunities, there's logistics opportunities, there's services, there's support, there's raw material, there's infrastructure. Think about Bitcoin as an example, right? From Bitcoin alone, not only is there thousands of different cryptocurrencies, but there's whole areas, whether it be the exchanges that are providing the different services, whether it be the hardware that's basically holding for cold wallets, whether it's the machines that they're using for the mining of Bitcoin. So there's all sorts of different infrastructure that gets built around that, which also becomes an investment opportunity for investors. So whilst you look at that one factor, then the question starts to go, well, what are all the different areas that are going to be rising as part of this? The other part that I find really interesting, and this will also learn from my mentor, the job is, how do you aggregate one side and then how do you commoditize the other? So when you're looking at businesses and you're looking at the models for the future, marketplaces, platforms, and subscription-based models have all led the charge over the last few years. This is what investors have been looking for their investment opportunities. They're looking for marketplaces, they're looking for platforms, and they're also looking for subscription models. The reason why is because it provides obviously recurring revenue, but it also, once that customer is acquired as part of the marketplace, when they on-sell ancillary products or other offers to them, there's obviously significant margins in that. Neobanks is a massive area that's coming forward with this as an actual opportunity, right? Tesla's doing it incredibly well as well. Not only are they selling cars, but they're also selling software at the exact same time, right? They're building software for energy retailing as well, right, with their AutoBidder platform. So there's lots of cool stuff that's coming in the marketplace that becomes an opportunity for investors. But from a business model perspective, these are the models that are really driving the sort of thoughts of what investors are looking to invest into at the moment. And, just as we go on to the last part, I just thought I'd quickly mention, obviously given that obviously this is an investment conference, we're actually hosting a large sort of venture investment conference this year. Actually, Ken is going to be one of the speakers and panelists as part of that. And I just thought we'd give the opportunity to people to come along to it. There's no charge for investors to come along. Everything we do is about trying to help investors get access to companies at the early stage, especially, obviously most of you are focused on the listed markets. The venture space is quite unique. Obviously, it's a higher risk area. but it's fascinating to see the innovation and to see the trends that are coming through from the space. So that's it for my presentation. Thank you so much for your time. I hope you enjoyed the session. I hope you sort of enjoyed what we're seeing from an innovation and from a disruption perspective.
Thank you, Steve Torso. Wow. Do you know what I was busy doing just now? Taking notes, yes. So many of you are looking at the future trends, and I'm also looking at the future trends and where it's coming. So I'm going to support you a little because Steve gave a really big picture, if you realize, about something that Clive also have actually done. Okay, so I'm going to merge a few things. Can I show my iPad? All right. Okay, so in how I'm going to consolidate your learning in putting it into action. This is what I'm going to do. As you can see, just now I've shown you the mind map, and I'm going to build on it in terms of the mind map under the part on this part. Okay, sorry. This is the one that I will give you. I know some have. Okay, as I promised, it's not finished yet because today the conference is not over. I'm still building on it. So which is the beautiful thing about having this seminar, right? It's not just about listening to the speakers, but as I mentioned, I need you all to put it into opportunities whereby you can take action. Execution is very important. So let me just consolidate what Steve have actually mentioned. So he actually talked about this part in terms of the future. So I'm going to go back, building on what Clive have actually given us on the first day, which is on the future trends, on healthcare, on the graying population, on the technology, as well as the consumer behavior. If you can see, they are the same as what Steve is actually mentioning, but Steve built on it. Build on it on something that's even more. Because we talk about the graying population. In the graying population, yes, we talk about healthcare. However, there's this part that he mentioned regarding timing. So when we look at consumer behavior, we look at in terms of healthcare, it's not just about the baby boomers. Don't forget, there are also one big component, which is the millennials, right? So this is where you mentioned about this thing on what we term as the consumer behavior. Okay, so when we talk about this consumer behavior, we are not just talking about so-called the graying population. Consumer behavior, the young people, they are the consumers, right? So we need to think in the consumers that's upcoming, the millennials. What is their consuming behavior like? This is where the trends is, because they are the ones who will be the future in terms of the spending power, right? Now take a look in terms of what we term as the timing. This is where you can see he actually mentioned quite a number of sectors, really. Okay, so how do you know whether you are going into technology, you are going into plant-based protein, you are going to EVs, you're going to renewable energy? Where are you going to focus on? Now, of course, go with a circle of competence. Which are the ones that you really know the best? Okay. Now, so with this, I'm going to go for a few. For example, in the V coaching, you would know that we have gotten into a few of the sectors in terms of the future trends when it comes into technology and the consumer behavior. EV has been the talk of last year, right? Yeah, the electric EV stands for, a lot of times they call it the electrical vehicles, but I kind of want to call it the intelligent vehicles, because in the Chinese, I love the Chinese wordings, they call it 智能汽车. I think it's more than just electrical. Okay, it is actually a smart vehicle that we are talking about. Of course, Warren Buffett has invested in one of it, like for example, BYD, right? So it's also a listed company. You have heard of Tesla. Okay, that one, everybody have been talking about it for many years already. But we are also looking at some of the upcoming in China. China actually comes up with quite a lot of these EVs. Okay, some of the maybe I can see in terms of the chat. Okay, what other brands you can think about? Especially China actually comes up with quite a bit, like for example, NIO, for example, Li Auto, for example, the XPEV, things like that. So look into it. So EVs being the trend, okay, biggest manufacturer, where are the opportunities? This is how you put into what our speakers are saying into your application. Okay, now, so this is one part. The second part, like for example, I'm just going to go into this part called plant-based protein. Why I want to go into this part? Because nowadays you have heard a lot about plant-based protein. So in plant-based protein, we would have heard of this. Let me go into my V app. Okay, in the V app, not this one. Okay, wait. Just now I was in my V app. Here, plant-based protein. You have heard of Beyond Meat. Okay, Beyond Meat is a plant-based protein. It is something which you can find in your burgers right now. The vegans, the vegetarians, I think they are taking it. Okay, so this is something that you can look into. Okay, plant-based protein. Where are the stocks and things like that? The ideas. Okay, just to have a disclaimer, I've got vested interest in Beyond Meat. Okay, yeah. Now, so this is also, I'm going to put into just now the 100 baggers. Okay, so now you know the trends, right? You know the trends in terms of the future. You talk about medical healthcare, and the healthcare is not just about hospitals. Okay, healthcare now we talk about DNA. We talk about nowadays there's a lot of this like life cycle and things like that. So new things about the health, wellness. Okay, wellness is a big thing. Like for example, yesterday I mentioned about Medifast. Okay, so I'm not going to mention about Medifast again. Wellness, right? So people are looking into how to have a good body, you know, in terms of health, in terms of physique, and so on. So now we go into plant-based protein. Now, in terms of plant-based, you have heard of Beyond Meat. And 100 baggers, remember, I said I will be showing you regarding where to find in terms of the ROIC, ROC, and things like that over here. Okay, so let's say we use Beyond Meat as an example. Okay, now, so based on what Steve as well as this Christopher Mayer have gone through with you, this is how you apply it. Okay, let's say you're going to plant-based, and then you're going to look at the numbers, and in the numbers, making use of the V app, you go into this place called income. Do you see this part, income? Okay, income. So over here, as you can see, my cursor is here in terms of income. You just scroll down. Okay, of course you can do your analysis over here. I'm going to show you in terms of the analysis in Beyond Meat and so on, right, as an example. Okay, it's not a recommendation to buy or sell, because you need to know a little bit more and study more. So I'm just using this as an example how you're going to apply it after today. Yeah. So do you see this part on return on capital on invested capital? Okay, so ROIC. Right, so this is where you can see they used to be on a negative, high negative, and slowly it comes back to positive. So they are actually turning green. This is what it is. It's a young company. Okay, so that's the reason why sometimes when you want to see companies that's young, see, in terms of timing, remember this is what he says, right? Timing, funding is also definitely needed, but it's on the lowest tier. All right, so that's why you can have to see whether in terms of their funding, in terms of the cash flow, in terms of their operational cash flow, are they strong? Okay, that's the first thing. And then after that, why we mention into timing is because it's not about timing into the market, you know, it's about the timing about, you know, in terms of the business, where is it at this juncture with the future trends that's moving on. That's how you come into play. Okay, now we know about this. Of course, it doesn't mean you have to invest now. All right, if you do not know, my humble opinion is, okay, for you to get to know more. All right, yeah, because when you know about the future trends, yes, there is the opportunity, but you have to remember to apply the 100 baggers. Remember, what is that portfolio you need to have? The coffee. Yes, coffee can portfolio. Yeah. So that is where I'm going back again, okay, to show you how to put everything together. Okay, so you have that timing, you know the big trends. And when you want to do this with a 100 bagger, always remember this thing on your coffee can portfolio. There are certain risks involved, but you know what? When it actually takes place, it could be your next 100 bagger. Right. So, ladies and gentlemen, have you learned something up to this point? If you have, can you raise up your hands? Okay, raise up your hands. Okay, yeah. We have more case studies for you because later on after the break, we are going to give you something else. But if you have learned something, Do you realize the difference between a V Summit together with the rest of the summit or the conference? Well, I would say what we want to make a difference in the V Summit is we are not just inviting speakers to share with you about the different knowledge. Most importantly, we want to make sure that they are applicable to you, especially the V Summit is actually built, is organized, conducted with you in mind, which means the man on the street who would like to do investing. So how do we translate those so-called the very chim stuff, right? When you talk about, wow, Steve Torso, he's talking about something that's probably beyond me. Now, when you talk about technology, artificial intelligence, or the future trends in the macroeconomics, I may not be able to translate it down to application. Now, the V Summit and V College, what is our strength and moat is we are able to translate what is in the future trends that all these experts are doing into something that you can understand and apply. So this is where if you find that V Summit is adding value to you, we have our V Summit on a yearly basis, okay? So next year, are we continuing with the V Summit? The answer is yes. It will be our 11th V Summit next year in January 2022. Okay, so for those who would like to find out more about the V Summit, okay, wait, let me show you, not this one, okay, let me show you. Okay, if you want to find out more about the V Summit, how can you get the tickets? Will there be special? The answer is yes, okay? So if you want to find out the V Summit tickets, all right, it's going to be held on the 22nd to the 23rd of January 2022. Usual price when we start to launch next year will be 149, okay? So ladies and gentlemen, as you know, normally when we first start, we would have a super early bird price, okay? So it's going to be US dollars $99. Most likely it's going to be virtual again. But the thing is this, I believe next year, okay, it will definitely be better. Why? By then, this time around, we have certain constraint because a lot of people can't come to our studio. We are constrained by the number of people, okay, who can be here to support in terms of technology and in terms of a lot of things, yeah? But next year, I believe the COVID situation would be much better, even though it's going on virtual, all right? We would have more in terms of the resources to support in our studio. Really, I hope really by next year, our speakers, you know, can really become everybody come here live and do everything live, yeah? Even without live, you know, they do the recording, we can still do a Q&A. You know what? Steve Toso is going to do a Q&A with you. How? We're not going to show him live because this is too much at stake. If you have questions for Steve, type it in the Q&A right now, ladies and gentlemen. Type all your questions for Steve right now, and Steve has agreed. Okay, he is going to reply all your questions. How is he going to do so? He is going to do a video for us. Yes. So this is what is going to happen. Type in your question for Steve, okay, in terms of, let's say you want to find out more about the future trends, about what he mentioned in certain things. Ask him the questions, okay? We will forward all these questions to Steve in Australia. What he would do is he actually wanted to come here live. All right, he wants to show behind me. Okay, but the key thing is this. I'm afraid if you show behind me, everything will just lag because it's going to be live in Australia and over here with a lot of things going on. Yeah. So I tell him, why not like that? We want to make sure that our users, you know, everybody get to hear it well. So what we are going to do is you type it in the Q&A. Give us some time, give Steve some time. We will post this in a few days into the V Summit bubble. Okay. So once it's up, right, you will receive it in the V Summit V app bubble. So, ladies and gentlemen, this is the beautiful thing about being in the summit, whereby, as I mentioned, it is not going to end in these 2 days. We are going to have more for you in terms of your learning. If you want to grab the tickets for early bird price for the, in fact, it's a super early bird price, okay, at $99 US dollars for next year. You can grab your tickets right now. It is going to go live on the 22nd and the 23rd of January 2022. And you know what? When you buy earlier, really, you normally get the best deal. Why do I say so? Like, for example, those who bought last year, remember it was only how much? I'm not going to disclose it. You know, you got a steal, right? Last year. okay, with all the full access. And the moment you see this year when it start to launch, you're like, wow, heng, I've gotten it at a really good price. So you can subscribe for this, buy the tickets early, right? And the beautiful thing is, if let's say you still can't turn up, right now it's on virtual, we can record it for you, and things can be done for you in terms of digitalization with the use of technology. Okay, so now it's 3:20, ladies and gentlemen. Let's go for a 15 minutes break. 3:35, let's be back, and we will have, yes, our lucky draw. Just now I mentioned lucky draw will be after lunch. We will have our finale draw as well as an additional prizes. I've actually started in more prizes for you last minute, okay? So please be back at 3:35 for your lucky draw prizes. See you soon.
On day one, I mentioned the idea of a comfort zone. I say that most people live their entire life stuck in this little box. And I challenge every single one of you to keep taking steps outside of their comfort zone. To let go of image, the fear of what people might say, the fear of what we think about ourselves. So that as we tear that off, remove that mask, we start to see and unleash to the world the true me, the true you.
Thank you for actually putting up your heart and soul and your body for the last 5 days. Okay, taking part in morning walk, breakfast session, afternoon session, and without saying all the activity that you have actually went through, that release your soul, okay, open up your mind, okay, and rejuvenate your spirit. This is not the end, this is the beginning. Very happy to see that a lot of you actually have a transformation and breakthrough.
The true reason I want to be here is to get out of that wheel. I'm the hamster that I don't even know what I want. And I'm the worst enemy of myself. I'm terrified of success.
To be honest, I'm not comfortable with to be in all this seminar. It's something new. I'm trying to get out of my comfort zone.
So what are you holding back? How long do you want to put on the front that everything's okay?
Ken, for the past few months where you have been conducting all the lectures, I got problem trying to catch up. And there's one action that actually I dislike you to do. That is to these two hands together and open. I really see nothing. And then now when you tell me to put two hands together, this time I really see things. So Ken, thank you very much for making this possible for me.
I think I am less nervous compared to last time.
Hello, everyone. I'm so grateful to have met you in IW6. I could really witness the expansion, your willingness to step out of your comfort zone and get in touch with yourself, your inner world. And I'm so thankful for allowing me to connect with you on such a deep level. Moving forward, know that this is just the beginning of your inner journey. And what I wish that you will bring back with you after this is to continue to listen to that soft inner voice within you. Take pauses throughout your day and find your inner wisdom.
Over the last few days, I've seen that over and over again. I've seen people embrace things that were uncomfortable, but still they went for it. I've seen people ask questions. I've seen people connect with each other in a very deep way. And I'm so proud of all of you. It's so wonderful to see the authentic you. I want you to continue this momentum, to realize that this is not the end, but the beginning. To realize that this journey continues on and on and on. These 5 days is a springboard on to the rest of your life. I want to see you again. I want to see you become more and more who you are, express more and more the authentic you. I can't wait to see the future and what it holds for all of you. I'm so proud of you. And the most amazing thing is this is only the beginning.
Happy to know you guys, and I hope we all reach our goal someday, and we will still remember each other.
Let's enjoy the journey together and let's be successful.
For the 99 US dollars in terms of the super early bird price, it will end today. Okay, so only today. Y'all know the drill. Okay, after that, unless probably there's some issues or whatever that y'all cannot buy. Okay, if not, it will be today and at 23.59, and for this special deal. And this special deal of the 99 US dollars will have all access pass. Okay, so we promise with the all access pass, as you can see over here, everybody's watching it with 3,000 people. I know my team members are looking at me right now because Ken said so. So I'm just relaying the message. So y'all better do it. When Ken is in the wrong mind, he will say all access. When he's in the right mind, he will say no all access. Okay, yes. So all access pass at US dollars, $99. Do it today. And you know, when even for whatever reason you can't be here live, you can still watch the videos. For those who ask for Steve Toso's slides, he didn't give us the slides because he straight away did it in a video format. Okay, so he didn't give like the additional slides. So what you do is just watch the video again. If there are certain notes you want to take down, just maybe take a picture while you are watching the videos. Okay, while you're watching the video, just take a print screen, a picture, and you can write down the keynotes. This is what I normally would do. That's why back to my iPad, I'm just going to do up the next part. And then we have our last speaker coming today together with Ken. And this time round, you can see in my mind map, and I'm going to tell you how to then, finish up this whole thing. You can see over here. Can I have my iPad shown? Thank you. Yes. So just now we have Steve who actually mentioned about consumer behavior in the future trends of the EVs as well as in the EVs, all right? So in the EV as well as maybe in terms of plant-based protein or in terms of renewable energy and so on. So you can see the key thing about here why we need to link up is this thing on the timing. And timing is the key factor which you might want to consider your coffee can portfolio to start off with finding your 100 bagger. And just now, this is Steve talked maybe more in terms of the the global effect. All right. So now we are going to zoom in down to Southeast Asia. Southeast Asia is a big market. It's a growing market, right? Especially like, for example, Vietnam, China, not China, sorry, Vietnam, in terms of, let's say, even the developing countries, Indonesia, all right? Not just Singapore alone in terms of Southeast Asia. We have even Myanmar, all right? Looking at all these countries that are growing in the next 10 years, the future trend would be over there. That's why in terms of technology development, okay, you have to see how to apply them in Southeast Asia country. And we are in Southeast Asia. Why not, right? So the next speaker, okay, in terms of the next speaker, he is Oliver Ripple. I asked you to do a homework. Remember that he actually comes from Naspers. And Naspers is the biggest shareholder of Tencent. So he definitely knows this is expertise. His expertise is in technology. Just now we talked about consumer behavior. Now we move to technology space, okay? So these are the two important parts. Tech investing in Southeast Asia. Let's welcome Oliver Ripple together with Ken. They are going to have a panel discussion to share with you more. Yes, I'm going to drag it a little because they need to set up in terms of the space, okay? So for those who want to get your tickets, you can still do so, right? Because we are going to invite Oliver, co-founder and partner of Asia Partners together with Ken. They are going to have a panel discussion and their dialogue, okay? Their dialogue will be on tech investing. Let's welcome Oliver Ripple and Ken.
Hello, everyone. Welcome back to this very special segment. I remember about 3.5 years ago, I was at tech event, and one of the panel judges or presenter really struck me as very smart, very intelligent, very calm, very cool. Have this aura about him. It's like, okay. And basically just feel like, it's tech, it's tech, right? And later on, I know this gentleman, his name is Oliver Ripple, right? And one of the amazing thing is he represented the company back then. It's called Nesber. Okay, and the first thing that came to my mind is Nesber sound very familiar, right? And it just occurred to me, Nesber is one of the largest shareholders of Tencent. I was like, oh my goodness. Okay, so finally I met somebody actually worked as a senior executive. In fact, one of the key CEO. Okay, for the business unit, one of the business unit for Nesber, and none other than my good friend, okay, and someone I look up to in the space of tech investing, especially in the private market. Okay, it's Oliver himself. So can you all welcome, okay, Oliver? Thank you. So Oliver, so maybe you want to do a quick introduction, although we know that the audience already knows some of your profile. Okay, what do you focus on the last 20 years itself, and what make you in a very unique position to actually share more about insight of actually tech investing, especially in the Southeast Asian market? Yeah.
No, thank you, Ken, and thanks for being here and being part of this V Summit. It's a real honor. I know that you guys have put a lot of effort into it, and this has really come to light now in a massive scale, given technology at the end of the day. So I'm glad to be here. So to give a short background to myself. So as you can probably tell from my accent, I'm originally from Germany, but I'm actually of half German, half Asian descent. My mother is from Korea, and she went to Germany, many decades ago. But yeah, my story is summed up, very briefly in I worked my whole life in tech, and mainly across now 3 firms, 2 before I co-founded Asia Partners with a terrific team here based in Singapore. So I spent about a decade at eBay, the large e-commerce marketplace across Germany, where I'm from, obviously. And then in 2004, I left Germany for good to move to Asia. And I joined eBay China's team, spent 2 years there, then moved to Korea, spent a year there, then moved to Southeast Asia in 2007. And was responsible for market expansion of eBay into Southeast Asia.
Wow.
And one of the companies that I actually partnered with was a company in Thailand called Sanook. And Sanook was actually owned by Naspers. So I realized that there was sort of like a Thai management layer, and then behind that Thai management layer, there was like a South African ownership layer.
Okay.
And I thought like, okay, what are these guys about? And that's how I got to know Naspers. And Naspers, I joined them about a decade ago, or actually now 12 years ago. And Naspers, as you may know, is a large investor and operator of tech businesses around the world, especially in emerging markets, and obviously is known especially for its large exposure at Tencent. Naspers today, owns 32% of Tencent, so quite a big chunk.
How much do they invest in Tencent early days? It's what, $30 million?
Something like that. It wasn't a lot. It wasn't a lot, especially if you think about valuations and investment dollars today.
Yes.
And that was a long time ago. It was actually in 2001.
Wow.
That Naspers invested back then in Tencent. And then more than having the foresight to invest in one of the juggernauts of Chinese tech today, it was the foresight to actually hold on to that investment.
Wow.
And to see it all the way through a successful IPO. And then international expansion, WeChat, you name it, right? The rest is history. And Tencent was one of the earlier investments that Naspers did. And when I came on board, which was 2009, that's when we started to aggressively invest into e-commerce. And e-commerce, with my background and background of many of my colleagues, became basically our prime investment target. And that included e-tail, marketplace, online travel, you name it.
Yep.
And for Naspers, I was responsible for various regions around the globe. I was responsible for Africa and Middle East for a while, then India and Southeast Asia. Latin America was also added at some point. And then for the last 4 or 5 years of my time at Naspers, I was the global CEO of a segment that we called B2C e-commerce, which included all the e-tail, B2C marketplaces and online travel investments that we made or businesses that we ran ourselves.
Yep.
And the one business that you may have heard of was a business called Flipkart.
Yep, very well known in India.
Very well known. It's basically the leading B2C marketplace there.
Yep.
And Flipkart was a nice end-to-end story for me as a private equity investor, given that I was responsible for every single check that we wrote to the business, and then also sitting on the board and navigating from our perspective, through our exit. And we made a nice 1.6 billion of gain out of that transaction.
How much?
1.6 billion.
Wow.
Yeah.
Okay. So you guys, you're talking to the real deal here. Huh? These guys are actually day-to-day professional, looking at actually private companies, and when they're very small or they're growing, okay, able to have the right foresight and experience, able to have the stomach to take the risk, pull in the hard cash in, right along the growth of the company, and eventually make a good return. Okay, so thank you. Wow, I think that really earned the right. Okay, and really want me to actually ask more questions about this, right? So now, and what can we learn in the Southeast Asia from studying other tech ecosystem in China?
Right. So to just finalize the story from our perspective. So I retired from Naspers end of 2018.
Correct.
And then with a terrific group of co-founders, including Nick Nash, who previously was with C Group and actually led the IPO of C at the New York Stock Exchange.
Yeah.
And another terrific group of other co-founders, from Southeast Asia. We started Asia Partners beginning of 2019 to look specifically for opportunities in Southeast Asia. And what's interesting about Southeast Asia, and that's why it makes sense to talk about China in that sense as well. If you look at emerging market tech investing, there's a concept called time machine investing.
Time machine investing.
And what that means is that actually tech evolves quite similarly across the globe, just at different points in time. And a good sort of like proxy to see when will a tech ecosystem pop in the market is actually to look at affluence. And you can take a proxy like GDP per capita to look at affluence across different markets. And when markets hit a certain sort of like period of affluence, some magic is happening from a tech perspective. And given that China is exactly 10 years ahead of Southeast Asia in terms of affluence, you can actually, almost like a movie trailer, look at what happened in China 10 to 15 years ago and draw certain lessons for Southeast Asia.
Wow. Could you give us maybe a more concrete example on this? Like take example, let's say Vietnam. So is Vietnam development right now is like maybe 15, 20 years ago China?
Yeah, so Vietnam is probably still, from an affluence perspective, a bit earlier stage. The bellwether for us in Southeast Asia is Indonesia. Indonesia is about a decade behind China from an affluence perspective. So you can look at what models in terms of tech business models are big now in Indonesia, and in many cases they started to become big about 10, 15 years ago in China. Good example is e-commerce. Another good example is online education, and many others. And from that perspective, we can actually deduct what are the models that have worked out well in China that already led to public companies, large traded, successful IPOs, and stock that you guys trade every day. And what are still the white spaces in a market like Indonesia or more holistically Southeast Asia? And from that perspective, us as investors collectively can think, there should be a big company here, but there isn't yet. But if sort of like China is a good basically blueprint, over the next few years, we should actually see a listed company in that particular sector in Southeast Asia as well, given the precedent that we've seen in China and other markets.
And is that one of the key reasons why you and your co-founder Nick Nash, saw the opportunity? There's a niche in looking at actually this Southeast Asia tech company. That's why I formed a company to actually help investors to actually capitalize on this opportunity and ride on this growth because of this time machine kind of concept.
That's right. That's right. We believe that there should be over 20 unicorns or more, tech unicorns that are listed on reputable, respectable public exchanges coming out of Southeast Asia over the next few years.
Wow.
And we want to be part of that investor ecosystem that helps those entrepreneurs and helps those companies to go all the way from one market to 6 markets, from 1 business model to 3 business model, from hundreds of people to thousands of people, and help them to ultimately ring that bell, because that's what it's all about for entrepreneurs. They want to go to the New York Stock Exchange. They want to ring that bell, same way as Forrest and Nick has done, with the C.
Yes, and C has been doing very, very well. In fact, after they got listed. Yeah,
that's right.
So, what is the key factor that allowed these Southeast Asia companies to able to win over like US first mover company like Uber versus Grab, Alibaba versus Shopee, GrabFood versus Foodpanda?
Right. So actually, if you look at, and this is an interesting exercise, you can do that at home. You can look at every tech company in the world, and you can put those companies in one of 3 buckets.
Yeah.
So bucket number 1 is what we call global network effects businesses. So, and it should be no surprise to you or anyone listening in that the Google of Thailand is Google, and the Facebook of Indonesia is Facebook, right?
Yeah.
And the WhatsApp of Singapore is WhatsApp, right? Yeah. So these are businesses that are mainly coming from Silicon Valley and that have strong what we call global network effects. And we stay away from those companies in Southeast Asia as much as possible, because that would be really a tough, David versus Goliath race to try to compete against those guys, right? Then there's a category number 2, gladly not that much of a factor here. That's like when the regulator unlevels the playing field and makes it difficult for international companies to compete, right? And arguably, you could say the Baidu of or the Google of China should have been Google, or now it's Baidu, right?
Baidu,
so
yeah.
Anyway, so I leave that up to you guys for interpretation. But the good news is for us in Southeast Asia, that's by and large not a factor. Markets are relatively open.
Okay.
Which leads us with category 3 or the bucket 3. And these are what we call local network effects businesses.
Local network effect businesses.
Yeah. And these are businesses that have some form of local installations because they plug into local supply chains, local logistics. They need to rely on local merchants, local payments, local hotels, you name it. And for those businesses, looking at all the data and analyzing actually a number of those for Southeast Asia and for other markets, it's usually the local guy that wins versus the global guy. Why? Because the local guy is usually much more effective in terms of localizing it to the local taste and making sure that there's a true product market fit for the offering, relative to what the global guy is doing. And I mean, you mentioned a lot of examples, right? But just to name some of the obvious, right?
Yep.
Uber was kind of like a first mover advantage here in Southeast Asia, if you recall. But Uber didn't really figure out how to do 2-wheelers like Gojek did in Jakarta, right? Although that's the main mode of transport there, the main mode of ride sharing. Uber for a long time also didn't really like cash payments. Because in markets like the US and Germany and Australia, it's all credit card, right? So it's not like that they don't have these insights, but often these insights from a product roadmap perspective compete with all the other projects that the other country managers are demanding. And often an emerging market gets left out or it's sort of like deprioritized. And that gives local companies an opportunity to really jump in there and get to sort of like a market leadership position, even though they're sometimes late starters to the race versus the global guys.
So eventually Uber had to actually do a compromise with Grab and actually exit the Southeast Asian market, but take a stake in Grab, and vice versa, Grab also take a stake in Uber.
That's right. That's right. And we see it more and more. Like a good example are also the Chinese strategics. Often they started first to enter the market organically. You may all recall like the big push that Taobao had in Singapore and AliExpress and all of that, right? But often that actually was much more difficult for them to do than to at the end of the day just buy Lazada, right? in the case of Alibaba, right? So many strategics have actually change their strategy to invest more into later stage private equity companies, or to outright buy those companies, and then those companies like Lazada become like the Southeast Asia footprint for a like global giant like Alibaba.
Okay, so now turn the coin around, right? So let's focus on actually how would this Southeast Asia local player then able to grow across border and able to grow overseas?
Right. It's a very good question, because ultimately, I mean, let's not fool ourselves. It's not easy to do.
Yeah.
And if you think about Southeast Asia and you compare it to China, India, the US, it's not one market, right? It's not like one country, one language, one currency, one culture, right?
I know that pain. I know that pain because we have been growing to different market. Wow, you're right. You're totally right.
That's right. So there is a what we call like a great filter. Companies that don't manage to go beyond their home market.
Precisely.
And that's a fact of life here in Southeast Asia. The good news is, once you look at companies that are already effectively in 2-3 markets in Southeast Asia, they've figured something out. And often the playbook looks like this. You have a Singapore headquarter. You have a development center in Singapore or Vietnam.
Yes.
Right. And maybe even China or India. And then you sort of like hire a bunch of country launchers that go, systematically into the other big population-rich countries. Indonesia, Philippines, Thailand, Vietnam, etc. Plant the flag. And over time, you build local teams. And it's what we call the inverse pyramid. Again, the difference to like a global network effects business is most of their people are actually sitting in 1 or 2 air-conditioned buildings in Singapore, right, for the region, right? And that's if you look at a Facebook, if you look at a Google, etc., right?
Correct.
But for these local network effects or regional network effects companies, most of the people are actually in the field. Yeah, they are in the country, in sort of like on delivering products, being in the warehouse, doing customer service, etc. So that's again like something that the global companies don't really like to do, right? So it gives the local companies an edge there.
This answer really a bit freaked me out, because you just describing our growth path right now.
Right.
Exactly the way you actually say it. Wow. Okay, serious. So now, would this in that case, would their growth be stopped if they couldn't grow beyond further than Southeast Asia then?
Well, I mean, the good answer to that is no. So I mean, the Southeast Asia, I mean, if you just look at the numbers, it's 9% of humanity. I think 10 or 11% of the young people that are on the planet. It's a big region, right? With a very large and growing middle class, right? So, I mean, for me, the killer argument is always like, look at C. Like C is now, I don't know what the latest market cap is, but north of $100 billion.
Yes, correct.
With basically a Southeast Asia strategy, right? So these markets here are large enough to produce large winners. If you look at Shopee's GMV, which they disclose, right? That's like very large, approaching 10 billion on a quarterly basis, right? So from that perspective, you have ready markets now, and even and now during the pandemic, and with all the human tragedy that we've had, actually for tech, it led often to an acceleration of adoption curves, right? And all of a sudden, I mean, we all know the stories living in the region that, we have senior citizens, using Redmart or using Prime Now, right? And just think about a year ago.
They will not touch it.
They will not touch it in 10 years, right? So from that perspective, it's a very interesting point for tech in the region. Big enough markets. Now we have actually a network of great entrepreneurs. Many more investors that are venture investors and growth equity investors like ourselves funding those companies. And adoption curves on the consumer side that are actually rising. It's a good time to be in tech.
Interesting. Your company itself fund the growth stage of the private tech company, and your ticket size usually is about, we are talking about like what, 20-30 million and above, right?
That's right. Yeah. So the way to that, just for your interest, the way to divide up the private equity ecosystem in Southeast Asia, and to be frank, anywhere in the world, right? That's the usual terminology that you will face. Is you have what we call like seed stage investors. They come in with maybe a $10,000 or $500,000 check, and it's basically just an idea. and a good entrepreneur. And often these are family offices, these are individuals, high net worth individuals, etc., that are funding those businesses. It's usually not the best strategy for kind of like smaller retail investors, because to be honest, the execution risk is very high for those companies in order not to make it, right?
So they have to invest a lot of them, right?
They would have to invest in a lot of them. And you have sort of like certain so-called like seed funds or angel funds, etc., that do a lot of those investments systematically, right? Across the region or the world. Then you have the venture capital ecosystem, and these are sort of like checks between 1 million and all the way up to $20 million. And this is sort of like what you always hear, the Sequoias of this world. And in Southeast Asia, you have a lot of sort of like regionally grown firms like Django Ventures, Golden Gate Ventures, Open Space Ventures, Monks Hill, etc.
Correct.
So they are basically funding often what is called Series A and Series B companies. So when a company is trying to establish or has established product market fit, mainly in its first market, around the first sort of like customer cohorts, right? And then you move sort of like one step further, and then you get into the growth equity stage, which normally is between, let's say, $20 to $100 million. And this is usually when company is scaling rapidly, right? Going into new markets, going into new business models. And usually you have already monetization established. There's a much more stable financial profile. You know where you're going at the end of the day, right? And then you go to the late stage or pre-IPO stage, which is like where the big boys and girls play, right? This is the world that Nick and I come from, right? That's like the General Atlantics and Naspers of this world, or Temasek or TPG or KKR, you name it. It's actually quite an established ecosystem in Southeast Asia as well. So once a company seasons and matures to that check size range, there's usually a lot of demand, right? Because then it becomes a much more foreseeable story also towards an IPO.
So that's but for the growth stage investor side itself, there's not a lot of company actually willing to write that ticket from 20 to 50 million kind of ticket size before they reach to that pre-IPO stage, right?
Right, and it's logical, right? And it's actually exactly how China evolved 10 to 15 years ago. It's first an early stage venture ecosystem gets formed, and that sort of like makes sure that all the entrepreneurs that have great ideas that want to start companies get funding, right? Once those entrepreneurs and companies get bigger, then you have a need for more growth equity. So usually there's a lag between like the venture ecosystem forming and the sort of like growth equity ecosystem forming. And then once you get to the late stage, that is usually already there. Because these are the guys that also fund real estate, infrastructure, energy projects, etc. And these are usually global firms as well, right?
Guys, are you listening to this, right? I'm not too sure about you, but I'm actually learning a lot here, okay? So now let's talk about actually those companies before they reach to the GIC or pre-IPO stage, right? What are some of the things you notice about the challenges that this company faces, right? Is it from the big boys? Is it the talent? Is it government? Is it culture? No, what is the main challenges that you see commonly they face?
So, I mean, talent is basically the most important challenge and opportunity that a company can face in its lifetime, right? And usually what you have is you have let's divide it up into tech-related talent and non-tech related talent, right? On the non-tech related talent, assuming the founder is tech or non-tech doesn't really matter. But once you go bigger, you need to build up the right, kind of like hierarchy, the right org structure, so that you as a founder don't have to do things all on your own, right? So you don't want to get into a situation where you are the limitation to the growth of the company. Right?
It becomes a bottleneck, right?
That's right. Right. And I'm talking about functional talent. I'm talking about country-specific talent, usually across like a quite distributed workforce across the various markets in Southeast Asia, right? So that's a leadership challenge that companies have to overcome. And then you have the tech-related talent, and that's to be very honest and fair, that's still a big challenge in Southeast Asia relative to what we're seeing in China or India. Not enough engineers. By and large, right? So, and the engineers are pretty much clustered around markets like Vietnam, Singapore, etc. But entrepreneurs being entrepreneurs, they get very very creative around that. So what we have seen is many tech companies in Southeast Asia build out engineering hubs in India. They build out engineering hubs in China. They're trying to overcome that talent shortage by going further out, venturing further out of the Southeast Asia equation. And also over time, that gap will get filled. It's just sort of like still a bit of just a timing mismatch there. So talent is a big category of challenges that a company has to, or a founder has to address successfully. The second challenge that a founder has to address is sort of like the scalability challenge, right? It's somewhat related to talent. How can I effectively go from, as I said before, 1 market to 3 markets to ultimately 6 markets? How do I build out those structures? How do I get the right service providers, advisors on board for the various markets? How do I structure that across the various markets from a legal structure perspective? And then maybe, look, there are many more to talk about, but just to name one more cluster, right, of challenges that a founder has to deal with is also like, how do I strengthen the internal structures of the company with regards to governance, with regards to the right checks and balances, the right control structures, the right board governance structures, because ultimately you have to think about those companies. They have to, at the end of the day, become public companies, right, over the foreseeable future. And it's usually too late to start thinking about that when you are about to go IPO, right? And actually, if you want to sleep well at night, you want to have that in place as soon as possible, right? And that's something that us as investors, other sort of like experienced investors, are also helping companies think through.
So in fact, what Oliver just mentioned, right? I think it's not only for those growth tech company. I think it's for a lot of actually companies that are listed. They also face the same issue, that where they grow to a stage where they find that the main market is saturated. They need to move beyond their actually main market, and the moment they move beyond, they step out of their so-called circle of competence. Okay, that's where they face a lot of uncertainty, and there will be project of actually certain risk level they never knew that existed. Okay, and maybe they couldn't form a team that is actually capable enough to actually bring them, okay, and actually grow in that new area itself. So that's also always there's a risk. So audience that is actually reading this, right, this not only apply to actually private companies, this also apply to the company that listed that we look at. Okay, because just think about it, right? Either the day the company stop growing, the day the company die.
That's right.
Yeah. So what Oliver mentioned is really relevant to actually listed company too.
It's a risk and an opportunity, right? Because it also led an Amazon to AWS, right? And it led Google to many other interesting business options, right? And Facebook is also a master in that, like with mostly acquisitive, but what they've done with Instagram, WhatsApp, and so forth. But yeah, you have to. There's a certain degree of failure. Because of, as you said, you're venturing out of your proven path to a certain extent.
Precisely. And interestingly, recently there's a lot of talks about unicorns or future unicorns. Especially last year, we see the US market, right? Wow, all the US tech company IPO come out first day is popped by 100%, 50%. And this company is like, the moment they list the company, they become a $1 billion market cap or multi-billion dollar market cap. What's your take on this? On the unicorn and future unicorn?
So firstly, I don't actually like the term unicorn. I like it when I play with my daughter, right? Then there's unicorns, but I mean, unicorns are not real as far as I know. My daughter may disagree. But yeah, it's also I think it personified like a trend that we saw in the tech world coming a lot out of Silicon Valley. Which was sometimes wrongly described as sort of like blitzscaling and others. And what I'm talking about is sort of like really just throwing bucket loads of cash at challenges and trying to sort of like force an outcome, right? In terms of market share and sort of like ultimately market ownership, right?
Like we will, right?
Yeah. Well, there are many examples. I'm way too polite to mention many of them. But yeah. So what we actually, and again, this is more tongue in cheek than anything else. We coined the term in our firm of a rhino. Oh,
cool.
rhinoceros as opposed to unicorn, because number one, rhinos are real.
Okay.
Right, as far as I know.
Oh, I like that.
And rhinos are sort of like more resemble the entrepreneurs in Southeast Asia. They're closer to the ground. They are scrappy. They are thick-skinned. They survive on very little. And ultimately, we think, and this is maybe where it stops with the analogy to the real world, but we think our rhinos can actually go public on the strength of a PE multiple.
Wow.
As opposed to sort of like a revenue multiple, right? Yeah.
Okay. And in fact, in our V app, we have a animal classification is rhino. And earlier on, I think yesterday when I discussed one case study, that company actually is a rhino itself. Okay.
Rhino, and other people have coined the term camel, which also I think is nice because you sort of like can run very fast, but then also if there's sort of like times where you have to be slower and sustain on very little, they can do that as well.
Cool.
So they are much more apt description of describing the great companies other than sort of like a fairy tale creature.
Okay, you will hear it, right? Okay, type in rhino. Okay, type in rhino. Okay, now, and what do you think of actually the talk of IPO? Because there's rumors that, like, example, I say Grab, thinking of IPO this year. So what do you think of like company like Grab and Carousel? Like Singapore-based company, right?
Look, and I'm not gonna go and give specific sort of like views on companies that are not part of our portfolio, right? But by and large, one could remark that actually we haven't seen that many IPOs yet in Southeast Asia, other than C.
Yeah. How about Razer?
Okay, Razer's another one, right? But like looking at that first cohort of large tech companies in the region, not many of them have actually listed, right? And I'm thinking about the Grabs, the Gojeks, the Travelocas of this world, and others, right? And actually, that's a bit sad from our perspective, because if you actually look at all the data, once a company has reached at least, I mean, can be obviously much higher, but at least about 25 million of annualized gross profit, it actually can list on a public market exchange, a respectable public market exchange, based on all the data that we have seen, right? And obviously it needs to have a lot more things than that. It needs to have the right growth profile, the right team, the right governance structures, as we discussed, right?
You mentioned it's 25% of gross.
25 million.
25 million.
Yeah, of gross profit.
Of gross profit.
Yeah. And that usually is quite achievable for many tech companies, because many tech companies have very high gross margin, right? It could be 70, 80%, in especially software companies, right? From that perspective, there could actually be many more companies that are listed, in the region. And once you are listed, it gives you a lot of advantage. I mean, of course, you have to also disclose much more of your metrics, and there's much more sort of like also compliance and regulatory requirement, right? And that sort of like many entrepreneurs get a bit scared because of like also competitive dynamics and all of that, right? In terms of sharing the data. But you also then all of a sudden have access to much other sources of capital, right? As a public company, right? Equity raising, debt, etc. Right? And
C is a very good example.
C is a fantastic example, right? They raised billions of dollars there. And from that perspective, actually, it could lead to a competitive advantage for the companies that go public early.
Precisely.
And capture some of that sort of like, access to the capital markets.
Yeah. We just, I mean, from the investment circuit itself, we just hope that the example of C going IPO and did so well, it will inject a dose of confidence to those tech companies in Southeast Asia to take it as a role model to say, look, well, IPO listing it might not be bad after all, right?
Yeah. We actually said, we made a prediction last year where we said we think that there should be an opportunity to generate about $400 billion, $500 billion of tech market cap coming out of Southeast Asia. We had no idea that one company already provides 20% or 25% of that, right? But that gives you actually also a sense of potential, right? To the market. If just one company is able to do that, right?
Precisely.
What can the whole cohort of 20, 30 companies do collectively, right?
Totally agree with you. Totally agree with you. And my last question, right? I think a lot of our actually viewer and actually audience here want to find out is, what is your investment outlook for the year 2021? I mean, from a personal perspective, what do you think is the investment outlook for 2021?
Yeah. So, and as I mentioned earlier, it's actually a good time to be in tech, right? From that perspective, we've seen like adoption curve accelerate to an extent that you could argue 4 or 5 years or even more has happened within 1 year. And I'm not talking about the obvious e-commerce transaction and buying sort of like groceries online, but I'm also talking about sectors like health tech. Telehealth has really come through in a large way in the region in the past year.
Yeah.
And telehealth also then could give you access to all kinds of other medical services, whether it's sort of like pharmaceutical procurement, getting sort of like your medicine delivered to your doorstep, the whole sort of like specialist or tertiary care referrals, chronic disease management, also maybe in conjunction with devices, right? So a very, very interesting sector that we're also keeping a close eye on. Online education has really gone through great length in the past year. And we see this, one of our portfolio companies, they do SnapAsk, they do mobile one-to-one tutoring.
SnapAsk, right?
SnapAsk,
Yeah,
right?
SnapAsk.
Via the mobile phone.
Wait. I think just doing some background context. SnapAsk is actually founded in Hong Kong, right?
That's right.
Yeah. And the founder is actually used to be a tuition teacher?
Yes, right. That's right.
Using tech to actually help students able to answer the question even in the middle of the night.
That's
because as a student, if I want to study for my exam, right, my tuition teacher cannot be with me 24 hours, right? So he created a platform to actually ask a question, and the platform will actually direct this question to any so-called database of actually tutor and able to answer the question, okay, to help to solve the problem, right?
Yeah. That's right. And I mean, we all know how important, especially senior high school exams are, right? To predict like which college do you go to, determines livelihood and all the other goodnesses of life, right?
Yes.
So from that perspective, to have a fully end-to-end tech solution where students don't have to go into cram school and be exposed to maybe no social distancing and one-to-many situations where you still don't get it, right? Because you still
don't get it. You're right.
You're still not sort of like really encouraged to ask individual questions. Then to go after 8 p.m. A long day onto this app and say like, hey, please just help me understand that particular problem, whether it's math, physics, chemistry, Chinese literature. They do anything, right? So it's a great, but this is just one example of like how online education has really changed things with more to come. Another good example that we've looked at is like, even to the extent that you have, cars. They're being now more and more transacted online. And actually car ownership has also seen an increase because of the pandemic. Not many people trust public transport anymore. As well as ride sharing, right? So, and car ownership in the region is actually still relatively low. And that is usually, again, like correlated to affluence and it should go up over time. But seems like we've seen a bit of an acceleration here. So there are platforms like, for example, Carsome, company we backed that basically gets involved and provides like an end-to-end solution for used car owners to sell their car, but also for used car buyers to buy, via the platform in markets like Malaysia. So that's an interesting trend that we are also observing. And last but not least, I guess I wouldn't rule out even industries that had a bit of a mixed bag, right? In 2019. If you look, and I'm sure all of you followed the Airbnb IPO. That's a great example of a company that really bounced back.
Once the vaccination is widespread.
Right, and even before, right? What they just did is they shifted to more like domestic use cases or local use cases, right? As opposed to now traveling to Bali to stay in a villa, like I mean, like in America and Europe and elsewhere, when you're on Airbnb, you look for the local experience, right? That is maybe away from the masses and a bit more sort of like safe from that perspective. And very similar, we've seen, for example, another portfolio company of ours, Red Doors, which offers sort of like budget hospitality.
I saw along in Singapore. They have
That's right. They have a few here as well.
Oh, so that is a company that your company invested, right?
That's another company that we invested in. So they also. Again, like the use case here is mainly a domestic use case in markets like Indonesia for often like what we call essential business travel. So travel that can't be done by Zoom. So like think about the proverbial traveling salesman or the Ericsson, you know, engineer that has to maintain cell phone towers, right?
Yes,
he
correct.
has to go into the field.
Good point. Very
And
good
to
point.
have sort of like a safe experience, even at the low price point, is worth a lot, right? So and these are just a couple of examples, and forgive me for using the examples that I'm closest to, which are sort of like from our portfolio. But overall, we have earmarked around 20 subsectors of tech that we are observing very closely. Again, the main way to do this, if you want to, you know, try this at home, is look at all the companies that IPO'd in China, and see like, hey, do we have actually a company already in Southeast Asia that does something similar? Are they you know, already listed? Are they not listed? You know, etc. And track those companies, because more than anything, you will see a local winner emerge for those companies as well in Southeast Asia.
Guys, this is actually the golden nuggets. Oliver just share with you actually the hint, right? You want to know what's coming, right? Okay, just look at what company listed in China. Okay, eventually when the affluence market come back, right, in Southeast Asia, these are some of the company potentially will follow that trend itself. So I think, okay, very grateful. We wrap up from here. You know, thank you, Oliver, for coming to share his wisdom insight. Take note, his company name is called Asia Partners. Okay, I'm very sure, okay, very soon you will hear this name in Southeast Asia that is just like Sequoia, right? Able to support growth company, tech company, eventually emerge to be what they call Rhino, right? Not
Rhino.
unicorn, Rhino.
Not unicorns.
Not
Rhino.
unicorn, Rhino.
Yeah.
Thank you, ladies and gentlemen. Okay.
Thank you. Thanks for having
Oliver,
me.
thank you so much. Thank you,
Thank
Oliver.
you. Thanks, guys.
Find Oliver sharing is very awesome. Can you type in Oliver is sharing? Awesome. Can you just help me find Oliver sharing is awesome? Okay. Thanks, Oliver. Thank you so much. See you next week again. Thanks. Okay. Now Oliver need to actually leave because he have an appointment to actually rush to. Okay. Now, very good. Now why do I want to invite Oliver? By the way, Oliver is a good friend of mine, and we are involved in this network called the YPO, stand for Young President Organization. Organization itself. It's a very exclusive association network that gather about top 1% of the world leaders or top leaders together. Okay, it's by invitation. You cannot join. Say you want to join, you need to fulfill certain criteria. Okay, to make the so-called cut. Okay, there are very stringent criteria, and they will assess you. So I'm part of this network together with Oliver itself. That's why I want to actually highlight here is when you get yourself surrounded into a certain community, okay, your thinking process will also change, right? Because there's a saying, right? Your result, to know your result, right? The best way is to basically gather the 5 closest person or 6 closest person you actually network with on a day-to-day basis, okay, and divide by 5. That is average plus minus your result. Okay, so your level need to elevate, your thinking need to elevate. And in order to do that, right? Yeah, I know. Some of you say handsome. No, just now I saw the chat. Walao eh. Y'all be paiseh, no. I sitting beside him, you type, wow, oppa, so handsome, tall, everything, all the package in one. Then I sitting beside what? I feel like, wow, okay lah. Oliver is a growth stock lah. This one undervalued stock cannot. I see I told you already, right? Those mentored by me, Ken also handsome. Now then you say, Debbie, just now you never say. Just now during the panel discussion, you also never help your mentor say something, right? But never mind, forgive y'all. I know he's handsome, okay? But never mind. Okay, ongoing forward, right? Ongoing forward, I will start to invite more and more handsome people for panel discussion. Want or not? If you want, say yes, okay? Not only handsome, might also have the brain, okay? And must have a heart, correct or not? Give you insight, you see? So that's why I tell you, value investing summit is really super undervalued one. You can get access to, normally you cannot get access to people like Oliver, because you know why? Professionals of them are so private. These guys are the one behind the scene investing in actually companies before even they go IPO. And after that, they go IPO, they still hold long term, you know. So they went through the whole cycle, they see it. These guys are the one who are not making like what? $100,000, $200,000. You know, these guys are making billions. You know, guys, billions. You know, you are getting somebody who make billions to come in to share with you the insight, the thinking process, where to find, really, where to find, right? So I tell you, going forward, okay, all the Value Invest Summit, right? We just want to make sure the standard go higher and higher, lah. Okay, you will find it's awesome. Can you type in V Summit Rock or V Rock? Okay, at least let us know. By the way, good news, okay, our team is telling us the ticket is flying off like mad. Really, flying off like mad. Yeah, and by today, 2359 will cut off. Stop, okay, 99 US. I can assure you, next year Value Investing Summit 2022, right? Well, I tell you what, the standard will be next level one. Confirm next level one. Okay, now. Pretty speaker, Linda. Yes, confirm one. You mean Pauline not pretty, meh? Hello, y'all just hurt me. Now you want to hurt Paulina? Why y'all like that? Okay, now, and some of you give a feedback. Okay, Pauline is sexy. Okay, cool, understand. Okay, so you give a feedback, very interesting one, very cute. So we say, Ken, where is your case study? Hey, hello. You mean 2 days, the Value Investing Summit, you all don't know, you never see the case study. You're either down there stone, blank out or what? When I present that time, I'm the first speaker I present. What case study did I present? You tell me, type in right now. What case study did I present? Walao, where got, I know, never got case study. Or one more. See, good RX is one. Okay, some of you say 8VI. Now, do you notice, and many, laminate a lot. Later on, Pauline will do a mind map for you. Is it okay? Cool, but not done yet. I will present more case study to you for you. Now, the key thing here is, listen, okay, cannot extend V app, then have complimentary ticket V2022. You think go market buy chai? No, cannot. This one cannot. Okay, cannot. I must answer to shareholder. So that's why y'all know that. Okay, when y'all invest in 8VI, right? Okay, we take care of shareholder on also the interest. Now, the key thing here is you listen to Oliver and the part of the some of the sort of presenter like Steve, right? You listen, there's a common trend, you know. What's the common trend? First, they talk about the new trend coming is what? It's health tech, you know. Do you realize not? Health tech. Okay, number one, health tech, take note. Second, do you realize they talk about actually renewable energy? Okay. Third, do you realize they actually talk about education tech? Now, in fact, education tech is something very interesting. Okay, why? Because I feel education is one area, right? It's one of the slowest for disruption. Really, very slow. We one of the slowest, but it's time to disrupt already. How many agree? If you agree, type you agree. Yeah, there are many ways to actually to help someone to learn. Okay, even faster, smarter, easier one. Okay, so and actually able to customize the learning. Because traditional learning is broad-based. That means that you go to a classroom, one class, one teacher, 40 students, right? So one teacher need to actually cater to 40, but each student learn fast and slow, different, okay? That's why I tell you the education tech, okay, is the space to disrupt, and financial tech also. Take note, I no longer invest in bank for a very simple reason. Bank is going to be a value trap. Bank will be disrupted by people like Square, okay, people with, later I'll show you a few, I invested in them. Okay, they will be disrupted by then. So fintech, education tech, health tech, renewable energy, these are the trend going forward. So, by the way, just in case you don't know, 8VI is Fin EduTech. We integrate two together. Okay. Now, I'm doing my job. I'm the CEO of the company. Okay, I need to do this. Okay, now, without further ado, so now, I will show you now and one more case study. Is it okay? But I will use this case study to illustrate to you. Okay, if you have the right tool, right knowledge, and the right mentor, what will you gain? Okay, so now, everybody take note. This company, I'm going to show it to you, okay, is none other than in Singapore, quite famous. It's called what? PropSnacks, right? Okay, it's a real estate company. Now, take note first. I'm not asking you to buy this company. I'm using this company as example first. PropSnacks, okay? Look, so if you read, quite straightforward. Broking service. So they're broker, okay, network. So now let's take a look at actually their risk profile here. So if you see carefully, right, medium risk, okay, not much risk, not issue. Okay, so now, an animal type, okay, very impressive. They've been growing very well, even with the cooling measures. Okay, I have to salute the PropSnacks people. By the way, my house also recently I sold my HDB, I think last year, not this year, last year, right? It's handled by PropSnacks people. So green cheetah, okay, growing very well, very healthy, got good asset. Okay, now next is let's take a look at that ratio, key ratio. Look here. Now, as you can see, the gross profit margin, right, because they are actually a broking service, is high or low? It's low, right? 11%. Because why? They give most of the commission to who? Okay, you make a guess. They give the commission to who? Type into the chat right now. The broking business give the commission to the real estate agent. Correct? Last time we say agent law. Correct? Not? Okay, so that is the most of the actually the revenue must go to the agent. And the net profit margin, let's take a look. Also quite thin, right? 1.92% to actually about 4%. It's about there. Okay, so it actually show what? It's a highly competitive industry. Okay, highly competitive. Although in Singapore, there are a few big ones. PropNet is one of them. Another one is ERA, I believe. Okay, and there's a third one, I think Orange Tea. Yeah, there's three big ones, right? Okay, but you will know that the market is still very competitive. Agent can jump ship, right? So now, therefore, they need to actually constantly to think of ways to retain the agent and actually develop them. But return equity, very impressive. Double digit. Okay, do you see? 30%. Pretty impressive. This is the part. And excuse me. Take note. Do you remember actually what did Christopher Meyer say? He said, okay, ROIC, return on invested capital. Okay, so now in the VF, actually, there's also return on investable capital. Do you see that? Not? Okay, over the years, they managed to actually to keep it at about 25% and above. So if they can continue to do it, okay, then this one potentially multi-bagger also potentially, okay, potentially, okay. So but at least you know we captured that information, okay, and very soon, okay, we're gonna have one more very powerful information when I mentor you, okay. If you are my mentee, I will show you there's another metric even more powerful called ROIC, okay. Okay, return on incremental invested capital, but that one is another level, okay, never mind. So let's go back, let's go forward. Balance sheet, let's take a look at balance sheet. This company have about, okay, their cash have been growing up from 13 million after the IPO. They raised a bit of cash, okay, to about $95 million. So it's a good sign. So the cash position is growing. It's a good sign. Okay, now let's take a look at the debt. Got debt or not? Actually, I checked. We know that one. This one is actually all the capital lease commitment. They have no borrowing at all. Okay, so this company have no debt. Okay, type in no debt. Yeah. So how do I know? Later, if you want to know, I can show you lah. You go to, I just show you. You go to balance sheet here. You click. So you can see more details in the balance sheet here. You scroll down. Okay, under liability, you see short-term borrowing. Let me see. Okay, you see that my cursor. You see the dot. Okay, short-term borrowing is what? Is 0. Kosong, don't have. Then you scroll down again. Long-term debt, you see not? Also kosong, don't have. So basically, this company have no debt. Okay, so cool. So let's go back to actually the key ratio. So now, balance sheet healthy, cash flow. This is the part that I like a lot. Look, you look at actually the cash from operation here. Okay, cash from operation from 5.5 million. Okay, you have grown. Okay, to actually about what? About $38 million. That is about 7 times growth. Okay, yeah, not bad, respectable. CFO, yeah, cash flow from operation is solid. Okay, clap, give me a clap. Come on. Excuse me. Singapore company not bad already. Okay, can do like that. Not bad already. Now, can you invest not? I don't know. You look. Okay, look. Look at based on actually the PE, PS. I go by 3-year period. Okay, let's go to the log price. Follow the trend. Okay, it seems that now it's actually above valuation. Okay, above valuation. So as one look, it's above valuation. So if I blow it up, open up, it's above valuation. Okay, so now, so this is how you will actually see a company if you are in the so-called using a VF. But if you go through the mentored by us, so now I'll show you the difference between having a mentor or without having a mentor. So you take note. Now I'm taking PropNet as an example. So if you're very happy investing in this company, you really know why? No, because you know why? This company, let's take a look. Okay, at least over the year, right? 1 year period, right? From the lowest, if you bought it about 40 cents, now at least you make close to 100%. Is it good? You type in 100%. Good, right? Not bad. Not bad already lah. Not bad lah. Raise your hand, Not bad, 100%, Okay. So now, but I will show you the difference between. Okay, this is called a fast grower. But those who are mentored by us, I'll show you what we look at. We call hyper growth. Now, hyper growth means what? See, so now I'm going to open up the chat. Okay. Now, those who sign up for VIOS Plus and Infinite Wealth Mentee, tell me right now, is the chat all open? So tell me right now, after you watch the special video, what is one company I share with you inside the chat, and let the rest of the team know, right? Let the rest of people who did not sign up for VIOS Plus and did not sign up for any of my mentoring program, what is the company I share? What in my special session? Who I slapped you, hello. You sleeping? Thank you. Sorry. Yeah. Okay, it's correct. Look, EXPI. EXPI. Okay, that is the special session that just now I share. Let's take a look. Don't believe. Okay, I will show you the difference. Look, EXPI. Okay, this company. Look here. What do they do? Company info. Same thing. Real estate business, broking business itself. But the difference here is this guy have a technology platform. They have a technology platform, virtual technology platform. Okay, that means there are real estate people, right? They have no office to go to one, no office. Everything is virtual. They even create avatar, right? Okay, for you to actually use your avatar to go to the virtual office and sit down there and have meeting with your other colleague, also avatar. That means every morning you will actually have an office to report to, no? But you at your home, we log in with avatar. Understand or not? Okay, so now, yes, it's a property tax, prop tax. Okay, so now let's take a look. Look, this is a gorilla. Okay, it's a gorilla. Okay, now, but I'll show you something that you see here. What's the difference? Okay, you can see that the gross margin also is about 10% there, right? 9 plus 10%, same as Accessory Broadnet. But what's the difference here? You look at their growth rate. You look at the revenue growth. 4.2 million 10 years ago. Okay, every year nearly double. Okay, all the way until to 16 to 17 tripled. Then 17 to 18 tripled. 18 to 19 nearly double. 19 to actually the latest, close to doubling soon. WOW. WOW right now. See the difference? See the difference? Now, let's take a look. Let's look at the balance sheet. This company also know that one. They have about close to $100 million cash. Okay. And let's take a look at actually the cash flow generation. You tell me which one is more impressive. Cash from operation from the originally losing about $200,000 a year. Okay. Now it's about 104 or 105 million. Do you see the cash from operation is more than double? Sometimes it's actually 4 times, 5 times, 3 times, 2 times. That's one. Double up. Do you see that? Okay. Now, ladies and gentlemen, you know how I discovered this company? Because in April last year, when our company office locked down, right? Lockdown, okay? We cannot come to the office, right? So I tasked my HC, my human capital, to source for a solution. And they tell me this company. So when I saw it on V app, right? I tell you, when was that? Let's take a look. Okay? Take a look. Same period you buy Prop Snacks versus this company. That means the same period I buy Prop Snacks. You tell me how many percent return? You bought at $7 versus now it's $103. That is what? That is, my friend, more than 1,000% return. Can clap or not? Do you see the difference between a 100 and 1,000% return? Now, I'm saying, don't get me wrong, I'm saying you still make money, good money, okay, in so-called what I call, okay, the local company. You're basing your own knowledge. But the moment you are mentored by people with different level, different knowledge, okay, different skill set, your return is outsized. The key thing is outsized. Yeah. Okay. Now, but on top of that, I want to tell you, this is a 100 bagger. Look, in 5 years period. Okay. In 5 years ago, if you bought into this company, it's about $1. Now it's $100. 100 bagger. Please clap. So I want to demonstrate to you. in the special video you access just out in the afternoon, right? Those who actually sign up for VRS Plus and the current Infinite Wealth Mentee and those who have a VRS Plus barber subscription, okay? With me and Melvin, we talk about what? We talk about the mindset. We talk about the belief system. You know, the moment if someone, okay, show you something you never knew that existed, okay, I tell you, your world will change. Because if you don't have that, if you don't have that in your life, I tell you, you'll constantly live in the box, the reality box. And that box is called what? It's your home. The box is called your school. Because that is where you created, and your box is actually called what? Your workplace. Okay, and very often your workplace is what? It's a worker mindset. Okay, but the moment you actually mentor by people who are entrepreneur, people who are like Oliver, okay, myself, okay, people who operate on a different so-called structure that we know that it's possible, then your world will change. Make sense? If makes sense, type in make sense. Thank you so much. Because mentorship is very different one. Yeah, high frequency level is different. Now, if you still want to stay at a low frequency, it's okay. No problem one. Okay, as long as you're happy. But if you know something is not right, you want a different result and you want it fast, right? Then you better make sure you keep your friend, but change your peers. Okay, change your peers. Start to actually have mentors, okay, people like Oliver, okay, and look for really very qualified mentors to support you. Cool? Good. So now I'm going to actually close off this chat. But, okay, some of you say, well, Ken, this one overvalued, and this one run too fast already there. Then how? Never mind. I give you a third one. Third one. You want to see a third one? You want to see a third one? Say yes. Same industry. I give you a third one. Don't complain, Third one is this. Look, is this company called Open Door. Hey, hold on. Let me just double check. Open Door is not. It should be listed in US one. Hold on. Open Door. Yeah, NASDAQ, correct. Open Door Technology, this one. Okay, what do they do? Lower. Operate a digital platform for residential real estate in the United States, enable consumer to buy and sell a home online. Okay, they're going to disrupt this real estate industry in US in a very big way. So now, yes, Open Door, that's the company. So now, let's take a look at actually the key ratio. Newly listed this company. Okay. Let's take a look at actually their revenue growth. You see, okay. Your jaw don't drop, Your jaw don't drop, Don't drop first, 3-4 years ago, $700 million, grow to double it to 1.8 billion. After that, more than double it to 4.7 billion. Okay, and now at this moment, because still COVID, still actually able to maintain at 3.6 billion. WOW, come on. Okay, and the best part is this. Okay, I won't go through all the key ratio. Okay, look, if you now it's relatively just slightly overvalued. Okay, now by the way, Infinite Wealth Mentee, don't have to worry. This kind of company, plenty a lot. You will start to receive more and more. That can you see every bi-weekly, our Infinite Wealth Mentee itself, people are mentored by me personally and my group of elite, okay, trainers, okay. Their case study is different. Okay, what we think is different. Okay, the return we make also outside also different. Okay, now I just want to open the chat again. Okay, if you are Infinite Wealth Mentee, can you come in and comment? Is it true or not? Okay, open out the chat and let them see. Okay, if you are Infinite Wealth Mentee, can you come in and actually comment? Okay, if you are, is it true? Is it true? Okay, the case study you see is different. Okay, the things you learn is different. The mindset you also have different. Your health is different. Your perspective in life is different. Your relationship also different. Okay, cool, cool, right? Okay, yeah. Look, really. Thank you, Infinite Wealth Mentee. You know what? More case study for you, okay, in the coming mentoring itself. Okay, are you excited? I'm excited because 2021 is the one that if you have the right mentor, right knowledge, right tool, you will run very far, way ahead with other people. Unfair advantage. Okay, thank you. Let's close the chat. Okay, I'll hand back to actually Pauline. Because now Pauline need to present the mind map to you. Okay.
Thank you, Ken. Okay, so I am supposed to finish the mind map. Okay, after this, we are going to have our grand finale lucky draw, after which we will break everybody out into what's next, which is called execution. Okay, so this year, the V Summit, why is it so special? Because we're not just going to have like a lot of speakers to let you talk, and you absorb, and after that, you are all stuck inside, you know. So this time round, we are going to have the last part called execution. And this part, which is the execution, is really important because after today, what's next? How? You know, I have all the information. So this is where let's do up the information first. And after that, we'll have our grand finale lucky draw. And that's where we'll break everybody up into the different segment, which I will give you the instruction, and you have different facilitators to let you know what's upcoming next. Okay? So regarding the case studies, I can't remember why some of you say there are no case studies. I'm like, what? Okay, so this is where I need to let you recollect and what are the case studies that we have actually identified. Everything would be in the mind map. I've just added some parts, which I think in Oliver just now, that segment, which comes very good, which is talking about in terms of healthcare and digitalization. Apart from what this Clive is saying, we also have this part called the tally doc. And the four segments just now in one of the group, Mingli have done it very well in terms of consolidation. I won't be writing in right now, okay, because there's quite a big part which I need some time to consolidate in terms, because just now this thing is actually with Ken, right? But what I want to add on would be in terms of the case studies. I think these are important because the first thing you want to take back, even the mind map would be up either tonight or tomorrow. Okay, so what you want to take back definitely by tomorrow when the market opens for you to take action. You know, some of this you have to take a look, of course, in terms of your studies. I'm going to add on just now. Let's do a recap. What did the three other case studies that Ken mentioned? Everyone type it inside. The first one, what is it? Listed in Singapore Stock Exchange. Okay, yes, ESPI. Everybody is okay. So Singapore Stock Exchange, ES Prop next, all right, because that was the first one he mentioned. Then followed by EXPI, followed by the last one, Open Door, precisely. So these three are actually very good in terms of your comparison, like Singapore listed, US listed, as well as Australia listed. So you can see the different perspective, okay? So this mind map will be given to you a total of 13 case studies over the past 3 days. Some with more details than the rest. Some were actually by our analysts, our researchers, who gave you the slides, okay, where you can really identify in terms of the 3R concept, right business model in terms of the mode, okay, right management in terms of who is the management, even the comparison of the management, and also in terms of the valuation versus price, the numbers via the VAP. But of course, in terms of the numbers, let me tell you, the numbers will change. It will change, and it definitely has to change, right? So every 3 months, when the company gave out in terms of the financial results, it will change. So in terms of the case studies, you might want to take the slides, but you know what? The numbers is actually the part you can't follow. Why? Because the numbers will change. So that's the reason why you need to have the skill set to continue this journey, even though the mode, the business model is there. You need to make sure you know how to identify those numbers as time move along, because we also know this part. Things would change. Business models would change. Whether there's a COVID or no COVID situation, it will change. And one of the key things that we also look at in one of the speakers that says, one of the business model is the business model that would be affected by COVID, but will recover after the COVID. Which is that? Just not a very big company they mentioned, right? In Oliver, you all get it. Need to refresh your memory. Yes, it's this company, Airbnb. Yeah? Right. So, yes. Yeah, you're Li Ling, very good. You're paying attention. Okay, so this mind map, yes, we will be actually, I will add on a few more things, and then after that, I will be putting it up in the V Summit 2021 bubble. That's the good thing, right? Yeah. So for those who are coming for the 2022, you will know we have more stuff for you. Okay, what do we mean by the all access pass? It means you get to have the recordings. You see, this year, those who bought the V Summit 2021, you will have the unlimited recordings, okay? In these 2 days, you have gotten back at least 13 case studies listed in different countries like Singapore, in China, in US, in Australia, okay? So we have more than enough for us to take action over the next few days. So now it's 5:05. This is what we are going to do. We are talking about taking action. These 2 days, we do have quite a number of our speakers giving you the broad perspectives where the future trends are. In fact, one of the key things I want to actually put it down in the mind map under this Oliver is this. What is the key thing? China listed company coming over to the Southeast Asia markets. Take note of those companies, okay? So that is where you can see, apart from Futu, one of the brokers I'm actually looking at also listed in NASDAQ. This is what I'm saying. This is a company in China, but they list in NASDAQ. Okay, but yet they are coming into Southeast Asia to take over the market share. That company I'm looking at is, yes, Tiger Brokers. See, this is the thing. Yeah, Kit Lim, you are so smart. And Tiger Brokers, take a look. They are very, very aggressive, okay, in vested interest. Joanne, you're fast, man. Me too. Right, you should be very happy, right? Because just 1 year, like 100%. It's listed in the Nasdaq, okay? Yeah, in the US market, okay? So that's why you see a lot of things. If you are with us, you always get all these case studies, but of course, you need to know how to execute it, right? Now, this is where every one of you, your level of skills are different, okay? Your level of skills are different, yeah? We are going to split you into groups. You don't need to go anywhere. That's why this is the reason why we have painstakingly put everybody into the right groups so that we have this in mind. There's a reason. Somehow you might be thinking, Pauline, your resolution, has gone down. Now it's up, right? Okay, we managed to solve part of the broadband and things problem. What happens was we wanted to put everybody into different rooms such that first is we do have the moderators to make sure that every one of your questions, as much as we can, they are answered, because this is important. This is the thing that when you come over for face-to-face, we can't do for you. So I think in virtual, what is great is straight away when you ask the questions, you have a feedback loop. This is the thing that we can do. Okay, so we have deployed our moderators in different parts of the world. Actually, it's different parts of the world. They are now in different areas, because in our office we can only have an X number of people. If not, I think the safety officers will come and do a check on us. So we can do this even during the virtual world, that they are there here to support every one of you in your questions. This is one. Second thing is we can do a breakout sessions, whereby this breakout session, which is really important, at your different skill level, you have different facilitators and to tell you what to do next. Because it's like, that's why we mentioned customized education. In education, we talk about edutech, right? And in edutech, what is so special is not only just edutech, but making use of technology to customize your learning to make sure that you maximize it. And every one of you probably at this juncture are at different level. So this is the part to put inside the mind map. I'm just going to share with you in V College. Okay, what is in the different groups. So over here, then you will have an idea. We do have groups over here who are new to investing. Many of you are very new. You are brought in here maybe by yourself or probably under your friend's recommendation who are our graduates. So we have over here the new investors, okay? So the new investors, you may be asking, now, since I'm the new investors, what do I do next? Some of the things I understand, some of the things I don't, right? So that's where you can see that we do have the first step for you, the V Startup, remember? That's where the V Startup is for. We came up with a V Startup. It's a free seminar, okay? So in the free startup, you can sign up, and that's where you will know that we have the brokerages that is there for you. Okay, the brokerages. Of course, in order to take action, you need to have brokerages. Please, you don't go to the Singapore Stock Exchange and say, I want to buy iFast. Nobody will entertain you, okay? You don't call up Singapore Stock Exchange. I want to buy iFast, can buy or not? They will not entertain you. You have to go through a broker, okay? Yeah, this is the first one. Second, so now you have your brokerage set up, let's say. You need to know how to use it. So V Startup is for that purpose. Okay. So after that, you will say, but Pauline, you know, there are 42,000 stocks or 50,000 stocks all listed in, like, for example, Saxola, in this iFast. What to do, huh? What to buy, right? Yeah. So this is the part you need to have the various education, whereby, okay, if you need to know, like, let's say, how to make a decision. We talk about decision making, right? So that's why we have the first initial program, which is the V Bootcamp, okay, VIB International, for the various countries. And sometimes it's also in Malaysia known as the VIB Special Edition. This is why it's a 5 days beginners program where we teach you in terms of money management. We teach you how to find companies with the usage of a tool. The tool is important of the V app. Now, some of you, if you are savvy investor, feel free to just sign up for the V app. But V app is like a car. Now, if you drive a car, okay, even if I can give you a Ferrari that drive very fast, but you say, sorry, Pauline, I've got no license one. Please don't drive the Ferrari, okay? Yeah, if you want to drive, don't drive in front or behind me. That's the thing. Why? Because it is risky. Okay, so you need to have the right knowledge coupled with the right tool. So this is the part we talk about, this thing called knowledge. All right, and then this is the part which is called the tool. So this is where both come together, and the objective of the VIB International and the SE is actually to give you the framework of the 3R concept, how to identify stocks, how to screen out stocks with the criteria using the VIB. So that's the level. And when you do this, you would be able to identify 2 ways of making money. What are the 2 ways? One way is called the capital appreciation. The other way is called dividends. I believe many of you who are in the VIB International or the SE, you will know, these are the 2 things that we focus on. All right. But of course, are there faster ways in making money? The answer is yes. It's just like in a swimming class. You can choose to just have a breaststroke. Now, Pauline can swim but cannot swim very well. The only stroke I know is called breaststroke. Can I swim? The answer is yes. Can I swim fast? I will tell you no. Because I will actually lose out to those people who know how to swim freestyle like Ken, or maybe our Taiwan GM. He swim butterfly. He swim butterfly. You take a look at his body, you will know, yeah, he swim butterfly. Okay, he's another like Oliver Ripple in his body. So he actually fly, when he swim butterfly. But who will reach the end goal first? Of course, Will, because he has a better skill set. So this is where in V College, the higher level you go, the faster it is for you to reach your financial goal. And it all depends on what you want in your life, right? It's always a choice in life. So that is where, if you want to move up, you can always opt for the VIB Full Edition. Now, what is the difference between VIB Full Edition versus the V Bootcamp International? In V Bootcamp Full Edition, we focus in terms a lot on what we call the tech stocks. Okay, so why is it we focus a lot on tech stocks? Because first, you would know the future trend is all in technology field. This is something that we know: e-commerce, technology, fintech, health tech, edu tech, whatever tech. Okay, so now it's a mashup. What do I mean by a mashup is this? We talk about the brick and mortar business in education field, in a consumer, let's say F&B field. Even F&B can have F&B tech. Do you know what we mean by F&B tech? The one that leverage on technology for the F&B business is the one that's going to scale up. And technology offer this thing called scalability. Okay, so this is where in VIB Full Edition, we go more into that. That's why in Full Edition, there's a lot of unlimited stuff. Why is that so? Why is it that there's unlimited review, unlimited V coaching, and unlimited parts all in Full Edition? It's because of technology. We want to make sure all the changes, you are updated. Okay, so that's the reason why. And also the other thing, because since we talk about technology, dividends may not be something that we focus a lot in the Full Edition program. But how do we then get cash flow? There's this part called the VIOS. All right, so VIOS is at that level. Okay, so this is where you know how to progress. Now, MIP graduates, can you get access to the VIB FE? The answer is yes. It's the same thing. If you are MIP graduate, you say, hey, my time, there isn't anything on options, but I want to know more about options. no worries. Come back for the free review. You have review unlimited times. So make full use of it and come back. Okay. Now, after that, what is the next level? The next level, then we move on to, yes, what we call the VIOS Plus. Now, why is it that only when the VIB FE then to a VIOS Plus is because when it comes to option strategy, I will tell you one thing. Can you make money very fast? The answer is yes. Absolutely. Very, very fast. So fast that you cannot imagine. However, if you drive a Ferrari, I'm going to use that analogy. Drive fast, right? What does that mean? Your skill set must be good. If not, that's the reason why only certain people can drive sports car, right? And high level car, right? Why? Because you cannot be driving, let's say you are 18 years old, you go and buy a Ferrari, 200 kilometers per hour. You ask your son to drive in that speed. Would you want that? You say, no, son, don't do that. I know you have a license. Please maybe drive a Suzuki. This is the thing, okay? So that is where you can see over here that from the VIOS Plus, we move on to the next stage called the IW. All right, the infinite wealth. So this is the part that you can see over here in the roadmap of the learning, okay, in V College. And this is where we are going to put you to the next step of how you are going to do in terms of the execution. How do you start to take action? Okay, because in the next part, you will hear more, probably case studies. For those who think it's over, it's not over yet, because in your different groups, there will be different case studies, different things that you will be hearing, okay? So ladies and gentlemen, give us about 3 minutes, okay? So you will see the different speakers coming to you. For those who are new to investing, yes, you have me as your facilitator. For those who are the VIB International, as well as the full edition, you will have Chen Hong and Alex as your facilitator for what's next. And for the VIB full edition, IW, VIOS Plus, yes, you will have Ken as your facilitator. So see you in a while.